Yep.
At Chom.com. Welcome back to Worldwide Exchange. Let's get a check on some of this morning's top stories, including an apparent big buyout deal in retail. Our Silvana Hanau is here with that story and much more. Silvana, good morning.
Hey, Frank, good morning. Yeah, big one it is. The Wall Street Journal is reporting Dick's Sporting Goods is nearing a deal to buy Foot Locker for roughly $2.3 billion. Now, the Journal says an announcement could come as soon as today, and the deal represents a nearly 90% premium to Foot Locker's closing price yesterday. And right now, we are seeing shares Dick's Sporting Goods down over 5%, Foot Locker up over 70% in the pre-market on news of this deal. All right, we move over to healthcare. Shares of United Health under pressure again. Shares down about almost 5% in the pre-market. When the Wall Street Journal also reporting that the Department of Justice is carrying out a criminal investigation into the insurance giant for possible Medicare fraud. In a statement to CNBC, United Health said it had not been notified of any criminal investigation by the DOJ, and they called the Journal story, quote, deeply irresponsible. And the Financial Times is reporting that U.S. regulators are preparing to announce massive cuts to big banks' capital requirements over the next decade in a move that could free up funds for more lending or other activities. Now, no comment from the Treasury to the Financial Times or Reuters on that report, Frank, and we're seeing these financial stocks lower in the pre-market right now.
Yeah, pulling back quite a bit. Looking at Citi pulling back about 0.75% in the red across the board when looking at those money center banks. Silvana Hanau, thank you very much. We'll see you in just a bit. All right, still on deck here at Worldwide Exchange, our Pippa Stevens with a closer look at one critical mineral that's being mined right here in the U.S.
Copper is key for everything from iPhones to data centers to electric vehicles. And as demand grows, we have an inside look at how one mine in Utah is ramping up. The details coming up next.
Educator.
Welcome back to Worldwide Exchange. The Trump administration has made it a priority to increase domestic production of critical minerals such as copper. Interior Secretary Doug Burgum has even repurposed the president's line about oil by calling on companies to mine, baby, mine. Our Pippa Stevens is at a copper mine in Utah, looking at both the challenges and the opportunities that are facing the industry.
Good morning, Frank. We're about 40 minutes outside downtown Salt Lake City, where Rio Tinto's Kennecott copper mine has been operating for more than a century.
This mine alone supplies about 20% of the U.S.'s refined copper, and it's also home to one of just 2 domestic smelters. That's important because it doesn't matter how much copper you have. If you can't turn it into a usable end product, it's useless.
It's hard to get a sense of the sheer scale here. This is the world's largest open pit mine, 14,000 feet across and more than 4,000 feet deep. Every day here, workers blast 500,000 tons of ore. That's equivalent to 10,000 humpback whales.
The ore then goes to a concentrator where the valuable minerals are separated out, followed by a smelter and finally a refinery, traveling a total of 26 miles via conveyor belts and pipes. Copper is key to so many products: electronics, data centers, defense, the energy transition, and as demand grows, some are forecasting there simply won't be enough. It's a critical moment for the industry because while the U.S. has abundant copper reserves, getting it out of the ground is a challenge.
Right now we're importing 48% of our copper. So if you think of the numbers right now, conservatively, we're going to double that demand over the next 5-6 years. Once that happens, we're going to be short. Now we have copper here in the nation. We just got to figure out how can we unlock it.
Copper is Kennecott's main product, but tellurium, another critical mineral, is also mined here, as well as gold and silver. For now, this is Rio's largest project in the U.S., but plans are underway for the company's Resolution copper mine in Arizona. Rio's been the operator for more than 2 decades, spending more than $2 billion. But so far, the project remains stuck in permitting.
All right, Pippa Stevens, live in Utah outside of a mine. Great reporting by her. Let's talk more about the companies that are trying to get these critical minerals out of the ground and refine them into usable products. Joining me now, Timna Tanners, analyst at Wolf Research. Timna, good morning. Thanks for joining us.
Hey, good morning.
So, Timna, I want to ask you a question about copper, since Pippa was just doing a great job talking about copper production here in the U.S. I'm looking at the charts right here. Copper's down about 1% week to date, while we see the equity markets kind of boom on the idea that we're going to continue to see economic strength with a temporary tariff reduction between the U.S. and China. Why this reaction from copper?
Well, copper is U.S. is less than 10% of total copper demand, so copper is still really a story about China. China has so much of the world's demand and also a vast majority of the smelters. So I think it's really more a function of how the market is feeling about copper. Copper year to date is up, and the biggest story this year has not been the LME price of copper, but the distinction between the U.S. CME price and the LME price. So actually, if you look at the CME price, you would see a bigger spike.
All right, very interesting. I'm looking at the LME price as well, so I've seen a bit of a disparity that you're mentioning. One of the big stories when we're talking about metals are the tariffs from the president on steel and aluminum. Kind of a similar question for you. I'm looking at aluminum prices since the tariffs were announced, down more than 5%. Steel prices only up about 2%. Seems like kind of muted moves. Now, in all fairness, the president signaled the tariffs ahead of time, so maybe there was some price action before they were officially announced. But why are we seeing such muted moves and downside moves when it comes to steel and aluminum?
Because you're an idiot.
If you look at the price for steel and aluminum from before when the tariffs were telegraphed, you'd see quite a different story. The bigger phenomenon, so aluminum, the price that you're looking at in aluminum is the global aluminum market. And again, the U.S. aluminum amount is less than 10%. It comprises of the total world. So what you really want to look at is a Midwest premium, which is basically the premium that you have to pay to bring product to the U.S. The U.S. is about similar to copper, about short 50% of its aluminum needs. So it also needs that higher premium. And that's actually spiked. It hasn't gone up as much as you would expect, just as the CME hasn't, because there was warehousing in advance of the announcement. So once that warehouse metal gets depleted, one would expect the price, because of the tariff, could continue to rise. Similarly, in the price of steel, it has actually skyrocketed about 50% from peak to trough from the beginning of the year, and it's now started to roll over. So it's now digesting, I think, the impact of the tariffs and pulling back a bit.
Well, Lieutenant, we love when people straighten us out and tell us which tickers to look at and what things to look at. So we're going to take your advice going forward. I want to get to the stocks in this space and your top picks. One of them is actually a company we had on here, Century Aluminum. Just talk us through very quickly your top picks in the space.
Well, Century Aluminum has always been a high-cost producer and a small-cap name that isn't that well followed. But what's fascinating about them is that historically they've had a kind of challenged balance sheet. They've had, spotty track record. They were subject to the price of alumina spiking when Russia invaded Ukraine. It hit them hard, and power prices would spike. But in the last couple quarters, they've really gotten all that under control. So that's one part of the thesis we like. They are the biggest name exposed to U.S. tariffs of our coverage, with about 50% of their production in the U.S. So they are big beneficiaries of that Midwest premium spike that I was talking about. And then finally, of the three major catalysts that we have for Century, they have a location that could be actually spun off to be sold to a data center. So it's a lot of positives for a name that's kind of small and not that well looked at.
Tim the Tanner, it's great to have you on. Thank you very much. As we had to break, a quick check on CoinShares, the stock up nearly 28% so far this week following news Coinbase. The stock up about 20% this week on following news. The crypto exchange will join the S&P 500 on Monday. You're seeing the big jump right there. The stock is also one of the most searched on CNBC.com in the last 24 hours. The stock actually hit a 52-week low on April the 7th. It's up nearly 60% since then. A very important note, to go back to 2021, it's well off of its highs, traded at about $3.30 a share back then. We'll be right back after this break.
Garden centers.
And I think the AI transition is just so important that they're going to continue to spin until they just absolutely have to stop. And I think that as of right now, they're still comfortable. As it relates to pull forwards, look, I'm sure there was an order here or there from a customer who decided to pull something forward because they were concerned about tariffs. But we looked at a ton of data points to see if we saw any signs of broad-based pull-ahead business, and we did not.
So that was Cisco CEO Chuck Robbins on the company's earnings call on growing momentum around its AI offerings and customer adoptions of, despite all the threat of tariff. The stock, you can see right here, higher at the open, up just about 4% right now. Welcome back to Worldwide Exchange. I'm Frank Holland. Coming up this half an hour, we're going to have much more on those results and what they could signal about the broader tech landscape. But first, we're going to begin with the U.S. markets, get you ready for the trading day ahead. The NASDAQ on a 6-day win streak as the president continues his trip to the Middle East. And tech, it continues to rally. Taking a look at the futures this morning, you can see, though, we're in the red across the board right now. The Dow looks like it would open up about 175 points lower. The S&P and the NASDAQ down more than 0.5% right now in the pre-market. UNH, I want to talk about the Dow for a second. UNH accounting for about 105 negative Dow points at this level. You can see the stock pulling back more than 6%. We've talked about some of the issues with the stock throughout the week. CEO stepped down. They pulled their guidance. Also, a report from the Wall Street Journal, they were being investigated. UNH has disputed that report, and they actually called the reporting irresponsible. All right, moving on. We're going to take a look at the NASDAQ 100 laggards in the pre-market. Take a look at those names. AppLovin pulling back about 3.75%. Tesla, huge run up this month, pulling back this morning, pulling back almost 3%, followed by Trade Desk, NXP, and Palantir, one of the best performing stocks in the S&P year to date, pulling back more than 2%. Then we have the NASDAQ 100 gainers in the pre-market as well. Right here at the top of the list, you got Cisco after earnings. We're going to dig into Cisco in just a second. Shares up over 4%, followed by Biogen, AstraZeneca, Pepsi, and Starbucks, running out your best performers in the pre-market. All right, the markets, they continue to react to that temporary tariff pause between the U.S. and China. Tech, the top performing sector this week, the IYW, that tracks the sector. Chips are also surging this week, up about 9.5%. The IYW up nearly 8%. Week to date, taking a look at the SMH and some of the best performers when it comes to that, when it comes to the tech landscape, taking a look at those. Well, that's the performance right there. There we go. We got them right here. So right there at the top of the list, you got Supermicro. Those shares up over 36% week to date. First Solar in the tech sector, shares up 35% week to date. Maybe you don't think of First Solar as a tech name. NVIDIA kind of crosses over both in the SMH and the tech sector. See, those shares are up over 13% to date, week to date. Monolithic Power in the chip sector, one of the best performers, up over 15% week to date. AMD benefiting from one of those deals in Saudi Arabia as well. Shares up over 12% week to date. Also, we're about to enter retail earnings season. A look at some of the big names reporting. Walmart is coming up today before the bell. Now look at all these names. You got Home Depot, Lowe's, Target, Macy's, Best Buy, Costco, and The Gap. So we're going to get a good read on the consumer coming up over the next 2 weeks. Checking the year-to-date performance of some of those retailers that are reporting in the next few days. You see Walmart shares are up about 7.5% week to date. Home Depot pulling back. Similar story for Lowe's. Target down more than 29% year to date. Similar story for Macy's, pulling back just about 29% year to date. We have Rupesh Parikh from Oppenheimer. He's going to join us to look ahead to Walmart and talk the broader retail sector. The Sohn Investment Conference was held in New York City yesterday. CNBC is a sponsor of this event that raises money for pediatric cancer. Take a look. Here's some of the best ideas from the conference. Full write-up on CNBC.com and CNBC Pro. C Limited, somebody called this the Amazon of Southeast Asia. Those shares pulling back more than 0.5%. A lot of talk about Teva Pharma. It was a really passionate argument about how this is a play on biosimilars and generics going forward. Also, Global Payments, Blue Owl, National Vision, some of the other best ideas from the Sohn Conference. Also, quick check of the bond market. We're going to hear from Jay Powell speaking in the 8 a.m. hour coming up. But take a look at these yields. The 2-year above 4%, the 10-year above 4.5%. Down here, the long bond inching very close to 5%. We're going to talk to some market guests about what this means for the equity market, or bonds starting to become competition. All right, that is your setup. Now to one of your big money movers. We're talking Cisco. As we told you before, shares are higher after the company's third quarter profit and revenue beat forecast on solid demand for its networking and equipment. It's also raising its sales guidance, although it is factoring in the estimated impact of tariffs. Cisco says AI infrastructure orders from web-scale customers top $600 million. Let's talk more about the quarter now with Melissa Otto, head of research at S&P Global Visible Alpha. Melissa, good morning. It's good to see you.
Hi, good morning.
All right, so we just heard from Chuck Robbins a bit ago. He says they didn't really see any pull ahead of orders. Do you believe that? I mean, the tariffs were certainly something a lot of companies were trying to work around. Cisco sources quite a bit from China. Do you believe that part of this quarter and the really strong performance was a pull ahead?
I mean, that's what they said on the call. I mean, they were pretty clear about it that, there were just maybe a few one-offs, but ultimately there was not a pull forward. And I think the positive spin on that is that it does demonstrate that their business model and the way that their business is reacting to the tariff environment is quite resilient.
One other thing to think about here is, and by the way, I want to give credit to Jim Cramer. He pointed this out about NVIDIA when we're talking about NVIDIA and the potential to make deals in the Middle East, that maybe there's sales for Cisco that aren't really priced into the stock as the president continues this tour and potentially opens up more markets, whether it be the Middle East or other countries. Do you believe that those opportunities are priced into this stock, or is there considerable more upside when it comes to revenue, at least, from those areas?
One of the interesting areas that I will point to is the AI, the enterprise AI refresh and the expansion of that. And I think, we haven't really seen a fundamental uptick either in full-on AI enterprise or in a refresh cycle. So they did signal that may be coming in, and especially with their outlook, the fact that their guidance was quite a bit above visible alpha consensus. So I feel like that may be an opportunity that is not fully priced into the stock.
Okay. Just want to get your general take when we're talking about what's now been kind of called the AI trade. We also had CoreWeave report its earnings yesterday. Just in general, what's your sense? Is this market, when we're specifically talking about big tech and the AI trade, is that toppy, as Steve Cohen kind of said? Obviously, those stocks really dominate the concentration in the different indexes.
I mean, based on visible alpha data, we have certainly seen the valuations for consensus moving around quite a bit. So it demonstrates that the market is really trying to grapple with how to price this market and how to price these stocks and what exactly they should be baking into their assumptions. I mean, we've seen stocks whipping around anywhere from 20 to 30 times in the span of just a couple of weeks.
All right. Melissa Otto, we'll leave the conversation there. Have a great day. Thank you very much for joining us.
Thank you. Great to see you, Frank.
And coming up on Squawk on the Street, we're going to have much more on Cisco's results when CEO Chuck Robbins joins exclusively. That's coming up at 9 a.m. Eastern on CNBC and on CNBC Plus. All right, coming up here on Worldwide Exchange, Cost Crunch, the new warning from CoreWeave about meeting surging demand. You can see those shares. They are pulling back about 7% in the pre-market. Important to note, though, since the IPO, shares are up almost 57%. Stay with us. Much more coming up after the break. welcome back to Worldwide Exchange. Let's get a check on a few stories that we are following this morning. New details on a story that we brought you yesterday. Reuters is reporting the U.S. and the UAE, they've reached a preliminary agreement to allow the Arab nation to import 500,000 NVIDIA AI chips per year starting this year, with the deal lasting at least through 2027. Looking at NVIDIA shares, they're pulling back about 2% right now. Watching shares of eToro after surging 29% in their trading debut yesterday, raising almost $310 million. The Israel-based stock trading app now valued at nearly $5.5 billion. eToro's CEO is going to have much more when he joins Squawk Box in a first on CNBC interview at 7:10 a.m. on CNBC. You can also watch this on CNBC Plus. Also watching shares of CoreWeave under some pressure after the AI infrastructure company posted mixed results in its first earnings report since going public. Earnings came up short. Revenue, though, that surged more than 400%. The company's CEO says increased spending to meet demand will squeeze earnings in the near term. He'll have much more on that in another first on CNBC interview coming up at 9:30 a.m. on CNBC and on CNBC Plus. Two big headlines from yesterday's Stone conference. Point72 founder Stephen Cohen, he says he sees the possibility that stocks could retest their April lows despite their historic comeback, adding the market feels, quote, toppy right now. Cohen also sees a 45% chance of a recession. Also, Greenlight Capital's David Einhorn says despite its strong start, he still sees more upside for gold in the year ahead.
Gold is about the confidence in the fiscal policy and the monetary policy. And since we bought gold in 2008 or so, it's been very clear to me that the U.S. fiscal and monetary policies are both too aggressive and create a risk.
All right, coming up here on Worldwide Exchange, the world's largest retailer ready to report its earnings this morning. The signals that Walmart's results could offer on the consumer and on the impact of tariffs. We're going to be right back after this. Stay with us. Welcome back to Worldwide Exchange. We're watching shares of Dick's and Foot Locker. The Wall Street Journal reporting that Dick's is nearing a deal to buy the fellow retailer for about $2.3 billion. The Journal says the two companies, they've discussed a deal at $24 a share for Foot Locker, and that announcement could come as soon as today. Take a look at the stock moves right now. You're seeing Foot Locker shares moving to the upside quite a bit, up over 68%. Also watching shares of Boot Barn this morning, rallying on the back of earnings and a Q1 forecast that was above estimates. Q4 results, however, those missed expectations. The company saying it is confident it can handle global trade tensions, but did warn of higher costs, price increases, and potentially weaker demand in the months ahead. Still, Boot Barn shares are up over 15% right now. We get results from the world's biggest retailer before the bell this morning. Walmart shares are down more than 6% since its previous results. The numbers, they could offer a look at the impact of early shifts in U.S. trade policy and the effects that could have had on American consumers. Looking at Walmart shares ahead of earnings, they're up just about 0.5% right now. For much more, let's bring in Rupesh Parikh, Managing Director and Senior Analyst at Oppenheimer. He has an outperform rating and $110 price target on the stock. Rupesh, good morning. Thank you for joining us.
Thank you for having me.
All right, so your price target is about a 15% upside for this stock. I want to ask, what pushes this stock higher? We've already seen higher income people go to Walmart. We've seen a lot of people go to its grocery business. Supposedly the stock is somewhat kind of protected from tariffs. What's the catalyst for that big upside move?
Yeah, so I think near term, there isn't that clear catalyst, but as I look over the next 12 to 18 months, I think as they continue to execute on their alternative revenue streams and drive that 4% type constant currency growth, I think, shares go up with, as earnings go up over time. But yeah, near term, yeah, it's hard to say what that catalyst is. Shares have moved up pretty meaningfully off the lows post the analyst set.
We had an inflation report. It was a little softer than expected. When it comes to inflation, I guess softening, getting closer to that 2% target, does that directly benefit Walmart? Does that actually lead people to go to other retailers? Because as inflation was spiking, again, as I mentioned, we heard a lot of people saying they were, I guess, trading down to Walmart to try to find deals.
Yes, I think if you have inflation at low, let's say 1 to 2%, I think that's attractive for Walmart. So, if you see less inflation in food, you can see consumers navigate to more discretionary categories, and Walmart makes more money in apparel, home, and some of those more discretionary areas. So it could end up actually being a net positive. Now, you don't want deflation, but yeah, if you're in that, let's call it 0, 1, 2 to 2% type range, I think that's okay for Walmart.
Let's talk about the broader retail sector. We were just talking about it. We're going to show some of the big retail earnings coming up over the next 2 weeks. Just to be clear for the audience, Walmart, more than half of their sales come from groceries, so they're a lot different than these other retailers. But when we're talking Lowe's and Home Depot that seem very closely tied to mortgage rates, Target that has a larger percentage of its revenue come from discretionary spend, Best Buy, obviously electronics. What are you expecting to see from all these names?
Yeah, so I think it is very company specific. So this earnings season, names like Sprouts, Natural Grocers, who cater more to the natural organic category, their businesses have been holding up quite well. You've seen a real shift to value. So names like Costco, I think BJ's is going to be doing really well. So if you have the right value proposition and you're selling products that are in demand right now, I think those retailers will do well. So overall, from our perspective, consumer spending remains very healthy, but consumers are being choiceful. So I think if in the right categories and have the right value proposition, those are the retailers that are going to continue to do quite well.
All right, Rupesh, great to see you as always. Thank you very much.
Thank you for having me.
All right, as we had to break, we are watching shares of Apple. President Trump making some comments about the company earlier this morning. Also adding, he spoke with Tim Cook about one country that's critical on Apple's iPhone supply chain. Take a look at Apple shares. They're pulling back just about 1%. We're back right after this.
I said to him, Tim, you're my friend. I've treated you very good. You're coming in with $500 billion, but now I hear you're building all over India. I don't want you building in India. You can build in India if you want to take care of India, because India is one of the highest tariff nations in the world. It's very hard to sell into India. And they've offered us a deal where basically they're willing to literally charge us no tariff.
now.
And we'll break the worldwide exchange, taking a look at U.S. stock futures in the red across the board. The Dow down about 1/3% or roughly 140 points. The S&P down just about 0.5%. The Nasdaq, the hardest on a percentage basis, down about 0.75%. For much more, let's bring in Shana Sissel, founder and CEO of Bannery & Capital Management with $50 billion in assets under advisement. Good morning. Thank you for joining us.
Good morning.
Well, if you don't mind, let's start with your word of the day.
Yeah, so my word of the day is resilient. I'm continue to be impressed with how quickly this market has bounced back. Fastest recovery ever, 6 weeks on the S&P 500. The retail investor continues to be resilient in wanting to buy the dip. We have not seen capitulate. You know what? It's early in the morning.
Capitulation. I'm going to help you out.
Thank you. Capitulation of the retail investor, and that has been a good thing. Again, likely the key driver to the market's recovery.
So, by the way, I smiled when I was asking about your word of the day because I knew what it was, and we're already starting to hear people kind of question this rally. Steve Cohen was one of them from 0.72. He said he saw the potential for a pullback of about 10 to 15%. The market's retesting the April lows. Do you see that potential? And if so, how would that play out in your mind?
Well, do I see the potential? I mean, there's always the potential for these things. And as we continue to have changes in tariff policy, and the fact of the matter is that the market is a little overbought. But that said, since 2020, we've seen that when the market does have these downturns, the recoveries have been fast and furious. So I actually see any potential downside in the future in the market to be a buying opportunity. Again, as I noted, the market's been quite resilient. The retail investor has been happy to step in, and it's actually the institutional investor that's been a little hesitant. It's probably just based on history. We have an entire generation of investors who grew up with a market that went straight up. There was not a lot of times where it pulled back. And so they've become quite accustomed to the market bouncing back and willing to take that risk, whereas I think the institutional investor has a little longer memory and is not used to the quick turnarounds that we've been seeing.
All right, very quickly, I want to talk to you about the bond market. We've been talking about it earlier. The 2-year yield above 4%. We're going to hear from Jay Powell later today. If he's neutral or hawkish, has the potential to increase those short-term yields even more. Do you think that creates competition for the equity market?
I don't think it creates competition. I think what we see here is the market making adjustments for inflation, potential for inflation that's being caused by tariff policy. There's been debate whether or not tariffs would be inflationary, and I think it's probably too soon to tell, but the bond markets are telling us that they think that inflation short-term from tariff policy is going to be higher. We haven't seen it in the numbers, but I don't know that it necessarily causes competition for us.
Shana, almost out of time. I want to get to your pick. It's Leidos. Very quickly, why is this a good buy today?
Well, we talk a lot about technology, but defense stocks have also had a positive momentum this year. And Leidos is undervalued at 14 times. They've continued to crush earnings. They have a very interesting suite of services, but I think their civilian and commercial services and cybersecurity and IT services is an area of growth, and that's why I really like the stock.
We're going to leave the conversation there. That stock up about 6% year to date. Great to see you. Have a great day. Thank you again.
Thank you.
Quick look at futures before we let you go. Futures in the red across the board right now. The Dow looks like it would open about 140 points lower. The S&P down about 0.5%. The Nasdaq down about 0.75%. Also, a quick look at UNH. One of the biggest drags on the Dow in the pre-market. Those shares pulling back more than 6%. That does it for us on Worldwide Exchange. Squawk Box starts right now.
Good morning. Multiple reads on the economy on the way in the next few hours. Plus, we got Walmart's first quarter earnings are due out. We're going to get producer prices and April retail sales. President Trump says India is offering the U.S. a trade deal without tariffs. Speaking in Qatar, he also threw some shade at Apple CEO Tim Cook. We'll bring you the latest. And the latest on UNH, United Healthcare reportedly facing a criminal investigation into possible Medicare fraud. The stock is down again this morning. That's why the Dow is down. I can't give you why the Nasdaq's down, but that's why the Dow is down solely because of United Healthcare after that 18% drop on Tuesday. Today, though, is Thursday, I'm told, May 15th, 2025, and Squawk Box begins right now. I'm doing this. Good morning and welcome to Squawk Box here on CNBC, live from the NASDAQ market site in Times Square. Here's why. I'm Kelly Evans. No, I'm Joe Kernan, but this is Kelly Evans.
Good morning.
Resplendent in blue. Becky usually does this part. I do the top part.
You have to carry more of the load.
I do. Got to carry more of the load. Andrew's going to join us a little bit later. He's in a different time zone, as he is often, but he'll be here at 7. U.S. equity futures, just alluding to what you're seeing in the Dow. Pre-market, you got United Healthcare 288 bid. 288 bid. It closed at 308.
Wow.
So that's another 20 points, basically. So 20 times whatever the divisor is equals 146, basically. The NASDAQ's down, though, and the S&P is down. The high on United Healthcare, what did I say, 289? 630. 630 is the high. So the market cap at this point going to be somewhere around 270. So it was more than $500 billion, and $250 billion is what we're talking about in losses, paper losses at this point, I guess, unless you sold for shareholders. Treasury yields continue to move higher. Weird, because it's not really based on hot numbers for the CPI. See what happens today. Crude oil prices are falling. Speaking in Qatar, President Trump said the U.S. was getting close to securing a nuclear deal with Iran. We've got a lot planned, Kelly, on the... How can we give viewers all the planning that we've got?
There's a lot.
Can we do it? Maybe this will help. The Squawk Planner.
Let's read it. We're going to get first quarter earnings from Walmart. That's on the planner.
That's plan for that.
Those are expected around 7 a.m. Eastern time. Lots of economic data at 8:30. Like Joe said, the April producer prices and retail sales. We are also going to hear from the Fed chair, 8:40 Eastern. Jerome Powell will be speaking at a conference in Washington. Certainly bring you any headlines from that event as we get them.
Too late, pal, they call him. That's Trump's latest. He's good at that. He's pretty good at that.
He's got a nickname for everybody.
He does. He's pretty good at that.
Yeah, I wonder what your nickname would be if he came up.
I don't. You know what? That's why I try to fly down here. Where President Trump says India offered the U.S. a trade deal that proposes no tariffs. I don't think it would be anything about my hair, because he's got,
No,
he's got a lot.
He would probably not be able to stop complimenting your hair.
Well, and we both have similar issues, I think.
What with your hair?
I think we both are trying to keep it on top as long as we possibly can.
You and him? You guys have the flow.
I know. He got mad when his physician outed him on this thing called Propecia. And so we do have some things in common. TMI. Look up the side effects, and you'll see how important hair is to me. President Trump says India offered the U.S. a trade deal that proposes no tariffs. The president making those comments in a meeting with executives in Qatar on the second leg of his Middle East trip. Trump hit India with a 26% tariff last month, but then, press pause like he did for tariffs on other countries. Trump also mentioned Apple at the event in Qatar and called out its CEO Tim Cook. Apple's been working to diversify its supply chain away from China.
I had a little problem with Tim Cook yesterday. I said to him, Tim, you're my friend. I treated you very good. You're coming in with $500 billion, but now I hear you're building all over India. I don't want you building in India. You can build in India if you want to take care of India.
And I also saw him say something about, Jensen's here, the greatest CEO around. He said, I don't know where Tim Cook is. Yeah, he said that.
Slightly different business model, though.
It is, but there were a lot of
jabs,
a lot of ring kissing across the board over in Saudi Arabia. A lot of CEOs. Larry Fink is there kissing.
He's everywhere.
I guess.
But it's amazing.
Not gonna be Treasury Secretary in a Republican.
He might only have to wait a couple of years.
What do you mean? By 2028?
I don't know. But I do know the amount of business deals announced in Saudi, it was like, who compared it? They said it's like big oil to big tech. The gusher now flowing to a lot of U.S. companies kind of in that direction.
Andrew's not here, but I feel like I have to say, yeah, but none of it's really real.
So that's, I wonder about that, right? Like, is it, but then you look at the share prices this week. I mean, all
some of it's real. Some of it's real. Some of it's already been announced. Some of it won't. Like, it's not going to be $1 trillion. So the Saudis already.
No, the amount of U.S. investment, I mean, who knows, right? But
the Saudis.
But for the individual companies striking deals, I go, okay, well, I guess if the Saudis want to spend that much of their cash at a time when oil's $30 lower than they need to balance the budget, okay, fine. Like, we'll benefit.
But I thought it was quaint because they have a budget deficit. $70 billion. That's quaint.
They're starting to have government debt.
Right. That's our deficit. What time is it?
Yeah.
By 11, we'll be at $75 billion.
Yeah. Goes back to what you were saying too about rates and how much of the increase is because of that.
Right.
It seems like it is, but then maybe it's just the fact that recession odds are now lower. So
it doesn't help when rates go up because that just makes our deficit more expensive.
That's what it keeps. Whenever it's like, oh well, rates have been here before in the late '90s. Okay, well we had
no, they can't
surplus.
go back. They can't go back there now.
Now that they're where
not
they
at
are.
$37 trillion.
Yeah, it's another missile we can't buy or whatever. Dick's Sporting Goods. Oh, it's official. Okay, they are buying Foot Locker for $24 a share. Wow.
Big premium.
Wow, shares of Dick's Sporting Goods are down 13% on this announcement this morning, and Foot Locker is soaring 74%. Dick says the deal will be accretive in the first full year after it closes, which the company estimates will be in the third or fourth quarter. They plan to operate Foot Locker as a standalone business and maintain the Foot Locker brands. They also expect some cost synergies, $100 to $125 million. Dick's is scheduled to report full first quarter results later this month. Courtney Reagan will have much more on this deal later this hour. It's going to be a very busy morning for her. This had been rumored for the last couple of days or so, but as you can see by the market reaction, it wasn't taken completely seriously yet. And again, Dick's shares are down 13% on this. Look, we all know Foot Locker was not exact. I mean, they've had good times, they've had bad times. It's highly cyclical, it's volatile, they have face headwinds. For Dick's to double down like this on the mall footprint, so to speak, very, very interesting move, especially the timing with tariffs and all the rest of it.
Foot Locker's, they're buying it at a huge premium for $2 billion. I mean, It was a $63 stock in 2021. Where's it being acquired today? It's being acquired at 22. 24. 24. It's trading at under 13 before the acquisition. It was a $78 stock.
And maybe Dick says, it's opportunistic for that reason. So it's interesting to, even with it now being diminished and not being that much.
As a shareholder, why wouldn't you think you're catching a falling knife with Foot Locker? And why doesn't Dick's? What does Dick's see? I don't know. I don't know whether maybe it works for them.
They're going to have to make that
maybe
case.
They can make it work better than Foot Locker can.
Yeah.
On its own.
Yeah, that very, very interesting. One of the bigger market reactions we've seen to a deal like this, and haven't really even seen that many deals this year. So very interesting all around. Let's check out shares of United Health as well. They're down this morning, as Joe mentioned. Investors reacting to this report that the company is now under investigation by the U.S. Justice Department for potential criminal Medicare fraud. The shares are down another 6% after yesterday's 18% drop. The Wall Street Journal said the investigation is focusing on the company's Medicare Advantage business practices, but the exact allegations are unclear. In a statement to CNBC, UNH called the journal's reporting, quote, deeply irresponsible, and said it has not been notified by the Department of Justice of a criminal investigation. The company says it stands by the integrity of its Medicare Advantage program, and shares of UNH, as mentioned, they were down 18% by the close yesterday. This was because the company suspended its 2025 forecast and made a surprise announcement that CEO Andrew Whitty would step down, and now comes these revelations, according to the journal.
And it goes back to what we were talking about with Medicare Advantage when it first started dropping, as you can see on that chart. Medicare Advantage makes the argument that they'll catch more things, but when you're elderly population, you can find a lot of things. Some of it, you want to catch it all, but apparently there's some judgment calls that you can make that are expensive. There's one disease that is very rare that they find all of a sudden in a lot of elderly patients, and it's very lucrative for the insurer and for the doctors and everything, and it just makes you wonder. We hear about Medicare fraud there is Medicare fraud.
Well, and we spoke
I don't know.
to-
I'm not calling this fraud, but there is. You can game the system.
One of the analysts who downgraded the stock yesterday, we spoke to him. He's from Raymond James, and he said, "Look, some of these issues go back years, and the quality of the earnings last year," he said, "was not that great in the first place. There were a lot of one-time items and that kind of thing. So there are real questions about, were they overbilling in the past, and those were Wall Street Journal reports in the past that were detailing a lot of that. So,
and the recent problems with the results have been utilization has gone up, and then you throw in, they got a frickin' opera or something for this guy Luigi.
Do they now? Is that?
Oh yeah, or some kind of play
Some kind
or
of Broadway
something,
show,
and people
yeah.
are still. I mean, that's it. But you look at what's happening to the stock and some of the stuff that's coming out, and I would never ever say, well, that adds into these nut jobs that somehow justify what that guy did. But they'd probably say it does.
That's why this whole thing is so unpleasant.
When Andrew Whitty resigned, it said for personal reasons. I might get the hell out of United Healthcare at this point, wouldn't you? The CEO of United Healthcare?
I know from people who work with the company who said all of the executives.
I think scared to death.
Oh, absolutely. Yeah.
We can't start. This can't start being, like something that happens.
No. This is the worst part about it, especially as more and more.
There's more. They would say it's on both sides, but you see a lot of violence coming. I'm not going to point fingers.
Andrew is not here, Joe.
No, I know, but there's a lot of violent talk coming around from one. The left blames it on the right. I guess there's Proud Boys or something, but there's plenty of stuff and rhetoric.
There has been for decades.
What's Schumer saying? We Supreme Court justices better watch out. You got right. We're coming for you. Something.
I hope that when things like this happen, that people know. Okay, dial it back.
Right.
Things always get heated. Dial it back.
Right.
But.
Coming up, we're going to talk about the markets. Imagine that. Futures are lower this morning. The S&P's up 18% since its closing low on April 8th. It took 25 days for that move. A rebound of that pace has only happened 5 other times since 1970. Stay tuned to watching Squawk Box on CNBC. Cisco reporting results that were better than expectations. The company also gave a current quarter guidance that was better than expected. And it factored in also, even though it's better than expected, the anticipated impact of the tariffs on goods imported into the U.S. Cisco CEO Chuck Robbins said that it includes a 30% rate for China, 25% rate for Canada and Mexico. And make sure you catch Chuck Robbins in an exclusive interview later this morning on Squawk on the Street.
All right, and joining us now to talk more about the markets this morning, Gabriela Santos is JP Morgan Asset Management's Chief Market Strategist for the Americas. Good to see you again.
Good to see you.
So, I mean, right, this week it's been a story of UNH and then everybody else. I mean, there are people saying it should be booted from the Dow over this, which would be a little hasty. But what's going on under the surface? I don't mean there, I just mean with the markets more broadly.
So I think within the markets, there was a substantial lowering of the policy storm over the weekend. With the agreement between the U.S. and China, we feel like we have a better understanding of what the equilibrium could be here. With tariffs, we're at about 14%. We think that could be a good ballpark. It's something that's not overly disruptive, although it is, 7 times higher than it was at the start of the year. So now we're pivoting. I think the market narrative is pivoting to the next 100 days, where we're seeing elements that are more friendly to economic growth and to the equity market, including tax cuts, which is going to be the big topic going forward, as well as movements on the deregulatory front.
Let me ask you about on the tax. So this is the big kind of debate that's taking place, right? Why is the 10-year at 4.5%?
So
is it a good 4.5%? Is it a bad 4.5%? If I'm the Treasury Secretary Bessent loved when it was at 390.
Oh yeah.
And he's often said his job is to be he's a bond salesman, and he's out there to sell the world on America's debt. So, we're past the sell America sort of climax, it seems. Why are yields still under pressure?
So I think it's a better environment for stocks and risk assets. I think it's going to be a more challenging environment for yields and duration. And especially the long end of the curve, which has been volatile for really the last 2.5 months. I think the initial move higher in yields was for good reason, lower recession odds, which is great, less reason for the Fed to cut rates for the right reason. From here, though, I think it's going to be all about what happens with the tax goodies included in the reconciliation bill in Congress. Because if we think about the extension of the Tax Cuts and Jobs Act, that's expected. That was baked in back in September when we saw rising odds of a Republican sweep. But the tax goodies included in the bill are between $1.5 and $2 trillion more than what was expected by the market. I think there's still some hope that maybe it gets scaled down as it goes through the remaining committees and then the Senate.
Right, but
that's a lot that needs to be priced in.
But if it's 3.7 trillion or whatever the number is now, isn't that a little bit less in size than the bond market was fearing?
So the Committee for a Responsible Federal Budget scored it at 5.5 trillion.
Oh, did they?
So it's 3.5 trillion just to extend the Tax Cuts and Jobs Act. But that's not the only thing included. You've got an increase in the child tax credit, an increase in the deduction, no tax on tips or overtime.
Keeping a lot of the IRA breaks, yeah.
There's a lot, and that's good in the sense that it for now is written to start this year, 2025, so help and offset to what could be some of these still tariff headwinds. However, for the bond market, that's something that we need to understand what's the right term premium for that. What's the right extra amount of yield to compensate?
Someone made a great point the other day when we were sort of going on about this. They said, well, the 10-year yield was at 5% in 2001 or whatever, and we were practically running surpluses.
Yes.
So who's to say that what 4.5% represents? Now, we all know it's a challenge because the deficit's so much bigger, the debt's so much bigger, but is it at 4.5% because of those factors?
So I do think if we think about the starting point, it is substantially more challenging. We're coming into this with a 7% of GDP deficit and a debt level that's already the highest since World War II. So you're adding $5.5 trillion to the primary deficit. Then you have to add the interest payments on top of that. So you can see how the trajectory for the deficit and the debt goes up.
Huge, yeah.
We're not here to say by any stretch that we need to see yields pop 200 basis points for that. We do think 5% was a good ceiling in October of 2023 when we saw that. just that it can get a little choppy as we understand what that is. Now, this morning there were some interesting headlines that could perhaps help offset some of this. This idea of a rethink this summer of the supplementary leverage ratio for banks, which could allow them to hold more treasuries without being penalized.
That's
and could help
to that by, I think, Besson, maybe even, I think Powell has said
it's
he
the
would-
Fed, the FDIC, all the agencies behind the support because it helps with the intermediation of the treasury market.
But it's just funny because on some level it's like, you know what, why don't we relax the supplemental leverage ratio that came about after the financial crisis to make sure, I think that there was at least like a minimum amount of capital in banks, but it's like, well, if we relax that now they can buy more treasuries.
It can help the functioning because
and you're like, well, okay, yeah.
Because it's not just the level of the 10-year, but also how crazy the movements are. And if we remember in April, at one point, the 10-year popped 35 basis points in a few days because you had an unwind of all these levered positions and you didn't have banks intermediating like they used to before the financial crisis. Yeah. So I think just with the smoothness of the functioning, that could help. But in our view, it does mean a steeper curve, more volatile long end. And so when it comes to the bond market, we're focusing more on the core, kind of the intermediate duration, 3 to 5 years isn't bad. It's not a bad income duration trade-off to compensate still some of that risk exposure in the US and overseas.
Avoid some of the longer term. Gabriella, I didn't mean to do a whole bond market deep dive, but
I loved it.
You know, these are where all the questions are coming from that direction. Gabriella Santos, appreciate it.
Thank you.
Coming up, billionaire investor Steve Cohen says markets could return to the lows that they saw back in April. It's a young man, as you can see from his pictures. More on this, his comments after the break. But first, check out the shares of Alibaba falling after quarterly results. The Chinese e-commerce giant missed expectations for earnings for its fiscal fourth quarter on both the top line and so revenue and bottom line. Net income came in at roughly half of analysts' expectations. We'll be right back.
It means everything.
Wow. You can, when the Mets win, you actually can reverse.
It takes years off.
You can reverse graying hair. Maybe when the Mets aren't winning, billionaire investor, I guess they can go back. Billionaire.
He looks great. He does.
He does, I know. He looks thin too.
Yeah.
Billionaire investor Steve Cohen. It's amazing. It says he sees the possibility that stocks could retest their lows from April. Following, I don't want him to worry about that. It could go back to gray. Following the comeback over roughly the last month, though he said that potential situation would not be a calamity. Cohen making those comments at the Sohn investment conference in New York.
We've seen other periods where we have had significant drops and then the markets somehow rally in a significant. I mean, this is unusual for something like this to happen, where you drop significantly and rally back as quickly. I mean, the closest thing might have been a pandemic. Yeah, I mean, I still think multiples matter here, and growth is going to slow. And
Cohen saying that he thinks that the markets feel toppy right now. He also put the chance of recession in the U.S. at as high as 45%.
I think this is super significant, by the way. I mean, he has had so many right calls, including a couple of years ago when a lot of us, cough, cough, were a little more bearish on things, including equities, including the economy. And he was bullish, and he was right. And so I hope he's not right this time around, but he's more right than wrong. So I'm glad he was out there talking about this. Again.
Oh, no, don't tell me Jim Chanos is negative.
CNBC did also speak with Jim Chanos on the sidelines of the Sohn conference. He is a longtime Tesla bear. I don't think he. Let's stay with the micro. Here was his latest about shorting Tesla stock.
A company whose earnings are declining, its revenues are declining, its valuation is increasing because investors are pointing to robotaxis, autonomous robots, and then I joked this morning, asteroid mining by robots. I mean, the stories that keep building onto this company as people put hopes and dreams on the back of one company and one entrepreneur, quite frankly, are just, sort of getting excessive.
On Elon Musk's Doge effort, Chanos also said he thinks the government savings that'll be achieved will be fairly small compared with something like tax policy. He was also, Joe Dukeshi was bullish on Bitcoin, Chanos, but it was as part of a kind of we're selling strategy and buying Bitcoin kind of point he was making.
What was it that said we're going to probably retest the lows too? Someone, Ken Griffin, I think, said that too. Yeah, I think.
No, it's notable that some of the caution.
Although that was, I think that was prior to the Besant China trip.
Yeah.
I think.
All right. Coming up, Dick's Sporting Goods is buying Foot Locker for more than $2 billion. It's official this morning. Details on the transaction, which have shares of Dick's down sharply. That's coming after a break. And also take a look at yesterday's S&P 500 winners and losers, and we'll be right back.
you download Dave.
Good morning and welcome back to Squawk Box, live from the NASDAQ market site in Times Square. Checking the futures, we now see the Dow down about 168 points. But don't forget, United Healthcare accounting for a large part, almost all of that drop. I haven't looked at it lately, but it was down about 20 points. More now, about 22, 23 points times, what is it? What's your divide?
7 or 7.5, I think.
You're very nerdy. It's about 7. So 7, you know this.
The last I knew this could have been a couple
7
years old.
times.
It's about, yeah.
Okay. You've had other things going on, obviously.
It's about 7.
Yeah, it's about 7. So 7 times 21 is 150 points of the downward. But
yeah.
The NASDAQ and the S&P are both down as well. Treasuries, you know, people have been saying, well, it gets back to 4.5 or above 4.5. That's a line in the sand. We'll see. 451 this morning. If it's for a good reason, i.e., you know, recession expectations get lowered, then maybe it's not so bad.
Yeah, nearly 5% as well, again on the 30-year. So breaking news earlier this hour, Dick's Sporting Goods is buying Foot Locker for $24 a share. Courtney Reagan is here with all of the rather juicy details, Courtney.
Yeah, obviously, so this one was rumored sort of late last night, and we obviously can confirm now that this is true. And I spoke with Dick's Sporting Goods executive chairman Ed Stack, he's also the son of the founder of the company, about the retailer's deal to buy Foot Locker. Ed Stack told me, look, it gives us a much deeper relationship with the key brands that we do business with, Nike, Adidas, On Running, all of them. And that footwear is the engine that pulls the train for Dick's Sporting Goods. Now, Stack recognizes Foot Locker's challenges, largely exacerbated by Nike's previous decision to pull back on inventory at retail partners as it pursued its own direct-to-consumer strategy. That strategy, however, has since been reversed at Nike, and Stack said, quote, we think our expertise from an executional and operational standpoint and that know-how can help get Foot Locker back to where it should be in the industry. He added, Foot Locker was the place where they sold the coolest shoes, had the coolest employees, and they sold them to the coolest kids who really wrote the narrative about what was cool in this country and around the world. And that footwear is the engine that pulls the train for Dick's Sporting Goods, and he thinks that, again, he can get Foot Locker back to that. He also called out benefits to Foot Locker's international presence. Remember, Dick's is not international. He also said, look, Foot Locker has stores in areas that are going to be harder for Dick's to find enough space and the right economics to put in its own stores. Now, the intention is to run Foot Locker as its own business with its own branding. Stack said he thinks the world of the team at Foot Locker and that Mary Dillon will remain CEO of Foot Locker, at least through the integration. And then after that, she and Stack will, quote, talk about what she wants to do. Now, what Stack wants Dick's Sporting Goods shareholders to know is that there's already been an internal intention to not let this deal distract from Dick's Sporting Goods' main strategies, which he says are gaining momentum as the retailer also pre-announces quarterly comparable sales up north of 4% today. Now, there's a small team at Dick's that's been retasked to focus on bringing the Foot Locker business in. Stack is going to be the one that is leading that team.
It's so impressive because Dick's was $119 stock in 2021.
Yeah.
And a lot of the, we've mentioned other, high watermarks. Dick's today is now at 180, well, 209 before the deal. I mean, they've done incredibly well in the post-COVID period. So they're coming from a position of strength. I think investors might give them the benefit of the doubt. The shares are off their lows this morning, down 17, now down about 13%, but they still seem to have some concerns.
Yeah, absolutely. And I think, look, whenever you look at deals like this, usually the acquirer is the one that takes it on the chin a little bit in the early going. Certainly, if you look at Foot Locker's business in the past, maybe you could say they got it for a deal, but of course, is it going to be accretive? Stack thinks it will be in the first full year. He's not giving those estimates quite yet. He says there's going to be some synergies. He thinks maybe between maybe $100 and $125 million, but again, does intend to continue running these as separate businesses, kind of a bolt-on. The international presence, though, does seem to be an opportunity he's looking at. He says there's a total addressable market there of about $300 billion, which they're not getting any of right now.
And you mentioned the whole Nike thing. In many ways, at the heart of this, they pulled back from those partners. That Foot Locker had a really hard time without that inventory, but Nike is now making an about face, are they not? Are they going back to the?
They are, and that is sort of what we discussed here. So they are making an about face. They're realizing that those retail partnerships are still powerful. Unfortunately, I think some of the damage had been done.
Are they going to be back in the Foot Locker channel? Like,
yes.
So,
yes.
I mean, look, that could, I was trying to think, if Warren Buffett were buying the company, would we say, wow, this is genius, you know?
Yeah.
And should we give Dick's the benefit of the doubt here? Maybe they realize a similar opportunity.
Right, and one of the analyst notes, I think, when this deal was at least speculated, noted something, and I think I want to get these numbers right, saying that Nike represents about 24% right now, but with this deal would be as much as 38% of the inventory. So depending on how you view that from Nike, is that a good thing or a bad thing?
Right.
You know, that does sort of change that calculus there
In the
too.
middle of its own turnaround.
Right.
Very interesting. Thank you for bringing us,
Thanks.
especially those comments, Courtney, from the CEO of Dick's. Appreciate it. With the shares still down 13% pre-market.
And coming up, President Trump just finishing an address to U.S. Troops in, you know, we're back to Qatar. Someone's got to make up their mind.
And who is it?
Who the hell knows? We're going to talk about that, the business deals he's closed while overseas, and what this new era of business diplomacy means for America. A reminder, I'll get the best of Squawk Box in our daily podcast. Follow Squawk Pod on your favorite podcast app and listen anytime. We're coming right back.
The U.S. has reached a preliminary agreement to allow the UAE to import 500,000 of NVIDIA's most advanced AI chips per year, starting this year. That's according to Reuters, which says 20% of the chips would go to the UAE tech firm G42, and the rest would be split among U.S. companies like Microsoft and Oracle. The likelihood of an agreement was first reported by CNBC's Christina Partsinevelos earlier this week, And in terms of compute power, the chips bound for G42 represent at least a tripling of what would have been available to the UAE under the previous Biden administration rules. The Trump administration is rescinding those regulations. NVIDIA shares, which have come back strongly from like the mid to low 80s just about 2 months ago, trading at 133 this morning. They are down about 1.5% pre-market.
And the NVIDIA deal, just one of the business developments coming out of President Trump's trip to the Middle East. The White House has announced hundreds of billions of dollars in deals in Saudi Arabia and Qatar. Joining us now on the new era of U.S. business diplomacy, Firas Maksad is Eurasia's group's managing director for the Middle East. Been a little bit. Has it been surprising to you that is it safe to call this a sea change in our relationships of the United States with the Middle East, Firas?
It's good to be with you this morning. Absolutely. I do think this trillion-dollar tour that President Trump right now is on in the region is a sea change in the sense that we are approaching this part of the world with a very commercial-minded approach. We tend to think about the Middle East as a place that has tumultuous geopolitics, the conflict in Gaza, the issue over Iran's nuclear program, the history of Iraq and Afghanistan. And the president really here is putting the region on the radar of the global business community. This is a place that is capital rich, has a new crop of leaderships, whether it is in Saudi Arabia, in Qatar, or the UAE, young leaders with national visions. And it's a great place for the United States to do business. And I think President Trump recognizes the opportunity and is very much pushing forward American businesses to take advantage of that.
I think Kelly was just a glimmer in her mother's eyes the last time two presidents from the United States and Syria encountered each other. Is that true?
Yeah, I can't remember. Well, I do
45. Yeah.
I do remember actually. It was the late Hafez al-Assad of Syria and President Clinton in 2000, right before the peace negotiations fell apart. So it's a sea change. Obviously, Syria, huge opportunity there with the collapse of the Assad regime, new leadership that has come to the forefront. Obviously, Syria is kind of the row house in the center of the neighborhood. If it's coming apart, if it's on fire, everybody else is going to be impacted. Israel to the south, Turkey, a NATO ally to the north, fragile Lebanon to its west. And so everybody wants to get Syria right and give it the opportunity. That said, it's not without a catch. Certainly the new folks in power in Syria have a jihadist past. That's how they came to power. They're hardened fighters. But the argument is to be pragmatic and that they would be moderating pretty quickly. They have been trying. And so here we see that President Trump has bought into that argument. And I think the eye here is to make sure that Iran isn't able to stage a comeback, take advantage of all the chaos that would unfold in Syria if, in fact, it does go sideways.
I'm just wondering, I mean, is it too much to hope for some type of, I don't know if I call it an Arab Spring, but could Syria show Iran the way to being more like a Western, I guess that's too much to hope for a Western democracy, but at least where the Syrian people come into the 21st century and enjoy some of the benefits that I still think the Iranian people wish they had, but they don't have it yet.
Yeah, I think the vision put forward by President Trump in his speech in Saudi Arabia was key. I don't think, Joe, we're talking about, Jeffersonian democracy breaking out in the Middle East anytime soon. But what we are talking about is, effective leadership that can provide for the people, these national visions that I mentioned in these various Gulf countries. And President Trump kept referring to how places like Saudi Arabia or the UAE, they're making the desert bloom, and they're taking those resources that they have, the oil revenues, the petrochemicals, the big investments in various key industries, AI was mentioned here today, and putting them to use for developing their economies and diversifying. While in Iran, we see what they're doing with their oil revenues. They're sponsoring militias all across the Middle East, trying to project power. It means no development for their people, chronic power shortages, water shortages. And I think that's the key here. If Syria can go down that path of focusing on providing for its people, I think it's a strong contrast for the Iranian people to see where the Arabs are going in the region versus where the Iranians have been.
I want to at least get two more questions here. I don't know how much time I have, but number one, Netanyahu and Israel, are they watching this in I don't know what you'd call it. Is there trepidation, or if Saudi Arabia were to sign on to the Abraham Accords, would that be something that Israel would say, okay, we understand it. There's a method to Trump kind of, I don't know, has the relationship between Trump and Netanyahu and Israel changed in the last couple of months, Farhan?
Great question. Listen, this is a president that really has two priorities when it comes to the Middle East region. One is trying to get to a deal of some sorts with Iran over their nuclear program. He keeps saying that this is the year where we either go to war over that nuclear program, but preferably we unlock a solution through diplomacy. And I think the coming 2 months will be crucial. The timeline that we have is up to June. This is kind of when we either go the route of sanctions and more maximum pressure, or we unlock at least an interim deal. Our view is that chances are 60% that we will actually get to some sort of interim deal and kick the can down the road in terms of diplomacy with Iran. But the other priority is normalization between Saudi Arabia, the big country in the region, and Israel to add on to the Abrahamic Accords. President Trump often feels that this is kind of his pathway to a potential Nobel Prize. The problem is that Bibi Netanyahu, the Israeli prime minister, for domestic political considerations, can't get himself to a workable ceasefire in Gaza that would then allow for a pathway towards normalization with Saudi Arabia. And so a great deal of frustration between the American president and the Israeli prime minister.
How much time have you spent, you don't wear pearls, but if you did wear pearls, clutching your pearls about the jet and the self-dealings for the Trump family or whatever the left or mainstream media is focused on this morning? Is that spent a lot of your time? Is it going to be a lasting, is that what we're going to remember about the entire trip?
Not at all. Not at all, Joe. Listen, I do think that perhaps the Qataris here wanted to come, bearing gifts for the American president, any American president, in fact. This is just the nature of international politics, certainly the way that, dealing in that part of the world is conducted. They wanted to show respect. But it's on the United States and our rules and regulations whether to accept that or not. So this is not something that's going to impact international diplomacy, let alone kind of commercial diplomacy that President Trump is on.
So if I go over there, I mean, I'd be citation 10 would be, they're going to show that if they respect me. Do I get like a smaller jet? I mean, I'll do that. I'll try that. Go ahead.
We all are looking for that kind of respect, aren't we?
Yeah, we're all looking for that kind of RESPECT. Find out what it means to me. Wow. For us, thank you. It's not over. I know we're going to hear more about. Do you think that in the end, is he going to use that jet, even with all the security concerns?
It's hard to say. If I was a betting man and I was to make a call on this, I'd probably say that the jet would be declined, or at least he wouldn't put it to use himself. But again, it's the gesture that counts as far as the Qataris is concerned.
Okay. Great. Good to have you on. Thank you. Appreciate it, Ross.
Coming up, Warren Buffett telling the Wall Street Journal why he made the decision to step down as CEO at the end of this year. Details on that story next. Squawk Box will be right back. Legendary investor Warren Buffett told the Wall Street Journal that he decided to step down as Berkshire CEO after finally feeling his age. The 94-year-old said that when he turned 90, he began to lose his balance occasionally and sometimes had trouble recalling a person's name. I feel that way at shy of 40.
No kidding. That's what I was just thinking.
Yeah. But he said he
Not
has...
really, though. We feel good.
I feel okay.
I said you were 25 a couple minutes.
I appreciate that very much. Buffett also said he has no trouble making decisions and doesn't get fearful when there's panic in the market. Earlier this month at Berkshire's annual meeting, Buffett surprised investors, of course, by announcing that he plans to step down as CEO in December, and he will hand the reins over to Greg Abel. Buffett will continue to serve as Berkshire's chairman, but again, a little more detail here about what prompted this decision.
I love that he didn't start feeling old till he was 90. That gives me
a lot of hope.
I make decisions now. I think, oh, there's a bathroom. If I'm passing it, I might as well stop there, right? Instead of later.
Even in Munger, we heard this, but he had said.
I just heard you just said, "Mayor, gotta go." No, not right now. Thanks for asking. No. Yeah. Right.
It's similar from Charlie when he said at 98 or something. You know, I'm not as spry. I can't do things I could do when I was 94.
I don't have nearly as much energy as I did at 90.
They're amazing. I eat peanut brittle and I feel fine about it because of that.
You do.
I do.
You're eating for two.
Well, I do it anyway.
Yeah, coming up, Netflix reporting a big jump in its ad viewing subscribers. What will this mean long term for the streamer? We're going to speak with a top stock analyst after a quick break. Not too more.
NBC Plus.
A new filing just out from Coinbase says that criminals target its customer support agents overseas. It says no passwords, private keys, or funds were exposed, but account data for a small subset of customers was stolen. Coinbase says, though, it's not going to pay the $20 million ransom demand it received, and it's cooperating with a law enforcement investigation.
All right, shares are down about 4% nearly pre-market, and Netflix says its ad tier has topped 94 million monthly active users. That's an increase of more than 20 million since its last public tally back in November. They unveiled the news at an advertising presentation in New York City. Our next guest was there. Mark Mahaney is Evercore ISI's head of internet research. Big deal? I mean, what a stock Netflix has been this year. So at this point, it's like, what isn't priced in?
You're right, Kelly. There's a lot that's priced in. It's an all-time high for the stock, $11.50, which is pretty much at our price target, so it's a small buy for us. But yeah, they've this was one of the bigger pivots I've seen in the 25 years I've watched internet companies. You know, growth had kind of they'd gone almost X growth. And then 2 years ago, they rolled out this ad-supported plan. Turned out to be highly successful, or it's been highly successful so far. So you're bringing in 94 million new viewers. Advertising is still small for this company. It's less than $1 billion in revenue. But could it be 5 or 10 billion long-term in 5 years? Yeah, it absolutely could, given the global reach of the company. They also mentioned a great data point yesterday. Their average U.S. viewer watches Netflix 41 hours a month. So you get reach and engagement, and it's high-quality content. So I think they'll have, I think there is a path here to multiple billions in ad revenue.
All right, Walmart just reporting and quarterly results. Let's get to Courtney Reagan. She's back with us. Got the numbers?
Hi, Joe. Yeah, so Walmart reporting first quarter adjusted earnings of 61 cents per share. That's above the 58 estimate on revenues of 165.6 billion. That one's slightly below consensus of 165.8 billion. Now the U.S. same-store sales, those rose by 4.5%, also above expectations, driven by health, wellness, and grocery. Continued share gains in grocery, also noted in the release. Now net U.S. e-commerce sales grew 21%, and this is notable, this is the first full quarter where e-commerce was profitable. Walmart had said it was on track for profitability at its investor day. It does indeed look like it happened. Now the retailer affirming annual guidance just as it did at its investor day in April. Walmart also forecasting second quarter revenues to grow between 2.5% and 3.5%. But Walmart is not giving guidance for second quarter operating income, due largely to the wide range that it would have to give because of the tariff impact on its accounting method. This is a little wonky, but I spoke with CFO John David Rainey, who explained that Walmart uses the retail method of accounting, which uses a cost to sales price ratio, which then is very hard to predict narrowly with tariff rates changing wildly. So Rainey says the quarterly fluctuations are going to make it really difficult, but thinks that over the year, it'll even out. So it's holding its annual operating income estimate. He explained that we import 1/3 of what we sell in the US, China, and the largest, of course, is China, then followed by Mexico, Canada, India, and Vietnam. He also said, we are pleased on the progress that's been made by the administration on the tariff levels that were announced in April, but they are still too high. We will absorb some of the price increases, and suppliers will too, but consumers are likely to see some price increases, and that concerns us. But Rainey said managing inventory is really going to be what sets retailers apart in this environment, noting, quote, we have not canceled any orders with suppliers. We have reduced some orders on occasion. Now, Rainey says consumers right now are discerning, mindful, maybe a little concerned about possible looming price increases, but their behaviors have not changed. I will speak with Walmart CFO John David Rainey in a first on CNBC interview on Squawk on the Street about all of this and more. Obviously a very important company as we're looking at the global landscape and how trade affects retailers.
I need a couple decimal points to get to what that revenue shortfall represents on 165 million.
It was 165.8.
Yeah, so that's 200.
And they were at 165.
No, it's de minimis. What's more important is the same store, U.S. same store.
Right, up 4.5%, which is I think 33 quarters in a row of positive comparable sales.
And the shares are up. I mean, that's nearly 3% pre-market. Yeah.
We got to get back to Mahaney, but you also said affirming. And you said they had done that before.
So then
it could have been reaffirming.
It could have been that time.
Normally we don't. Normally they're not reaffirming, but we say it wrong. And this time, that's amazing.
And you're right. And then I mixed it up, and I had the chance to.
They didn't reaffirm net income, though. You said.
That's
so. Then they didn't.
Okay, fair.
You were listening very closely.
What else am I supposed to do?
Is it affirming or is it reaffirming?
I think I'm here.
This is a case of reaffirming.
I'm daydreaming. I'm drifting off. That does happen at times. Courtney, thank you. Let's get back to Mark Mahaney. Wow, you're here. I forgot. No, on Netflix. Keep going. This is.
That was good stuff. We were just talking about how Netflix pulled off one of the biggest business pivots you've seen in your career when it offered this ad tier that's now got almost 100 million subscribers, 94 million. But again, the stock is priced for it. It's one of the best performers this year. It and Spotify, they're absolute juggernauts, but a tough market. Where do we go from here?
And one of the reasons that they've outperformed so well is that they're considered to be recession resistant, which I think is probably true. $7, $8 a month for access to Netflix is about as cheap as you can get in terms of your entertainment dollar. In a what could be a challenging time, and the service has just fundamentally gotten better. Competition is less than it used to be. This company's just out executed everybody in the space.
It's funny you just said competition is less than it used to be, because I was going to go there. But to your point about how they still have all this green, I mean, they're just starting sports, and to contemplate that and what that could mean as they lean into it. Let's talk about the competition for a second, though. With HBO Max now back on the scene, and more you see companies putting their resources into their streaming rivals. Is that a threat at any point?
It could be. I actually think we reached peak streaming competition about 2 or 3 years ago, and the CEO of Disney got fired for excess losses at Disney streaming. That was peak competition. It could come back. You'd also made a really important point. What's going to be different about Netflix 5 years from now, 3 years from now? I think they're going to get more and more into live events. So they announced yesterday that once again this year we're going to have Christmas NFL, and I think in a few years we're going to have a decent number of NFL games on Netflix and NBA and hockey. I think this is where the puck is going.
For sure, nice. Does it matter how expensive those sports rights are?
Yes, it does. The advantage that Netflix has is that they get bigger. They're spending $18 billion a year cash out the door on content, and I think every year it's going to be a billion more.
How much more is that than competitors? Do you know off the top of your head? Is it twice as much, 3 times as much, or are others trying to kind of get in that
It's
ballpark?
probably twice to 50% more. But they have whoever has the most subs generates the most revenue, can spend the most on content, and that was always the game plan at Netflix. Now they had to go through a lot of hurdles to get there, but they're there now.
You're gonna have to raise your price target?
Probably at some point, yes.
Because we're right where
we're right at that price target. I'm gonna be patient about it. It's a small buy. There are other names that I like more here that I think are more dislocated. Amazon, Google are two, and even Uber. But Meta's still. Netflix is still. You want to be in this stock for the long haul. Do you want to make a full position right here, right now? No. Do you want to have if you don't have any, if you don't own any Netflix, you should own some. It's a great long-term growth asset.
All right, Mark. Thank you. Really appreciate it today. Mark Mahaney here on set with us. Andrew.
Good morning, good morning. It is, I would say it's not just 7 a.m., it's way past 7 a.m. on the East Coast. It's about 7:06 on the East Coast. You're watching Squawk Box right here on CNBC. I'm Andrew Ross Sorkin along with Joe Kernan and Kelly Evans this morning. Becky is off, and boy, do we have a lot going on. You guys have been covering so much of it just in the last hour. Among today's top stories, President Trump now heading to Abu Dhabi. That's before leaving for Qatar, or before I should say leaving Qatar. The president saying that India offered the U.S. a trade deal that proposes no tariffs. Also made some comments about Apple and Tim Cook. We're going to have a lot more on his Mideast trip later this hour. Meantime, United Health Group shares falling again. The Wall Street Journal reporting the company is under investigation by the U.S. Justice Department for potential criminal Medicare fraud. In a statement to CNBC, United Health calling the journal's report, quote, deeply irresponsible, and said it has not been notified by the Department of Justice of a criminal investigation. So a lot to unpack there. And then there's this, Dick's Sporting Goods buying Foot Locker for $24 a share. Dick says the deal will be accretive in the first full year after it closes. Dick's planning to operate Foot Locker as a standalone business and maintain the Foot Locker brands, but the end of the independence of Foot Locker. So, wow, that's a lot, Joe.
It is.
17%, now they're down only 8%. Maybe those comments from Courtney helped. You should talk to the CEO.
Andrew, you can take stock or cash too, so you can't immediately say it's just an arbitrary. It was down so much, and it's only a $2 billion deal or something. But Dick's has the right model. They're in those standalone. You see, they're never in a mall.
Yep.
Right? They're in those little, whatever the hell they are, out on Route 22 and Route 10.
Route 17.
But Foot Locker is stuck in the, not stuck in the past.
And he said they wanted that exposure. He said we wouldn't take our brand in there, but they're not planning to make any changes, going to let it operate much like it has.
Well, so then the question is this just a play on where the valuation is right now and sort of the state of what Foot Locker is? Yeah.
70 to 12. Well, it's a drop in the bucket for your M&A angst, Andrew. This is not going to help.
I know.
Right?
I know.
It's something. I mean, it is
Something.
something. It's the first real substantive deal. Wouldn't you say, Andrew, we've had, I mean, since the pause that goes back a couple of months, really?
$2 billion.
And the IPO market is back. It's all back.
$2 billion.
Something.
I don't know. I think this is one of those transactions that shouldn't. Well, I don't know. Maybe it will be impacted by potential tariffs or not, because you think Nike sneakers coming in from China, and how much what are they gonna have to charge for those sneakers? So maybe there's a play there to say that it's related. But I feel like this is one of those transactions that feels like it's a little bit separated.
Okay, we got Walmart numbers after first quarter results. The stock looked pretty good at first blush. Take another quick look at it. But for more, let's bring in Stephanie Link, Chief Investment Strategist and Portfolio Manager at Hightower Advisors. It's up about 3%. He's also a CNBC contributor. And the reason he's a contributor is because we hire very savvy, experienced people who use terms like, she expects a meet and keep print. Meet and keep print on Walmart. At least meet expectations and keep guidance for the future. Is that what it means? Have I got that right?
That's what it means, and we got that. Although the same-store sales number at 4.5% was better than expected in the U.S., and that means the two-year stack is over 7.5% comp. I mean, they're crushing it, Joe. And we've talked in the past. There are the haves and the have-nots in retail, and you want to own Costco, you want to own Amazon, you want to own Walmart, because they are winning and taking market share, and the quarter today actually proves that. And I think they're just being conservative on guidance, by the way.
Kind of get an interesting look into tariffs too. They go, we're trying to hold. Some of our suppliers are also trying to hold. So you don't get 100% of the tariff effect, at least not immediately. Some of it does get absorbed, and Walmart is probably a poster child of who we should pay attention to and how they handle this.
Absolutely. 2/3 of their business is U.S. and a third is China and Mexico, and they're managing it as best as they can. Everyone's going to feel it, but they're able to absorb it, and that's probably why they're not giving us a lot of guidance in terms of longer term, because we've got to see what happens on the margin front. But they are delivering, and the reason they're delivering is because 72% of their sales is consumables, and the rest is discretionary. And that is such a contrast to Target, which is 50% consumables, 50% discretionary. And that's why Target is lagging, although it is awfully cheap. So I'm trying to give Target the benefit of the doubt of that turnaround, but Walmart is just an easier story to own.
Starbucks is on your radar this morning. Is it working? The stock's looking a little better, I guess. It's nowhere near the all-time highs, but that chart doesn't look good. But
no.
If you go back, 3, 4, 5 years, it's at least above those levels. But they're making investments now, and they're going to try and refocus in China, or what's happening?
Well, I'm not surprised that they're looking at for a partner for China, because Brian Nickel, when he was at Yum Brands, they actually spun off the Yum China. So not surprised at all. I think that would be good news. China is a headache. They haven't gotten it right, but it is a growth market, so I think they could probably get a good deal for it. However, I think the company really does need to reset on their products, on productivity, on labor costs. And I think as a result, numbers are going to have to come down over the near term. Long term, we know the CEO is a success story in what he did at Chipotle, but I just think it's going to take time, and the stock is not cheap, Joe.
Even not cheap, even though it's well below some of its best, like Howard Schultz, one of his returns, he got it back up there. And so what about the Dick's and Foot Locker deal that the market, it's come back a little, but what was that initial reaction?
Well, I've always paid attention to Mary Dillon just because she's such a rock star. When she was at Ulta, the stock rose 243% under her leadership. I'm surprised that they're selling out, to be honest, but the turnaround has been painful. It's taken a really long time, and they still have a lot left to go. I don't think Dick's needed to do this, to be honest with you. Great management team, great execution, margin improvement and expansion. But this is a small deal relative for them, expands their footwear business, although they do already have footwear, so it's just making them bigger, broader, and more scale. But
Yeah.
I'm not crazy about the mall. 15% of Foot Locker's in the mall.
Right, we got to go, but they're telling me that UNH, you changing your what you think about United Healthcare? Would you sell it now? Would you buy more? What would you do?
Well, it's hard. It's a hard stock. It's not going to work. It's dead money for the time being. I'm not selling it down here. Don't really know what the numbers are going to be because they pulled the guide. But if it's something like 13, 14 times earnings for the #1 company in the industry, they'll get it fixed. The new CEO will get it fixed. It's just going to take time because they have to reprice. So we'll have to wait for 2026. But I just don't want to sell it down here, Joe. Not #1. They are best in breed. I don't believe that this is a criminal situation, but it is noisy. And so you're not going to make money in the short term.
All right, Stephanie Link, thanks. Let me get that last one in. All right, see you later. Andrew.
Thank you, sir. When we come back, a lot more on Squawk Box this morning. Retail trading platform eToro making its debut on the NASDAQ yesterday. The stock jumping nearly 30% over its IPO price. We're going to talk to eToro's CEO, and we're going to do that next. Later, Reddit co-founder Alexis Ohanian taking a stake in one of the most valuable women's sports teams, that is Chelsea FC, and we're going to talk to him about this latest investment and more at 8:10 a.m. Eastern Time. Do not go anywhere. Squawk Box coming back after this.
AI meeting agent.
Welcome back to Squawk Box this morning. Retail trading platform eToro debuting on the NASDAQ during yesterday's session. The IPO priced at $52 per share. It opened at $69.69, up 34% from that IPO price. It closed up 29% at $67 per share. Joining us right now, first on CNBC, is Yanni Sia, is the eToro's founder and CEO. Congratulations to you. Big morning. Big morning.
Amazing
I should say
morning.
yesterday was your big morning, but maybe you needed to wait to the end of the day to feel it.
Absolutely amazing, an amazing experience. Going public, passionate about capital markets since I was 13 years old and started trading. 18-year journey of building eToro, and it's amazing to see eToro now trading on eToro.
Tell us a little bit about the journey, because there was a point at which you were going to go public through a SPAC back in 2021. That didn't happen. Now you're finally here. How important was it for you to go public in terms of raising capital? What are you going to be doing with that capital? Where's this all go?
Well, eToro's changed its strategy in 2022 to profitable growth. We've significantly scaled profitability, making more than $300 million of adjusted EBITDA last year. And what we learned in 2022 is that it's important as a public company to be profitable, as we saw in 22 when the markets went through a downturn, how companies that were valued just on revenue multiple got hit. So I think it was a great process for us, learning about public markets through the SPAC process, and I think we made the right decision to wait longer, to transition the company towards profitability, and to go public now. And it's truly an amazing experience to meet the top investors from all around the world in the last couple of weeks here traveling in the US.
How tied is your business at this point, do you think, to cryptocurrency and maybe more importantly, even Bitcoin? Meaning, do you think that people, in terms of how they consider the valuation of your company, is going to be basically a crypto play?
So last year, first of all, we were very early on to crypto. I started buying Bitcoin at $5 for eToro's treasury. We were the first regulated company in Europe to launch cryptocurrency trading at $5. $5? $50,000 became $50 million before my board told me I have to sell it. It's not our business. Vitalik, the founder of Ethereum, actually was in our offices before Ethereum. Maybe. But really an amazing experience seeing crypto from where it was to what it is today. I think nobody doubts that crypto is here to stay. It's a new type of capital markets thriving around the world. Outside the US, we have more than 130 different crypto assets trading, but nonetheless, we are passionate about capital markets and the stock markets. So at the dinner with Warren Buffett, he actually convinced me to focus more on stocks and less on crypto. But we love both. Last year, 25% of our revenues were crypto, and 75% were stock markets. Our customers from all around the world buying stocks from more than 20 different stock markets.
Yeah, when you sit around and put up a whiteboard of just your competitor set, do you think of them more in the Coinbase category, the Robinhood category, the E-Trade category, or something totally else at this point?
I think a lot of the neo-brokers, new companies like eToro, we're eventually targeting the largest transformation of wealth, generational transformation of wealth in history. $84 trillion are going to move from older generations to newer generations just in the US. $60 trillion are going to move from older generations to newer generations just in Europe, in our core markets. So I think we're all targeting eventually where the real assets, this huge amount of money that right now is sitting in banks, in insurance policies, and that's the real transition of our generation amassing wealth and managing their funds with digital native solutions with eToro, investing in the global markets.
Long term for your company, I mean, obviously you want to be an independent company. Do you think that you acquire everybody else, or do you think the big guys come and try to acquire you?
I think historically brokerage is a consolidating market. If you look at the market, the e-brokerage 1.0, which I grew on, consolidated locally with Morgan Stanley buying E-Trade and Schwab buying TD, and the same happened across the globe. I think this time this happens globally, and you know, we've met so many amazing founders and teams across the years in this 18-year journey, and I hope some of them join eToro.
Okay, Yanni, congratulations to you. We hope you come on back. Now you're at your home of the NASDAQ now, so please visit. Thanks.
Thank you very much. Very excited to be here.
All right, very good. Coming up, stocks on the move, including another big slide for Dow component, United Health. That's why the Dow is actually down. And then later this hour, Congressman Chip Roy on what he wants to see in the reconciliation bill before he'll vote for it. He joins us at 7:50 a.m. Eastern. Smart Box coming right back.
Time now for today's Aflac trivia question. According to Forbes, who is America's richest self-made woman in business? The answer when Squawk Box returns. Now. And now the answer to today's Aflac trivia question. According to Forbes, who is America's richest self-made woman in business? The answer? Diane Hendricks, the co-founder of one of the largest distributors of building products, has a net worth of $22.3 billion.
Checking the futures, you can see now about where they were. Everything's red, but maybe for different reasons. Most of that Dow loss you see is United Healthcare. Let's get to Dom Chu with a look at this morning's pre-market movers. Good morning, Dom.
Yeah, good morning. So we'll kick things off with a check on some of the big computer chip names on the heels of the big news out of the Middle East. NVIDIA, AMD, both inking deals with Saudi Arabian AI startup Humane, billions of dollars at stake. Again, take a look at NVIDIA, Advanced Micro, Broadcom, Qualcomm, and the VanEck Vector Semiconductor ETFs. They're all down fractionally right now, but coming off a very, very big week overall, so keep an eye on that. Then we're going to check out what's happening overall, again, with some of the moves that we've seen elsewhere in the markets here. Check out what's happening overall with NVIDIA, Qualcomm, AMD, SMH, and Broadcom. Those on a week-to-date basis still up very, very, very big. Now, moving on to another big story that we're seeing right now on the international side of things, Alibaba, the Chinese e-commerce and web services giant, taking a hit down 5% after the company, which a lot of people call the Amazon of China, reported quarterly profits and revenues that both fell shy of estimates, due in part to the impact of tariffs and the macro uncertainty on Chinese consumers, also bigger spending on AI and other strategic initiatives. So Alibaba shares down 5.5% over the last year, though still up 56%. And we'll end with the fall from grace that was once the most important stock in the Dow Jones Industrial Average, and that's United Health, as Joe points out, down another 6% today, adding on to what's become a halving of its market value since the record highs just 6 months ago. The health insurer has been reeling, given a string of bad news, most recently the departure of its CEO, suspension of its guidance, and now a Wall Street Journal report that UNH is being investigated by the Justice Department for possible Medicare fraud, according to people familiar. Now, UNH did say that it has not received any notice from the DOJ, and the company stands behind the integrity of its Medicare Advantage program. Still, though, check out what's happening here. United Health, once, guys, Kelly, the most important and heavily weighted stock in the Dow in the last year, now the 7th most important. I'll send things back over to you.
And the Dow, I think it's now 6 points per dollar.
Oh, it is.
Yeah, Dom, thanks. Coming up, we have a trifecta of data this morning, from jobless claims to retail sales and PPI. It's all coming out in an hour at 8:30 Eastern. But first, Pippa Stevens on location from a mine producing crucial metals for the U.S.
Copper is key for everything from iPhones to data centers to electric vehicles. And as demand grows, we have an inside look at how one operation in Utah is ramping up. The details coming up next on
Mining insurance.
Critical mineral battles for the U.S. supply chain are taking center stage under the Trump administration, with the White House invoking emergency powers in an attempt to boost production. Pippa Stevens is out in Utah with a look at how one miner is ramping up their productions. Pippa?
Good morning, Kelly. I'm about 40 minutes from downtown Salt Lake City at Rio Tinto's Kennecott Copper Mine, where work is underway 24 hours a day, 365 days per year. Now, copper demand is forecast to double by the middle of the next decade, according to S&P Global, and Rio is constantly spending to extend their operations. We got an inside look at what exactly that entails. Take a listen. What you see there is one of Rio Tinto's blasts. They carry out one of these every single day, creating more than 500,000 tons of new ore. That's equivalent to 10,000 humpback whales. There were 120 holes drilled there with 1,600 pounds of explosives per hole. After that ore is blasted, it's loaded into one of these specialized hauling trucks to begin the process of turning it into refined copper. Now, this operation alone supplies 20% of the U.S.'s refined copper, and Rio's in the process of extending operations on its northern wall in order to extend the life of this mine further into the 2030s. Now, they also have what could be a much larger project down in Arizona. That's the Resolution Copper Mine. But after more than 2 decades as the primary operator and spending in excess of $2 billion, they have yet to break ground there, showcasing just how difficult it is to get a mine like this one off the ground in the United States. Guys?
How many are there in the U.S., Pippa? How many copper mines like the one that you're at?
So there's about 25 copper mines here in the U.S., but they are heavily skewed towards the ones like this one, Kennecott, that are the major producers. Now, the issue here is that while the U.S. has abundant reserves of copper, we have very little refining and smelting capacity. Kennecott has one of just 2 domestic U.S. smelters. And of course, it doesn't matter how many reserves you have. If you can't turn it into a valuable end product, it's effectively useless. And so that's what makes Kennecott important. It's a vertically integrated operation. It's fully mined and refined U.S. copper, which is becoming increasingly important as we see resource nationalism on the rise. But the issue is that smelting is a very hard business. It's very capital intensive, and the margins are much thinner. A lot of the money in mining is made at the mine itself. So even if we get new mines in the U.S., we also need to see more of that smelting and refining capacity added.
Great point. I understand that's kind of the hang-up with rare earths too. It's not that we don't have some of them, but you know, is it cost effective to smelt and refine? I guess the terms are. Pippa, really appreciate it. Great to see you. Great stuff this morning. Pippa Stevens. Andrew.
Thank you, Kelly. Coming up, a very big development for stablecoin users. Fintech company MoonPay is joining forces with a major credit card firm. We will bring the details. And MoonPay's CEO is going to join us right on the broadcast next. And then later, Alexis Ohanian, founder of venture firm 776 and co-founder of Reddit, he's going to tell us about his big new investment. You do not want to miss it. Squawk Box coming back after this. Welcome back to Squawk Box this morning, and it is some news for you. MasterCard now teaming up with crypto startup MoonPay to enable stablecoin payments with MasterCard cards. This is a huge development in the world of stablecoins. Join us right now, first on CNBC from Toronto, is MoonPay's founder and CEO, Ivan Soto-Wright. Good morning to you. Just because some folks may not understand what this all means, break down the technology here. So MasterCard, well, I won't even do it. You do it, Ivan.
Awesome. Well, thanks for having me again. It's great to be back on the show. From our perspective, we think stablecoins are a really big deal. It's actually quite personal for me. I'm half Venezuelan, and there are people all around the world that receive money from the United States. This is a new technology layer. Stablecoins are dollars on a blockchain. Anyone with an internet connection, anyone with a phone can receive money in the form of the US dollar at the speed of light, the speed of the internet. And from our perspective, we want to see this embedded everywhere. The next logical step for us was, okay, there's 120 million unique wallet addresses that have stablecoins, 30 million active users. How do we make that possible for them to spend those stablecoins? Logical next step was with MasterCard. They've been a phenomenal partner. We've been working with them over the past couple of years. Shout out to Michael and Sherry, the president over at MasterCard, to bring this to life. But we want to make this more accessible. MoonPay has been about building the backwards compatibility of the existing financial system. So this made a lot of sense.
I want you to sort of project out what the financial future looks like, because I sometimes don't think that the audience and all of us totally understand where this all goes. Because it feels to me, once you get to a point where a MasterCard or the Visa network and everybody is in stablecoin land, actually sort of finance actually fundamentally changes.
For sure. I think cryptocurrency wallets are going to be embedded everywhere. It's ultimately a new internet native technology. If you think about the legacy system, we had all these financial systems in different parts of the world that didn't communicate with each other in a shared language. Blockchains are that shared language. Stablecoins sit on top of them. And so we think it's going to be a natural next step that every single financial institution recognizes its importance. And so that was part of the reason last time I came on the show, we acquired Iron, which was a developer platform to bring APIs, bring really simple to easy to use infrastructure for any business to embed stablecoins.
In terms of how, though, this fundamentally disrupts the banks or the traditional financial system, I mean, here you have MasterCard doing this. At some level, is this going to cannibalize any part of their business?
I think this is like a natural evolution. So we've seen technology leaps. This is the next technology leap. Everyone's going to recognize that internet native money movement, it just needed to happen. Like, the next generation, my generation, isn't going to put up with days and very costly expenses for moving money around. Traditional remittance providers would charge up to 6% if you wanted to move money from the United States to another country. You can do this at a fraction of a penny with a stablecoin. And so from our perspective, the best technology will ultimately win, and our job is to democratize it.
What about tracking money? So the government has an agency called FinCEN. People don't talk about it that often, but really does try to look for money movements that might be suspicious or nefarious or things like that. Once you move into this world, how regulated is it? How unregulated is it? And does it need to be policed?
Yeah, well, I'll say I think it's actually far safer on the blockchain. There's incredible companies, Chainalysis, Elliptic, a bunch of these blockchain analytic firms that enable you to track transactions on a blockchain. So I'd argue, there have been a lot of arguments around nefarious activity in crypto. It's actually a relatively small proportion. We're talking under 1%. And the reality is it's much easier to track down illicit activity over a blockchain than it is through the traditional financial system.
How do you feel about meme coins and all of the other sort of coins that are now out there? Is that helpful to you, or is that giving the whole world that you live in a bad name?
I think we need to zoom out for a second. If you think about this industry, we did not have regulatory clarity for some period of time. A lot of assets have been speculative, but I think the next generation that we're going to see within the crypto economy is productive assets ending up on chain. We'll see stocks, we'll see bonds, we'll see all these traditional financial instruments ending up on chain. And so we can think about meme coins as an experiment. It's a toy, but this is going to evolve into something much bigger.
Kelly, I want to thank you. It is fascinating. At some point, you'll have to come back and do a tutorial, because I'm not even sure half of us understand exactly how this is going to work. But we appreciate it very, very much. Thanks. Congratulations.
like stable coins, digital dollars. It's all, Andrew, thanks very much. Coming up, Elon Musk's chatbot Grok drawing attention for giving users information they didn't ask for. That story and more when Squawk Box returns. Welcome back. The AI chatbot Grok, created by Elon Musk's XAI, has been responding to queries with unrelated information about violence against white people in South Africa. An NBC News review of Grok's X account since Tuesday showed more than 20 examples of such responses, in which Grok mixed in comments about violence in South Africa to answers not related to the topic. In one example, a user asked Grok, "Where is this?" in reference to a photo of a walking path. The user didn't mention South Africa, and the photo does not appear to be from that country. Grok responded, "The query asks about the location of a scenic image likely not tied to South Africa's farm attack debate." Later in the response, Grok said on the broader topic implied, farm attacks in South Africa are real and brutal, and went on to elaborate on such claims. It's not immediately clear why the AI bot has begun bringing up the topic unprompted. Elon Musk has been ramping up his rhetoric on the issue, and the U.S. recently welcomed 59 white South Africans as part of a refugee agreement that included claims of racial discrimination and violence.
It's crazy. Coming up, what the charts are telling us about the next levels to watch for stocks, gold, and oil. Lawmakers, meanwhile, racing to get the reconciliation bill to President Trump by July, but Congressman Chip Roy of Texas is looking for some big changes, specifically, and we've talked about it a lot here, with Medicaid. He joins us when Squawk Box returns. Negotiations are continuing on Capitol Hill as Congress races to get a reconciliation bill on the president's desk by July. Our next guest says his support requires significant changes, adding to the number of Republicans still on the fence. Joining us now, Republican Congressman Chip Roy. Congressman, it's good to see you. And there's, on the one hand, I think that don't let perfect be the enemy of the good. And there's been times in the past where I've seen you on cable and thought, well, that guy seems a little intransigent at times, and sometimes I think you're going to have to get whipped by someone. But on this thing, I think you're 1,000% right on Medicaid, and Republicans are wimping out, and they know they're wimping out. But I don't know if they've got an alternative, because you got a lot of your peers are going to lose re-election in places where Trump barely won. So it's tough, but you're right. On Medicaid, they are basically entrenching that deeply flawed Obamacare Medicaid expansion that benefits able-bodied men at the expense of people that really need it. And the Republicans aren't doing anything about that.
Yeah, well, the President of the United States, President Trump, and his Secretary of Treasury Bezos, are doing a fantastic job, and the Secretary has laid out an objective of obviously getting our deficits down to 3% of GDP. Through strong economic growth, through the tax policy that we want to extend that the President put forward, I believe that's one piece of the puzzle that we must go do. But right now, we are not going to address the key drivers of spending that will make it impossible for the President and the Secretary to achieve that objective. Bond markets are on a knife's edge. You know that, and I know that. And that is necessary for the free flow of capital to have that economic growth. If we continue to allow Medicaid to consume our budget and allow us to continue to drive that budget up so deficits go up, then we're not going to be able to achieve those objectives. Medicaid right now is now $1 trillion higher baseline than when we came in under Biden. We are spending $620 billion a year on Medicaid compared to $400 billion in 2019. And if we allow this to continue, where we're, as you said, continue to fund the able-bodied in massive expansion states, heavily in blue states, if we were doing that at a 7 times dollar value, imagine that. If you're listening to this, we, the federal government, are funding Medicaid 7 times higher for the able-bodied than for those who need it, the vulnerable, the sick, the people who truly Medicaid was designed for. What kind of a country does that? It's ridiculous. And by the way, if we do this, we are going to cement Obamacare, and the 10 non-expansion states like Texas will have incredible pressure to expand, and that will eat up all of the so-called savings in this bill, which, by the way, are backloaded. You know that, and I know that. And if you have backloaded savings, they never materialize. That means deficits go up, and under our bill, debt will be $56 trillion in a decade. That's not winning. We've got to change it. Republicans should do better.
I mean, even the work requirements don't happen immediately. Those don't even, I mean, that's such a like sort of a mealy-mouthed little provision, and it's not even until 2029, right? When that kicks in. The only thing, Congressman,
I
is that... I
couldn't believe it.
Yeah, go ahead.
No, I couldn't believe it when I read those were the provisions, that the work requirements were supposed to be the core engine of Medicaid reform, which isn't good enough. You have to deal with Medicaid, you have to deal with the expansion population, you have to deal with the money laundering. But the work requirements were basic. They don't kick in until 2029. They have waivers even once they kick in. And by the way, we're not even talking about the Inflation Reduction Act and repealing those subsidies that go to Chinese companies and big corporations. Most of those don't kick into 2029. My friend Alec Epstein, who's genius on this stuff, has been poring over the language, and most of those subsidy reductions don't kick in until 2029. So we're going to continue to push these Green New Deal projects, weaken our grid, which we need strong grid. Yeah.
And instead of this, this tepid, bill that we're talking about, even the way it is now, the Democrats are already going to demagogue the living hell out of what Republicans are doing where it is right now with what you're talking. So why not do something actually substantial? Well, you're going to get it either way.
So
go ahead.
Yeah, the Wall Street Journal was great on this. Morning before last, where they pointed out, look, you guys are taking in all the arrows because you're touching Medicaid, they're gonna write all the ads that we're pushing people off the cliff. And so we should do the right thing. Let's do the fiscally responsible thing. But here's what's really important. Let's make sure that people who are vulnerable and are sick, they're the ones that the program is focused on. Let's preserve capital and free up our healthcare system so we can drive down healthcare prices and free it up for the average hardworking American. We have plans to do that. Strong, robust health savings accounts, getting the competition back into the system. We can do that, and you can do that by drawing down all these subsidies on Medicaid, which are subsidizing blue states and massive expansion states at the expense of the non-expansion states, and the vulnerable at the expense of the vulnerable for the able-bodied. I think that's a mistake. Look, I think it's pretty simple. We should not be giving more to the able-bodied than the vulnerable. We should not be giving more to Medicaid than Medicare. We should not be giving Medicaid to anyone who is ineligible, including those who are illegal. And we should kill all the scams that blue states are using to launder federal money to fatten Parenthood and all of their ridiculous programs. Republicans should lead to support the president. They're not right now. I can't support the bill as it is. And by the way, intransigence is the right thing to do in this town when we're $56 trillion in debt in a decade. I didn't come here to do that to my kids and grandkids.
Then you got the reality of the situation. And how many people are with you on this? And is it enough to scuttle the deal? And they're whippable. Most of them are whippable, are they not?
Well, there's a good chunk of my colleagues that are with me on the fiscal conservative side, but they're also struggling because they're deferential to the president, which I understand, wanting to get the tax policy.
He'd like to do it too.
We all want to
would like to do it too. But he's a realist and he's a deal maker, right? But go ahead.
But you also have the SALT caucus who want to have those massive inflated state and local tax deductions for blue states and for the high tax states. So this is the conundrum we're in.
And that is what it
continue down this road without changes. Yeah. And I've got a bunch of colleagues who agree.
Your feeds, we're getting some hits, and if you had just frozen completely when you were trying to make that point, the conspiracy types would have been that we cut you off. So I'm glad at least you came back I'm glad you came back to finish your thoughts on that. We'll see. I wouldn't want to be Mike Johnson at this point, though. It's going to be a tough road. Tough row.
Well, we've got to deliver for the American people and deliver for the president, so hopefully we'll get there.
Okay. Well, thanks for your time this morning, Congressman. Good to see you.
Thanks.
Meanwhile, it is just at 8 a.m. on the East Coast. You're watching Squawk Box on CNBC. I'm Andrew Ross Sorkin along with Joe Kernan. Kelly Evans is with us hanging out today. Becky is off on assignment. When we got a lot going on, though. Among today's top stories, here's a merger for you. Dick's Sporting Goods buying Foot Locker for $24 a share. It plans to operate Foot Locker as a standalone business and maintain the Foot Locker brands. You can look at Foot Locker up 82% because there's a premium on that. And then a lot of folks watching this stock this morning, Walmart. Take a look at where Walmart sits right now. 97.90, up just marginally. The company reporting earnings of 61 cents per share, topping estimates of 58 cents. Revenue missed estimates, but U.S. comp store sales up 4.5%. The Street looking for 3.9%. The company affirming its full-year guidance, so a sign that the consumer is hanging in there, if not better than expected here. But take a look at something that's not better than expected. United Health shares, they are falling precipitously, another 6% this morning. The Wall Street Journal now reporting the company is under investigation, it says, by the U.S. Justice Department for potential criminal Medicare fraud. In a statement to CNBC, United Health called the journal's reporting, quote, deeply irresponsible and said that it has not been notified by the Department of Justice of a criminal investigation. The company said it stands by the integrity of its Medicare Advantage program. So, Joe, we're going to have to get to the bottom of that one, and it may take a while.
It's a quagmire wrapped in a conundrum surrounded by a riddle or something. Let's take a look what the charts are telling us about the market right now. Joining us is Katie Stockton, Fairlead Strategies, a founder and managing partner and a CNBC contributor. It's probably rebounded faster and further than even you were thinking, I guess, Katie, at this point. Some people that are pretty smart are saying we go to new lows, and I'm thinking of Ken Griffin, I think, said that. I don't know, maybe since that China deal, maybe he's changed, but Steve Cohen just yesterday saying that. Is it petering out here, this rebound?
I think we're close. We've obviously seen a very massive relief rally, and it's been broad-based. And yet, within the next week or so, we are expecting signs of short-term upside exhaustion, and that is from the DeMarc indicators that are very widely used amongst the folks that you mentioned, in fact. So we are looking for short-term exhaustive indications here in the very near term, and that goes not only for the S&P 500, the NASDAQ 100, but also the ratios of things like growth to value, technology to the broader market. So the areas that have exhibited upside leadership during the relief rally should now flip very quickly to exhibiting downside leadership. So we are in that camp where we could see a new low relative to the April low. And we say that because on the monthly charts, there's been a really significant loss of long-term upside momentum. And we still have those counter trend signals that we've been talking about for a while, since November, December, that are active through about year end. So we think that we're in the midst of a bear market cycle, and that this is a violent but very welcome relief rally.
Yikes. So new lows on the S&P are that's frightening enough, but on the NASDAQ, which is in a bull or was up 24% or something from the lows. So that would be a turnaround. That would be a loss of how much in the NASDAQ to hit new lows?
Yeah, I mean,
forecasting?
Definitely more than double digits for sure. And so with that kind of decline, obviously people want to think about managing risks. So we're very, sort of attuned to the short-term metrics. What we're watching for specifically are for the moving averages, like the 20-day moving averages to roll over. That's usually an indication to reduce your exposure. When the stochastics, which measure overbought, oversold readings, roll over, that's another indication. When the VIX comes off of its lows meaningfully, that would be another risk metric. So those are the triggers in our work to reduce exposure. So we're getting close to that. And we'd start with the higher beta stocks that have driven the relief rally. That doesn't mean you go bring your equity exposure to zero. We do actually already have those signs of exhaustion in most European equity markets. So that's been an area of the global equity markets that has really outperformed. And so that's where we're first seeing those sell signals. And because the support levels are now so far away, even initial support for the S&P 500 is now about 6% below current levels, which doesn't create a great risk reward, with final resistance about 4% above. So we're in the situation where there's a good amount of room to support.
Well, we got to come up with some new names, I think. You're not saying that the NASDAQ is it's in a bull market, now it's going to go back into a bear market. So it was a bull market, went into a bear market, now it's a bull market, it's going back in. Everything we're seeing right now is a relief rally and a bear market to you, and the NASDAQ will enter another bear market soon.
So yeah, and we measure bear and bull cycles using our long-term indicators, things like the monthly MACD indicator, a very common trend following device. That'll help us know whether we're in a bear or bull cycle. We do believe that we're in a secular bull trend, so that's the good news. On the back of this bear cycle, we should have this great buying opportunity, and we expect that to occur sometime this year. However, for now, I think there's still some downside risk, as mentioned, and that is supported by those monthly MACDs, which are telling us that even with the relief rally, that we're still in a bear cycle.
Bitcoin seems correlated to high beta stocks at this point. Will that continue?
Yeah, so we think so. It's certainly not acting just like gold, especially of late. We've had a nice relief rally also in Bitcoin alongside equities as gold has pulled back. So we are seeing it more correlated to the NASDAQ 100 right now, and that means people are treating it as a risk asset. We think appropriately so. We have a neutral long-term bias on Bitcoin. It's obviously entered a trading range. Resistance is somewhat close to current levels within that range, so we're not active buyers, but we do think that Bitcoin has a place in a portfolio, a very small place perhaps at this time, even with a neutral long-term bias. We like the diversification that it can lend at times.
Okay, that covers, and just real quick, the 10-year, what's the upside on the yield that you think will hit this cycle?
The upper boundary of the range is about 474 for the 10-year. It is a
scare.
very neutral long-term setup. Within that context, we've had quite indecisive action in yields.
but I'm trying to figure out what kind of backdrop gets us to 474. I'm not sure. All right, thank you, Katie.
Of course, good to see you.
Okay, good to see you. Andrew.
Joe, when we come back, Reddit's co-founder Alexis Ohanian is going to take a stake in one of the most valuable women's sports teams, that is Chelsea FC, and he's going to join us to talk about that and so much more after the break. And ahead of this hour, several major economic data points coming up, and a speech by Fed Chair Jay Powell. Squawk Box coming back with all of it in just a moment.
Garden centers.
Welcome back to Squawk Box. Chelsea Women FT has a new minority investor, entrepreneur, Alexis Ohanian. He's now taking a 10% stake in the team in a deal that could end up valuing the club at over £200 million, or about $265 million. Joining us right now is Alexis Ohanian, the founder of Venture Firm 776, co-founder of Reddit. And it is great to see you, sir. I'm sorry we're not doing it in person. I just got to see you on Monday night at the Robinhood event, which I know you're on the board of, and you've done some remarkable work with them. So congratulations. But tell us about this. How did this come about? What's the backstory?
Well, you know what, 5 years ago, I was out loud and proud saying women's sports was just dramatically undervalued. That led me to, of course, become the founding control owner of Angel City FC. And I told folks I was just the start. And so I'm really proud here. You know, I set my sights on the other side of the Atlantic. And you know, if you just look at the trophy case, Chelsea FC really represents excellence, the top tier of women's football, women's soccer. And I'm just grateful to play a part now as a board member and a minority owner and really make it America's team. If you're going to have one team overseas as an American women's soccer fan, we hope it's Chelsea, and we'll do the work to build it up and let folks know.
In terms of the way you see all this go, there's so much money pouring into women's sports right now. How quickly do you think that the valuations will catch up, frankly, with the actual economics of the business? Because there are people in the business who I've been hearing are saying, look, this may work out, but it may take a little bit longer because the prices have gone up in a big way over the past year and a half.
Yeah, look, valuations have grown, but I think they're commensurate in the reality that this industry had been undervalued for far too long. And it's nice to see that the momentum has shifted so significantly. Brands are just starting to wake up to the value of investing in women's sports. And I think, look, traditionally media deals do drive a disproportionate amount of the revenue for professional sports teams, and that will take time to build up. Those media rights deals, they get sold on cycles, and I think we will see those continue to grow, commensurate with more and more fans tuning in and watching. But the reason I got so fired up about women's sports, aside from obviously being married to the GOAT, Serena, the business of it was appealing to me because as a social media guy, I look for heat online in the free market of attention. And you look at things like follower counts, ball don't lie, right? If you look at the follower count of the Chelsea Women's Football Club, that's 4 million people. 4 million people have signed up to say, I love this team, I love this club, I love these players, show me more. And when you look at that kind of intentionality, when you look at that kind of community impact, there's heat, and there's an opportunity for brands to partner, there's an opportunity to keep growing the fan base globally, and that was something special. You could look at that and think, all right, if this were any other type of brand, if this was any other type of platform, there's a lot of revenue opportunity there. And so yeah, these valuations I think have grown quickly, but I absolutely believe in them, and we'll see billion-dollar clubs in women's soccer one day in the not distant future.
How much do you think this is ultimately going to be, though, about television licensing deals and what that ultimately looks like? And I ask because right now, if you're the NFL or you're the NBA, maybe for the MLB, we'll see, you're winning. Other sports, it's actually a lot more complicated than that these days. And also, as you talk about social media and the follower count, I would just wonder whether we actually think people are going to watch games in their entirety. Maybe when you get to the playoffs, people do, but is it going to change? Maybe does it become a ticket sale game? Or is there going to be some economics on TikTok or on Instagram that we don't know about yet?
I'm glad you brought this up. I was an early investor in the TGL, Tigers Team Golf League. I bought the first team in that league, LA Golf Club. And this was very purposely built for a younger generation, and it had tremendous success in ESPN. I think first and foremost, yes, view counts matter in traditional television because that's where those traditional media deals come from. I also believe this generation of sports fan, the younger generation, the digital native generation, is much more used to seeing and consuming sports, not just in real time, but also in highlights. They're talking about it on online platforms. And so I think we're going to see new monetization methods for sure. And you mentioned a bunch of amazing legacy Big Four leagues. They in a lot of ways have this sort of lock-in. One of the biggest advantages to investing in women's sports and emerging leagues is that it's a green field, right? You can make decisions from first principles using what are the best ways to reach fans and drive revenue. And so I would expect some more creative ways as the sort of traditional television dollars do take time to come in. I'd expect some more creative ways to start building brands globally to drive more revenue. But yeah, there's a new fan in town, and they're consuming via their phone first and foremost all the time, not just when their favorite teams are actually playing on the pitch.
It's impressive.
Let me just go ahead. I was just going to pivot real quick to the idea of tech, which is AI, and how you actually think, we talk about social media in sports. How do you think AI is going to affect all this? Is there something in terms of how you think stuff gets delivered to us, how we interact with players, with teams? I always feel like you're sort of thinking out a couple years about where this all goes.
Oh yeah, no, I try to live 10 years in the future. That's how I can do this job well, very, very early stage investing in entrepreneurship. So I'm glad you asked. I think every major pillar of entertainment, we're going to see upended through AI in various ways. Movie crews and sets are going to get smaller. There's still going to be a room for Taylor Swift. My daughter's still going to want to go to see that concert because that's a religious experience. But sports is so powerful and frankly impervious to the AI revolution because we'll never take our kids to go watch robots play golf, right? That's not interesting. Sports is a fundamentally human experience. And as I actually see the world 10 years from now, every screen we see will get so much better at showing us what we want, when we want it, how we want it. Joe, if you want to watch Iron Man and be Iron Man, you'll get to see versions of that in the digital future. But sport needs to be human.
I was thinking about some golfers, and there are some robotic
No.
pro golf. But then I thought they're not like Bryson. I think that guy is like a mathematician or something. But then you see when he needs heart, then he's human again.
Yes.
They're not robots.
And to that point, Bryson's done an amazing job going direct on YouTube to show his personality. And he's running the same playbook of YouTube creators. And TGL's done a great job miking those guys up, creating that live moment and humanizing a lot of golfers that on the tour can't really be their full selves. So I'm incredibly bullish in this AI future for sport because it is so fundamentally human. AI is going to make it better to be a fan. It's going to make it better to train. It's going to make it better to do so much other stuff. But we still need to watch humans doing this amazing skill and craft. And I'm looking forward to it. I think it's a bright future for our kids.
You're not afraid
sport.
that we keep hearing these people warning about AI, and all the existential dangers and challenges, and even yesterday we spoke with Klarna, and the CEO said their headcount has shrunk by 40% as they implement AI. The people that they still have are more productive. But so there's a lot of changes coming.
Oh yes, no, those are real, and I think every CEO, especially if they're building software. Right now, we're seeing this dramatic commoditization of software. Right? It's getting easier and easier and easier to build high-quality software. Writing code is going to be one of the first areas that AI is going to be able to do better, cheaper, faster by 10x, 100x. And you've seen in just the last 12 months, I think any CEO worth their salt has to be making hard looks at how they've built out their teams and what they're doing. It gives a tremendous advantage to startups, because we've never seen the kind of revenue growth that we're seeing now for the companies we're seeding at 776.
What kind of industries? What kinds of across the board?
Pure software businesses. Doesn't really matter if it's a software as a service business, a marketplace business, consumer. We are seeing companies getting to millions and then tens of millions, and in a couple cases hundreds of millions in revenue with teams of a few dozen people. And that is going to be the new normal in software development. And it's going to affect various industries differently, but for sure, the ability of teams to function more like elite Navy SEALs, small, well-coordinated, deep culture, deep trust with these AI tools, is going to be able to outperform the sort of larger, slower Navy of thousands.
Can you look out 10 years and tell me if I'm still going to be Googling? Wait a minute. I'm not Googling. I'm not Googling right now.
Are you ChatGPTing? What are you?
I'm doing one of those. Yeah. Andrew taught me in the ChatGPT. It was easy for me to just use Perplexity, but I'm never hitting Google anymore. Am I alone?
It is. I think right now, I still wouldn't count out Google, but right now
they got to change.
What's ironic too is a lot of developers will say Gemini actually, from a model standpoint, is really punching above its weight, at least in terms of public awareness. But look, I think ChatGPT actually recently surpassed Reddit in terms of daily active users.
What 600 is a monthly, I think.
But yes,
it's huge.
They are huge, and that rate of growth, that tells me that consumers have sort of mentally shifted. And search, I think we all would agree, the list of blue links where
the first 8 are all ads that are not what you're trying to find.
Not a great user experience. Yeah. So look, Google pioneered this technology, ironically, right? And they had this innovator's dilemma and didn't lead the way on it. We'll see where that goes. Google still has plenty of lines of revenue, but I do think
I wouldn't be paying what I used to pay for search words and stuff.
Yeah. Well, and here's what's fascinating. Now that energy has shifted, so now it's very businesses are very incentivized to actually get content on places like Reddit, because I know that's being indexed by these LLMs.
Right.
But that, of course, challenges the veracity of what's there if people are trying to game it. Yes, Andrew.
I'm curious, by the way, that just real quick, I know we got to go. There's been this uproar, I don't know if you followed it, on Reddit about these scientists, or I don't know if they're scientists, professors doing this sort of study with AI bots all over Reddit. What did you make of that? What was your reaction? And is there a way to prevent that from happening in the future?
I mean, I've been talking about dead internet theory. It's not my theory, but as a proponent of dead internet theory for a while now, I do think people underestimate just how much of the content they see online broadly is either outright AI generated or in some way, semi-automated. And I think this is also at the crux of whatever comes next. Now that we've blown past the Turing test, defeating bots, even Elon, who I think genuinely wanted to curb it on X, has still these same technological challenges. Even asking for a credit card isn't enough to prove humanity. And Sam Altman has his WorldCoin. I think there's different approaches here. It's unclear to me which one is going to win, but someone someone with a ton of weight in the space is going to have to figure out how to do that, because people need to trust what they're reading online to really make this whole social media thing work.
We got to run, but before we let you go, TikTok, I know you're part of one of the various bidding groups. Any update? What do you think happens? Do you think that a deal gets struck in the next 90 days? Or I don't even think there's 90 days left now. We're probably down to 50 days.
Look, I am not in those rooms per se. I think President Trump's going to come to some solution that is good for Americans, and I've said, even if it's not us, I still want it to be something that's under the purview of an American entity. I think that's really important. But yeah, we'll see. We'll see where it goes. I do believe that being able to bring a platform like that on chain could be really compelling, but we'll see who wins the bid.
So, Haney, congratulations on the Chelsea deal. Look forward to seeing you again very, very soon. Joe.
Thanks.
All right, thanks, President Trump arriving in Abu Dhabi just moments ago for the next leg of his Middle East trip. More on that after the break.
Welcome back to Squawk Box with a quick look at futures. The Dow, of course, is under pressure by 185 points because shares of United Health are down once again. On these reports in the Wall Street Journal, the company might be under criminal investigation. All of that said, the Nasdaq itself is also down 143. So keep an eye on some of the selling pressure. The S&P is down 31 pre-market. And Walmart shares are coming off the highs from earlier on. The CFO speaking on the conference call will bring you the highlights bottom of the hour. Of course, they've talked about price hikes are coming in the looming weeks. Shares are only fractionally higher right now. Data after.
Welcome back to Squawk Box. Rick Santelli here live at CME HQ with a long list of important breaking news. Let's start out with our May read on Empire Manufacturing at minus 9.2, a little more negative than expected. That's the weakest number since minus 20, which was just in March. Now, let's go to retail sales, shall we? It comes in at 1/10, up 0.1%, with a positive 1/10 revision in the rearview mirror to 1.5, and that would be, of course, one of the solid numbers going all the way back to Jan of 23 for last month. But right now, 0.1 is a little better than expected. Strip Oz Autos and Gas, it gets better, up 0.2 with a 0.3 positive revision in the rearview mirror. If you look at X Autos, it's up 1/10, and in the rearview mirror, up 0.8 from up 0.5. That's a little bit on the light side. Now, if we look at the control number, or what I call core retail sales, we're expecting an up number. This is the disappointment in the series. Comes out minus 0.2, even though we had a slight positive revision of 1/10. In the rearview mirror. Minus 0.2 in this category would be the weakest. Well, second weakest of the year next to January when it's down 0.5%. On the inflation front, this is our April read on PPI. Minus 0.5%, minus 0.5%. This is a big read. However, in the rearview mirror, last month goes from minus 0.4 to 0, almost whitewashing it. But minus 0.5, that would be the biggest negative PPI headline going back to April of 2020, the COVID-affected years. Now, if we look at X food and energy, that comes in at minus 0.4. That would be the weakest in this number series. And if we look at X food and energy and trade month over month, down 1/10. That makes it official. All the monthly numbers are negative. And if we look at year over year, final demand, down 1/10 from expectations at 2.4. It's following a read of 2.7. 2.4 will be the lowest since it was 2.1 in September of last year. Year over year, X food and energy, that would come in at, let's see, year over year, that comes in at 3.1%. 3.1%. That's as expected, a couple tenths lower than the rearview mirror. We're not making as much progress on that front. And finally, if we look at X food, energy, and trade, 2.9, well below the 3.4 last time. 2.9 equals March of last year. 2.8 would bring the comp of Feb of 24. Initial jobless claims come in at 229,000, very close to expectations. And in the rearview mirror, 229,000. Makes the math kind of easy. Unchanged on the week. And I do point out, we haven't been above 250,000 going all the way back to, we haven't since October of 24. And on continuing claims, we're coming in at 1,881,000. So that makes it official now. We're back below the 1.9 million. The only read that we had there was 2 weeks ago, and that brought us back on a comp all the way to May of November of 21. One number left, folks, one number left, and that is Philly Fed. This number is the business outlook. It's a May read, just like Empire, and it comes in at minus 4. Minus 4 actually is way better than expected. Minus 26 in the rearview mirror. Minus 4 actually comes in as the best number since March when it was all the way up at 12 and change. You know, the PPI numbers didn't get the type of response I would have thought. We went from a 451-ish on a 10 to 449, still hovering around 4.5%. Yesterday's close in 10s was a 3-month high yield close. 2-year note yields, well, they only moved a couple of basis points as well. And I think the reason here is many aren't going to trust some of the numbers. Everybody really wants to see something from Liberation Day showing up. I don't see it here, but I think that's part of it, along with the notion that PPI, it's kind of the weak cousin to CPI. Many pay more attention to the consumer price index. Joe, long list there, but if you synthesize it via the markets, rates have gone down a smidge, and the pre-opening equities, well, they're kind of all hovering in the red, but not huge.
So to be clear, anybody that has the mute button on and didn't hear you thought that the CPI was up 0.5. So to be clear, if they're just watching our board, so to be clear, it's down 0.5 was the headline number, and down 0.4 X So let's just get that. Okay, there, good. Now it's fixed. Okay.
Yeah, no, Joe, did I do them right? I did say minus 45.
You
minus
did.
40.
You did while I was looking at plus 0.5.
You just want to put a big yellow highlighter on it, don't you?
I just want us to be able to tell people that are watching if that it wasn't up 0.5, because that would have been much hotter than the estimate. It's just it's not good. Thanks, Rick. Steve Leisman joins us now with more. We have not seen the worst case scenario on the tariffs as far as inflation goes. Not yet, anyway, Steve.
No, but Joe, I don't want to rain on your parade. I just have a question about the weather, maybe, when it comes to this report. If we were just a family channel, we could be very happy about the decline in producer prices. However, the big decline here is in this really funky category which measures margins. And
maybe
so
that's why,
the margin number...
Maybe why yields aren't falling as much, like Rick said.
Well, here's the thing. Because we have to care about... We're an everybody channel here, right? We care about the prices that people pay. And those are down and negative. But we're also a channel that caters to investors, and we care deeply about the profits that companies make. And so what this report in the PPI is showing is a big decline in margins, and that's really a big part of the source of the decline here.
Line? Companies are holding the line, Steve?
Well,
that's interesting.
Now that's where I'm at here, Joe. I'm getting there. I'm sorry I'm taking so long. It's a little complicated, but
we're used to it.
It could be. It's early days, Joe, but it could be that what we're seeing initially here is an absorbing of the margin, of the tariffs into the margin of producers in some cases. I can't say in all of the cases. That could be step number one. I was fascinated this morning by the Walmart report suggesting that the price hikes are coming, which means that they'll absorb margin for a while. So my point is, yes, it's very good that we don't... Sorry, Joe?
Yeah, they did say that. You're right. They said for now.
Right. Okay, so let me see if I can try to create at least an initial 7 minutes after the data narrative.
Don't rain like as much rain as we've gotten here in the last couple of days. Just a little bit.
No, I'm trying not to rain too much. I just want to say we need to be careful here from a profit standpoint, that this is what somebody has to absorb the tariffs here. Again, it could be early days, there could be other reasons for the margin decline here. I'm just telling you that the big part of the PPI decline came in this very funky margin portion. And Rick is right that the retail number was a little bit hotter than expected. However, just getting back to that, the idea that the control group is the part that feeds into the GDP number was negative, and a negative surprise suggests that there was this idea of the front running of consumers at the beginning of this, and now a little, especially when it comes to motor vehicles, a little fall off here. But very quickly here, just want to point out that the idea that jobless claims are controlled is a very good thing. Now, Fed Chair Jay Powell, he is talking right now, and I want to talk to you about this issue of the Fed in the process now of revising its framework review. Not sure how much all that matters. Some people think it matters a lot. He's saying that the change in the framework review, a long-term guide of monetary policy, will reflect significant changes in the economic environment since they last reviewed this back in 2020. The Fed, he says that the economy may be entering a period of more frequent and potentially more persistent supply shocks. He says higher real rates right now could reflect the possibility inflation will be more volatile. The Fed is fully committed, he says, to the 2% inflation target, but he adds the word today, which means perhaps they may go around and after they hit the 2% target, revise it. The Fed could consider changes to the controversial language that is in the statement about how it responds to shortfalls in the mandate around employment. That's a real interesting conversation for perhaps another day. Finally, the Fed could also reconsider average inflation targeting. That's where we're at right now, Joe, on this framework review. Academics say it matters a lot. I think guys who follow the Fed in the markets are not so concerned with this broader framework review. Joe?
Okay, great. Economists we got a couple of them here. And should we not cut? Joining us now, John Riding, as a chief economic advisor at Green Capital, believes the Fed should not cut rates. Andrew Hollenhorst, chief U.S. economist at Citi, and he thinks that the Fed should cut. I guess we'll just start by, I'll take a minus 0.5%. I don't care how we got
There's
there,
some
right?
revisions, though. Just it's
there were
unusually large.
revisions, but
We don't
if it's
usually see revisions like this. I mean, it took it from 2.7 to 3.4 and 3.3 on the core for the prior month. So that's a lot
Where'd
bigger.
that come?
A lot bigger
Where'd that
revision.
come from? Well, Wes, Riding, where'd that come from, the revision?
Well, revisions are part of the economic data, not the CPI, which we got earlier in the week. That just doesn't get revised, but in the PPI. But here's the thing, you're talking April. April 2nd, the tariffs were announced. April 9th, they began to be implemented. Then they were all changed again for the most part. Companies have about a little more than 3.5 months of inventory on hand. So the stuff that's being sold is probably largely pre-tariff inventory. So people in the markets want to look at the data, want to see the impact. The impact's not going to show up for a few months. And that's why it's important for the Fed. We talk about its average inflation rates. Faced an average inflation rate over the last 5 years above 3.5%. And it knows how it responded to the supply shock in COVID by continuing to ease, and that promoted inflation. They want to see what's the size of that price shock. Is that going to be transmitted into a higher sustainable inflation rate? And so it's just important to watch and wait. And let's remember, they cut interest rates by a percentage point between September and December of last year to recalibrate policy. I know they weren't expecting the kind of tariff increases that we had at that point, obviously, probably not even in March. So they have to wait. They can't lose the battle on inflation.
Understood, but it's interesting, Andrew, because in this case, and if the profit thing is right, I mean, anecdotally, I've seen the following. I've seen Hyundai and other automakers advertising, we will not raise prices. I've had Verizon reach out proactively and say, by the way, here's a new offer that we're going to let you lock in for a few years. None of that was happening during COVID, which tells me that the situation is dramatically different, and there's a sense, and we've seen this in consumer sentiment and so forth, that maybe the consumer is not, you can't just keep shoveling along these price hikes. So I don't know, and you think they should cut here?
Yeah, I think so, Kelly. I think the number that we should be focusing on is retail sales, which is down for a second month this year. It was down in January, down again in the control group in this month for April. And that's showing us that consumers no longer have the same spending power. Exactly to your point. Demand is softening. When demand is softening, you should be a lot less concerned about inflation. So absolutely, I agree, John, they need to win the battle with inflation, but this is not an inflationary environment anymore. We have commodity prices that are down, we have house prices that have cooled down, and most importantly, wage growth has slowed. So COVID was an experience where we had a negative supply shock, there were supply shortages, and we had really strong demand. Now we're getting that negative supply shock, but not with that strong demand.
And people that hate the tariffs say, they pointed out how much this could hurt growth with the uncertainty, with the companies not wanting to deploy capital, and consumers not wanting to spend, and inflationary effects. They get to have their cake and they eat it too. They can worry about that. But when the inflation doesn't show what they were worried about, suddenly they abandon their growth concerns. I mean, it just seems clear to me if the inflation numbers are coming in a little bit weaker, and we're waiting for these growth effects, which are also lagged. Don't you think growth effects are lagged too? Why not preemptively do it?
Absolutely.
Why not preemptively do it?
Because easy money is not a substitute for a shortage of goods. Look back to 1973-74 and the oil price shock, which was a smaller shock to the economy in terms of cost.
I'm trying to understand what you're saying. So there's going to be, you think tariffs are going to cause a shortage of goods?
Stagflation. And it may work out like you imagine it work out, Joe. It may work out like I'm forecasting. The truth of the matter is, we don't know. And we don't even know what the tariff rates are going to be at this point, because we're still in this renegotiation phase. The unemployment rate's 4.2%, which is right on top of where the Fed thinks full employment is, and inflation is too high. And yes, April, which is going to be a very noisy month, it is a bit better than we thought. But it's too soon to see what the impact of the tariff increases are. I paid in terms of stuff. If you have stuff coming to the U.S., you pay the higher tariff. You have to pay UPS or FedEx to get those goods delivered, or they don't arrive.
Why do you say we're not in an inflation, Andrew? We're not in an inflationary. You basically said that we've almost conquered that bugaboo, right?
It's not conquered. We're still running above target.
But you're worried more about the other side.
You just have to decide what are you more worried about. And I totally understand wanting to wait until all of this passes through the economy and we can see exactly what tariffs have done to the economy. But by the time you wait, this is what we learned during COVID. If you just wait and wait and wait, you will be too late. That's what happens. That's what happened in COVID when the Fed waited to see, is inflation going to be persistent? By the time they hiked, we already had persistent inflation. What worries me now is by the time they cut, do we already have a labor market that's weakening?
You guys are definitely on opposite sides. You've been pretty hawkish on inflation for a while, John, right?
Yeah, and as I said, look back, the biggest mistake the Fed made, this framework review, well, not biggest mistake necessarily, but back in 2019, when I participated in the Chicago conference and was right when the first round of tariffs were announced against Mexico and Canada, the big was this average inflation forecasting, which led the Fed to respond too late. So we've seen an inflation rate of 3.5% for the last 5 years. And the public hates inflation. It's not positive for growth.
Do you think, and we got to go, but, and when you were talking about we don't know where tariffs are going to be, don't you think we're kind of in the deceleration of the trade war phase at this point and not in the, do you think we could get back to acceleration, Andrew? Or do you think, it seems like there's been a, I don't know, a bit of a, like that part of the administration, the Besant side, the Elon Musk side, Navarro seems like he's been put on the back burner.
Yeah, that move over the weekend was surprising. We went into the weekend thinking 80% tariffs. We came out of the weekend with 30% tariffs, right? So you have to think things are de-escalating.
Like we're de-escalating.
De-escalating is one thing, but the post-war growth system was based on tariff reduction through GATT and the World Trade Organization. And the question is, how's the rest of the world going to respond to what the US has done?
All right, you guys aren't going to agree. Anyway, thank you both. Andrew, like us, Andrew, we agree on something.
Someone's got to give me the bottom line, Joe. I don't know what to think. Is good or bad in the end? I mean, after that debate, I don't know. Right?
I don't know. You don't want to cut. I want to cut. I think we're ready. Not because of Trump, but I think they're always late. They never look forward. It's always rear view mirror with the Fed. What else can they do? Data dependent.
Yeah. Okay. Well, you know what? We'll debate this some more in just a little bit. But when we come back, President Trump arriving in Abu Dhabi for the next leg of his Middle East trip. We're going to take you there live after the break. Plus, Walmart giving back gains from earlier this morning. Highlights from the conference call straight ahead. Do not go anywhere. Squawk Box. Come right back. Welcome back to Squawk Box. President Trump arriving in Abu Dhabi earlier this hour. Dan Murphy is on the ground as we speak. Dan, good morning.
Andrew, good morning again to you. Well, let's call it 3-4-3. What we see here is US President Donald Trump touching down in the UAE capital of Abu Dhabi just a short time ago. The focus of his trip here is, of course, going to be continuing the run that we have seen when it comes to deal flow and diplomacy as he continues to build out the US economic and foreign policy relationships in this part of the world. Just by way of background, this was the first time that we've seen a sitting US president actually visiting the United Arab Emirates in some 17 years. The last leader to come here was George W. Bush all the way back in 2008, which really underscores the significance of this visit. And of course, as I mentioned, the focus is going to be on the deal flow. What we're looking out for is a potential transaction between NVIDIA and the United Arab Emirates. We could potentially see here an agreement for NVIDIA to sell up to 500,000 of the most advanced US chips into the UAE. That would, of course, not just be a catalyst for NVIDIA, but also a significant development for the Emirates, which is, of course, trying to build out its AI capabilities. At the same time, we're also watching for any potential news on what could also be an announcement from OpenAI as well. So watch this space. And of course, all of this coming as we also saw the president making waves in Saudi Arabia, signing that $600 billion US commitment on investments, and of course stops in Qatar that included a $1.2 trillion agreement according to the White House, and now the focus also shifting over to the UAE, where that investment run, at least according to our sources, is likely to continue.
Dan, in Abu Dhabi this morning, want to thank you for your reporting. It's been fascinating to watch the president as he's been making his way through the Middle East. Kelly?
Andrew, thanks. Coming up, shares of Walmart retreating from their earlier gains. We'll dig into the earnings and the conference call and what they're saying about price hikes, with the shares now negative pre-market after this.
Download Dave.
Welcome back. Walmart's been interesting this morning as shares were initially higher by 4% pre-market after earnings, but they've now turned lower by almost 1%. Joining us now, fresh off the call, is one of the analysts who covers it, Michael Lasser, UBS equity research analyst over at Michael. We appreciate you joining us this morning. Why the turnaround?
Good morning, Kelly. The reason why there was a slight turnaround in the stock was the commentary around tariffs and some uncertainty. Plus, they noted that the second quarter could have a wide range of outcomes, but that's largely due to technicalities like the way that merchandise is accounted for. If we put that aside, there are really three important points here. First, Walmart is executing at a high level. Its momentum is strong. It generated 4.5% comp increase in 1Q, driven by 1.5% growth in traffic. Two, it reiterated its guidance for the year, and that shows that it's able to manage its business effectively. And three, within that guidance, it assumed the tariffs that currently stand will persist, showing that it can really deal with a host of uncertainties in this current environment.
So, in other words, we knew some of this thanks to Courtney and to the initial release. We knew, okay, prices are going up and so forth. Can't quite, see what's going to happen in Q2. So it's just interesting that initially, I don't know, what did they seize on initially? The comps?
So, two things that were in focus. One was the company said if tariffs remain elevated, then there could be some downside risks ahead. Now, when they clarified what elevated means, that definition is a higher rate than we stand today. So there's still uncertainty on the horizon. The level of tariffs that were in place as recently as last week from countries of China is going to be very disruptive, at least in the short term. And the comment was meant to convey that message. And two, there is a bit more near-term uncertainty given the way that this is going to be accounted for. But if you're looking at the big picture, which we think is important, nothing has changed about the story. It's still in a great spot, and investors should own Walmart from here. We want to coin a new term. When the market freaks don't have a cow, own high quality Costco, O'Reilly, and Walmart. COW. And Walmart is really high quality in this market. Don't have a cow.
O'Reilly, that's great company for O'Reilly to be in. I mean, they've done very well, but still, end up with Costco and Walmart. It's pretty good.
Those are high quality companies, and that's what we advocate. Stick with quality in this market. Don't have a cow.
Do have it.
Do it however you want to look at it. However you want to look at it.
I'm confused. You're trying to coin a term here. You say don't have a cow, but buy Costco, O'Reilly, and Walmart. So do have a cow.
Milk it.
I like the way you're thinking. Exactly.
Michael, thanks. Really appreciate you joining us. Michael Lasser.
All right.
Have a cow.
Yeah, have a cow. Don't you love? I love root beer and milk for black. Don't you love it?
What's that?
Black cow.
I've never heard that.
Oh my God. Final check on the markets down 157 points now. A lot of that United Healthcare. We got to go, Andrew. We'll see you soon. You'll be back.
We'll see you tomorrow. I'll see you tomorrow.
You'll be here tomorrow. Maybe I won't. Yeah, make sure you join us. Right. Join Andrew. Squawk on the Street is next.
Good Thursday morning. Welcome to Squawk on the Street. I'm Carl Quintanilla with Jim Cramer, David Faber at Post 9 of the New York Stock Exchange. Pre-market's a bit lower on a morning of very noisy data. Retail sales, PPI, claims, Philly, Empire. Bottom line is long-term yields are higher. 30-year yield 4.99. Our roadmap begins with the country's biggest retailer, Walmart, posting its first revenue miss in about 5 years. Tariffs set to impact consumers, they say, as early as this month.
Plus, United Health shares, they continue to drop. In fact, that's the worst stock on the S&P pre-market. And that's no different than a lot of days. What now? Well, a report that the DOJ is investigating the company for possible criminal Medicare fraud. Two tech CEOs are joining us live right here at Post 9 this hour. We've got an exclusive with Cisco's chief, Chuck Robbins. And we'll also have the CEO of CoreWeave following the company's first earnings announcement since it went public.
Dude, my one trader?
I mean, why ask him like it's a question? You know
It's Tia do the phony TV stuff, period.
Yes, we do. Michael Antrader, the CEO of CoreWeave, will join us as well.
Let's begin with Walmart reporting this quarterly beat on earnings and a jump in U.S. comps despite overall revenue that was just shy of consensus. CFO tells CNBC the tariffs are still too high, and as a result, price hikes could begin later this month. Jim, he told Courtney Reagan these tariffs, the magnitude is more than any retailer can absorb, more than any supplier can absorb.
Okay, I'm going to take the other side of the trade here. I think the stock was up initially because look, they have a very conservative management team. No one. If they're complaining, can you imagine what the other guys are looking like? I mean, they're going to be able to hold the line better than anyone with the possible exception of Costco, which is one of the reasons why Costco's up. So, David, you know Walmart better than anyone. You know that Walmart,
I appreciate when you say that. I just feel as though, there was a time when I knew the company extremely well because I did 2 documentaries on them. That time is not now. That said, I try my best to understand what's going on.
You have e-commerce finally breaking into black, and you know that the fact is that if anyone can hold the prices down, it's going to be Walmart.
Absolutely
They're going to hold them down more than everybody else.
Absolutely true. And one thing that has not changed is the culture, obviously, under Doug McMillon over what is now a significant number of years as CEO and obviously a track record of great success at the company as well. And you can see that reflected.
So let it come down a couple bucks and then buy it because no one's going to be able to touch them.
You think it actually widens the gap between them and their competitors?
I certainly think that's
in terms of how you
thinking.
navigate tariffs, the high tariffs that were in place for a bit of time, the lower tariffs that are in place now, and everything else.
It's scale. We know it's scale. So let's say there's a tug of war between Target and a supplier, or even Kroger and a supplier. I can tell you that Walmart's going to have a tug of war that's going to win. But right now the stock wants to go down. It was up 2.5 earlier. Right. There are a lot of people who say, "Wow, I didn't know Walmart was going to be hurt by this." They're not saying that.
Well, they did say a restoration of those dramatically higher tariff levels would not only impact financials significantly, but would jeopardize the ability to grow earnings year on year.
Yeah, that's true. I think that but I think that the president met with Doug McMillon, and one of the reasons why I think that the president decided to put a pause on it was Doug. I think Doug's very persuasive. I know we got David Rainey. He's a very conservative man. He's an promise over deliver guy, and we got to take that into account.
He's the CFO of Walmart.
CFO. But right now, I think that people are afraid. And then I think it's a big mistake to be afraid because you have to put this all relative versus the competition. We are now going to be in a position where the only ones that can able to really have scale are Amazon, Costco, and Walmart. We have a big 3 situation developing, which is one of the reasons why Kroger wanted to buy Albertsons so badly, precisely because of this.
Yeah, and they were unable to do so as a result of antitrust opposition that succeeded in court. Their argument being, we're not competing against other grocers, we're actually competing against Amazon.
And well, I thought that was so
Walmart.
right, and I just think that, look, I happen to like Kroger very much, but I've got to tell you, this is a tour de force that Walmart can really go to the press and say, look, this is going to really hurt people. And alternatively, Walmart's going to be able to go to the suppliers and say, look, you can, like I know the Costco guys. Richard Galanti, former CFO, the conversations were not like, hey, you know what, let's pass everything on. The conversations were like, oh, you ever heard of Kirkland brand? Well, we're going to put Kirkland brand right next to you. Kirkland Signature is a premium brand that is a house brand. And you don't want that conversation. And that's what will happen. Costco's up.
As for the influence that the big boxes are having on the administration, Doug McMillon did reference the president and the Treasury Secretary on the call. Take a listen.
I want to thank President Trump and Secretary Bessent for the progress made recently. We're hopeful that it leads to a longer-term agreement between the U.S. and China that would result in even lower tariffs. We will do our best to keep our prices as low as possible. But given the magnitude of the tariffs, even at the reduced levels announced this week, we aren't able to absorb all the pressure given the reality of narrow retail margins.
They went on to say, Jim, they're going to try not to let tariff inflation pressure on general merchandise affect food. But there's going to be some categories, avocados, coffee, bananas, where they're just going to do their best.
Yeah, look, I mean, in Mexico, the food could be staying the same. That's where they get a lot of their stuff. They actually produce, they have a lot of American. They always say, listen, if you want to know how much is really done foreign, we don't have as much foreign. Right. But they always include the food, and that's how they keep the foreign number down.
Listen, taking nothing away from their success and continued. In fact, that 4.5% same-store sales number ex-fuel is quite strong in North America.
Doesn't it matter?
But the stock does trade at almost 40 times earnings.
Well, again, that's because we're in a situation where you have a scarcity value of winners. I mean, I know Kohl's doesn't have clothes, but Walmart's changed its clothes policy. They decided to have good-looking clothes.
As opposed to prior.
For a long time, they were trying hard not to. You're saying?
At my 20th anniversary party, did anyone notice my eldest daughter's combat boots that she bought at Walmart?
I'm not sure I did.
Can you give me a...
What do you want, a rim shot?
Yeah, rim shot.
Yeah.
No, I just think... let them sell it down. The stock is expensive.
It is expensive.
All right, well,
to that point.
We have David, we have a two-tier market. We have stocks that are three-tier. We have Palantir, we have two very expensive stocks, and then we have cheap stocks.
Yeah, but Walmart that's a higher multiple, and I would argue that it's traded at in a very long time.
Apple's multiple's very high, and you heard what the president said yesterday.
The president does seem a bit fixated on Apple and Tim Cook, and
I thought they were friends. You're no longer friends.
I think it'd be hard to characterize their relationship without really knowing.
That's true. But the president was quoting himself, which I always like.
Oh, saying that that they thought.
Yeah.
They were,
look, I just think
the story on Apple, of course, the key one is that there were some public comments made by the president in terms of why aren't they making, why
his line was, he says that he told Tim Cook, quote, "We're treating you really good. We put up with all the plants you built in China for years. We're not interested in you building in India."
Well, that's the whole plan, is to build in India to sell here. I don't know what can really happen. I know that unless he builds some plant here to make phones, I don't think it's going to end.
Jim, I just, the cost, I mean, anybody we have spoken to on this matter, and obviously things can change, particularly as you automate more and more, has indicated the cost would be prohibitive to sell a U.S.-made iPhone.
But I just think that you see Taiwan Semi coming here, and Taiwan Semi is able to make very good chips here.
So Apple should be able to as well.
I mean, that's that's not analogous.
No,
it's not analogous.
Okay, I am saying that the president doesn't care whether they make or lose on the phone. He wants a plant here to make phones.
All right, but they're in business to make money.
Sometimes you have to have. Sometimes you just get had.
Yes, sometimes you do, but in this case, I think there's a willingness to spend on things that they can make in this country and do so at a reason and still have significant market share in said product and profit margin associated with it. That's not necessarily
you're absolutely right. But the question is how many other things can they do in America that makes it so that it's a moot point?
Well, I think they thought the headline number of $500 billion over a period of years would be enough, perhaps, to win them some goodwill.
I would have thought so too. I think this is to be continued discussion. And by the way, everyone's saying Treasury Secretary Besant, kind of what can we do? Let's more of almost like a commerce secretary in trying to promote the United States, and that's new. I mean, Treasury Secretary, the previous Treasury Secretary, she really wasn't involved in these kinds of things. But this is an all-new president. I mean, he's getting deals for Boeing. We're going to talk about NVIDIA deals. I mean, the guy, he's got like the art of the deal when it comes to American business.
And he's taking with him a contingent of businessmen. There's a picture of him next to with Larry Culp sitting next to him.
Ortberg and Culp. I mean, the guy, don't you wish we were over there? We get numbers. We went over there. Yeah, my friend Jim and Carl, he does it with David Faber. I mean, it's just incredible the amount of money he's bringing in. Meanwhile, what's China doing? They're giving money to Colombia. I would rather get money from the Gulf than give money to Colombia. What's next? What other countries they got lined up? Paraguay?
Well, there are geopolitical arguments that say that they're increasing influence in South America and
giving money
Latin
that
America.
they don't have. I mean, that Alibaba was down. We're getting money. See, it's always better to get than to give, unless you're like in a charity. Remember you like saying
you actually sound a lot like the president explaining you never turned down a gift.
Right.
Yeah, that's actually...
You look gift
be a
horses in the
stupid
mouth all
person
the
to
time.
turn it down, Jim.
He's a dentist. He's a gift horse dentist.
When we come back, an exclusive with Cisco's Chuck Robbins this morning here at Post 9. We'll talk about earnings, AI, and a lot more. We'll get to a bunch of movers. There's so much news today. There's UNH, Core Weave, there's Dick's Foot Locker, some Starbucks, and Baba News, as Jim said. We're back in a minute.
sometimes make it easy around here. Cisco shares moving higher, sharply higher. Company reported another strong quarter thanks to the AI boom, but also to the traditional business. Joining us here at Post 9 is Cisco Chairman and CEO Chuck Robbins. Chuck, first of all, congratulations. I know you just came back from the Gulf, and you came back with a slew of orders.
Well, thank you, Jim. We appreciate it. We're really pleased with where we are right now. We had a really good quarter. The team executed really well, and in particular, on the AI front, we started talking about investing in this space a few years back in the web scale space with the silicon investments that we're making, and they're paying off right now. And to your point around the Gulf, yeah, I was there last week since I couldn't be there this week. Our newly promoted president, G2 Patel, is in the region this week representing us and has done a great job. But yeah, we've got a lot of great stuff going on over there.
Could there be almost like a hyperscaler when you put all those countries together?
I think that's the plan. I would expect what we announced with Humane and Saudi will look like one of the U.S. hyperscalers at the end of the day. It's going to be big.
But I don't want to short shrift the regular business was strong. Now, my colleague David Faber was earlier talking about stocks that are highly inflated in terms of the price earnings multiple. You have a 16 times earnings, but how many different quarters have you beaten? And this is probably the biggest beat I've seen of your career.
Well, I think we've been on a bit of a run relative to expectations for the last couple of years, but it's you said it. If you look at our enterprise, even our enterprise networking business, our campus switching business was up on high single digits. Our enterprise routing business was up in double digits. Our sequentially, there's a new technology in Wi-Fi called Wi-Fi 7. Our orders from Q3 over Q2 were up triple digits, and in the web scale space, as we talked about, it's the third consecutive quarter of triple-digit order growth there as well. So
no, it's great. Now, I do
and
want
the
to
telco was up, cable was up. I mean, all these.
No, these are cybersecurity. The Splunk order is good. Before I turn it over to my colleagues, one of the things that you talked about, I met with you with Jensen Huang in NVIDIA. I'm sure there's probably there's some ill-advised analysts who didn't realize that there could be some very big orders coming from that, but they didn't flow through this quarter. But that partnership with NVIDIA is a good one.
It's a great one, and we haven't really delivered the solutions yet. That's what we were talking about on the call. A lot of that begins to roll out in about 60 days from now, and some of that's their development effort, some of it's our development effort. But we've got a multifaceted partnership. I talked to Jensen last week, and he's already talking about let's figure out what the next thing is that we can do together. And so he's full of energy,
As for overall industry AI infrastructure capex, it doesn't sound like you think we're going to peak this year.
It sure doesn't feel that way. Doesn't feel that way. I think this is why, even in the midst of macro caution, I think that this transition is so big for all of our customers that they're not going to slow down unless they're absolutely forced to at the end of the day. Because they're concerned about falling behind. They're concerned about what their competitors might do. They're trying to make sure that they're taking advantage of this technology to gain productivity, improve customer experience. I mean, it's just so much positive from this.
Was there any moment in April where the macro caution you felt could ding some of that momentum?
It didn't. It never happened.
And across the rest of your business too. I mean, that was because we've heard so many CEOs talk about uncertainty and perhaps a desire to sort of just wait it out, and yet that doesn't seem reflected in your numbers. That AI kind of is its own thing. I get it.
It is.
But in the other part of your business,
flowed through the revenue really yet.
Right.
So.
But on the other part of your business, you didn't see any real pullback either, did you?
We haven't. I mean, we saw a little weakness in Europe, a little bit. I mean, if you look at our organic order growth rate, the Americas was 12, Asia was 10, and Europe was 1. And if you really look inside that, it was UK public sector, Germany public sector, and France in general had a tough quarter. But I mean, do you read anything through to that? I don't know. I don't think so. I hate to be effusive because I am aware of the uncertainty, and I'm certainly aware of the macro pressure and the potential, and the way that the information we're dealing with changes daily, hourly, weekly, and so it's something that we're paying attention to, and I'm not suggesting it can't change, to be clear, but we haven't seen it yet.
Yeah, things can change quite very quickly. I mean, on the call you made the point a couple of times in terms of AI. It's non-linear.
Yeah.
Well, what are you trying to tell people by saying that?
These are big customers that place big orders, and then they digest the big orders, and so you can't. If you look at it one quarter at a time, then you may see you may see some data and you come to the wrong conclusion, right? I think in Q2 we took $350 million worth of orders for AI infrastructure. Q3 was 600 million, over 600 million. Right. So they're ramping, and this is an area, as we talked about a lot, when I took over, we were nowhere in the web scale space, and it took us years to get the products to where they needed to be, and so this is pure share gain for us.
Right, and again, I mean, no let up that you're aware of or seeing or expect, I guess, even though it may be non-linear in that way, but ultimately it's higher.
No, we have, I mean, unless they throw us a curve, the beauty of these customers is you have a long view to what they're going to build out, because you get design wins, and then you actually go work on the chips, tweaking the chips, or there's a new chip that isn't quite finished that they want to have, and we have to do all that work. Then we got to get in their labs, and so you get a design win, and it's 9 to 12 months perhaps before you begin to see that actually get implemented in their network. So you have a lot of long-term visibility. Doesn't mean they can't change their plans, because they do. As the market moves, the market shifts, they change their plans accordingly. And so, but it's a great place to be.
China, anything to add on? Is the picture reflected around the world there?
We had a strong quarter in China.
Come on.
And now it's literally 1% of our business now, so it's not super meaningful, but and a lot of that is multinationals that are shipping equipment in to support their network infrastructure. I'm not suggesting that things have changed relative to our position in China, but. So I'm not a good gauge of the economy in China.
But your own comments about uncertainty and how quickly things can change, and obviously we've seen that in the last 30 days. Yeah. Do you position the business any differently, or are you making decisions any differently in terms of given that environment?
We're maintaining flexibility, as much as you can, but we're like everybody else. I was talking to analysts last night, and they were asking about operating margin leverage, and I'm like, with all the opportunities we have right now, with everything going on, with the Splunk integration and cybersecurity and this AI thing, this is not a time to cut investments. We're actually investing more in silicon, more in cybersecurity, more in AI, right now.
All right, so Chuck, one of the things that I feel has changed is that even back to Liberation Day, I thought that the president was not necessarily going to, not that he was going to be like President Biden, but it didn't seem to be a friend of business. What has happened here? He is now openly soliciting an amount of business. I've never seen a president do this. What's going on?
Well, I think if you just, the strategy he's deployed in the Middle East, I think is brilliant. And look, it's been fantastic for us. I was over there last week, obviously putting a lot of the details together of what we're announcing this week, what's already been announced and to be announced. And I think that, I can't speak to his strategy relative to the tariffs. I think we're all watching that and seeing how it works. They're getting some deals negotiated. They made progress with China over last weekend, which was really encouraging. And so, but the effort in the Middle East is real. You saw the CEOs there. I would have been there if I hadn't had earnings this week.
But isn't it true? Our relationship in terms of boxing in China versus who China's making deals with, which would you rather be?
Well, I appreciate the position we're in because it's good for Cisco.
Well, that's kind of what I hope the CEO of Cisco
sort of my
would
job,
say.
right?
Right. I was hoping you'd reach that conclusion. Anyway, to your CFO, best of luck, Scott. He's a terrific guy. I hope he doesn't play too much golf because his back could hurt.
I know it's he's been a great partner for 4.5, 5 years here, and Mark Patterson, who we've announced that you guys will have to meet, is just a phenomenal partner to me. He and I have been working together for 18 years in various roles, so I know him well. He was the CFO of a company we acquired 20 some odd years ago, so he's and he knows the company cold, so I'm looking forward to having him.
All right, well, Cisco Chairman and CEO Chuck Robbins, David, 16 times earnings.
There you go. So a little bit different than Walmart,
yes,
right?
Yes, a little is. Yes, it is. Thank you, Chuck. Good to see you.
Take another look here at the pre-market as we get closer to the opening bell. 30-year briefly touches a 5-handle before pulling back. Stay with us.
NBC Plus.
CoreWeave with quarterly results. Remember all those concerns coming out of the IPO? Stock's gone from 33 to 69 in less than a month. That's more than a double. We'll talk to the company in just a few moments here on CNBC. Get a handle even further on the infrastructure plan. Stay with us. Let's get that opening bell in the CNBC Real-Time Exchange. The big board, Real Estate Investment Trust American Tower, celebrating its 30th at the NASDAQ. It is eToro, celebrating that IPO from yesterday, Jim, closed almost 30% above the IPO price.
There's real money being made, and I feel like that this is the beginning. We have an M&A deal, Foot Locker with Dick's, and David, you know that we're getting a couple IPOs. You're hearing a lot of the chatter that I am. Maybe in this window before the summer, we're going to have some activity.
Looks like we might, especially if the markets cooperate, and that's the key. course, because I think there had been a hope and an expectation that would have taken place in the first quarter. Didn't, but we are starting to see things pick up.
But if you're someone on the sidelines and you see what happened to eToro, don't you say, you know what, maybe I ought to get this deal done?
Yeah. Yeah, you file and you try and get out if you can, because you know the window can close very quickly.
Well, yes, it can, but I think this is a very bullish moment. Now, look, I'm conscious that even early in the morning, the NASDAQ was down hideously. So we have people who want to get out. Steve Cohen yesterday, man, I think is terrific. Owns the Mets. He's talking about pretty good chance of recession. So there are a lot of nervous holders, so it's not like there isn't a wall worry.
Yeah, Cohen saying not unlikely we revisit the April lows. Just what Paul Tudor Jones said. Diamonds on the tape today, not taking recession off the table.
Oh, I know.
But to your point about capital markets activity, second biggest footwear deal in as many weeks.
Yes, and you're talking about, for the Skechers, you're talking about really one of the finest people in retail. Mary Dillon, not giving up, because you can have some equity there, but what I do see is that Dick's was willing to pay a very big premium. To the point, obviously, where their stock is not coming down.
We're talking about the Foot Locker deal. Yeah. It's about $2.4 billion equity value. But the stock obviously got crushed, Foot Locker, in part because of concerns over.
She still got some money.
Because of concerns over tariffs. You can take a look, just go back where the stock was a few years ago. They're obviously not getting anywhere near the high. That said, it's going to be interesting to see Dick's sort of really solidify its power place in terms of the place you go to buy a lot of athletic footwear.
Well, I think that Lena Khan would veto this deal in a heartbeat, but now it's the type of thing where the FTC might just say, you know what, maybe we need a strong shoe company.
We might. Let me just give you since we mentioned it, 0.1168 shares of Dick's Common. So if you want to, you can benefit from the so-called combination if you choose to do so, or you can take 24 in cash. Up to you. They're letting people choose. And as Jim mentioned, we had that Skechers deal. I was at Milken, didn't really get to cover it very much. It was a $10 billion go private through G. That also, though some say, was done at a discount because of concern about tariffs that already is not nearly as much of a concern. And so on the Skechers deal, you got a bunch of shareholders who may look for appraisal rights. There's no vote of the majority of the minority. There's no go shop. But so Skechers and Foot Locker both out of the public markets in the not too distant future.
She turned on Altus. It's a testament that she was able to get this for her shareholders. I know the stock is down from when she took over, but remember Nike, the strategy of Donahoe and Nike was to be against, I think, Foot Locker and go for direct-to-consumer, which blew up Nike, but and her Foot Locker. But I just talking about capital activity. I mean, it's a buzz.
Guys, we got to talk about United Health, obviously. The stock is now down 14%.
Right.
It's been a stunning decline for this company's shares over a very short amount of time. Now, remember, first it was earnings that were well below expectations and differed significantly from their competitive set, whether it be CVS and Aetna or even Humana. Then it was a replacement of the CEO immediately. That just happened a few days ago. Now it's a headline, or a story, I should say, from the Wall Street Journal saying they are under criminal investigation for Medicare fraud, guys. And you're seeing, really, this has always been a $500 billion market cap or more. Now it's $250 billion. It's been cut in half. Cut in half. Obviously, still a member of the Dow, although they tend to try and get rid of they'll get you out of there fast if they don't like the way you're doing things.
Well, I think that we have to talk about the fact that if you're convicted by remember they say injustice is not civil, it's criminal. If they're convicted of Medicare or Medicaid fraud, mandatory exclusion from all federal health programs, including Medicare, for a minimum of 5 years. So, I mean, the stock being down 40 points, well, when you read this about what can happen in a criminal case, look, I know that their Justice Department was after them for monopolists, but this is, Carl, I got to tell you, Medicare fraud is, someone could go to prison.
In addition to the ongoing civil probes into billing, they were, of course, at one point the Dow's biggest weight. Now number 10. Mizuho today says if there's not stability, returning likely exclusion, although that doesn't mean a lot, really, other than prestige.
It's not index money, so it doesn't really mean anything other than your point.
I think your point that this was the king I mean, Optum was, it was the envy of everyone, and now it's the envy of none.
Well, as Carl said, I mean, there was the stories about upcoding in terms of their doctors saying, basically allowing them to get paid more for certain things. Because the upcoding the nature of a particular person's medical challenges, so to speak. And there are any number of other challenges they face.
They could be innocent for all we know, but I'm just saying.
Of course, and they say that. We haven't really heard much. It does make it, in these cases, the company's not going to be able to say much, so that is certainly the case. But
devastating.
I don't know. I mean, if you do get criminally indicted, Jim, I don't have the answer. I don't know that you do in terms of what that means for them, right? But
I think that there are a lot of people who, this is a very small group of companies, Carl, and you can just say, you know what, I'm done with United. I'm going to go over United. I mean, they're not 6 or 8 dozen, but this is the type of thing that I could question whether I want to be involved with a company that might be a monopolist, that might be convicted. Might as well get ahead of that. Now, again, you have a terrific chairman who just became CEO, and I don't want to. No one should be convicted on air for what's happened because we don't know the answer. But Mr. Hemsley, Steve Hemsley, he's got to move fast. He's got to move fast. Got to get this overhang.
We talked yesterday about the travails that the healthcare sector's had in general. Today, Merck actually had some good endpoints on Keytruda on ovarian cancer, but not doing a lot for the stock today.
No, and look, this group is just so horrible. Yesterday I did a piece at the top of Mad Money just talking about if the yields don't seem to protect anything here. David, Merck is a great company, but there's a Bobby Kennedy overhang here, and there's also, of course, Keytruda that's a cliff, but not here. But these stocks are so hated. I think AbbVie's a really great company. The stock's down 10 points. I mean, AbbVie's got franchises that are just killing it. It doesn't matter.
Yeah, Merck, I mean, has just had a horrible year in the stock market, down 26%. To Jim's point, you're talking about a 4.4% yield now, but not enough, I guess, to entice many holders.
Similar, not to switch.
Yes, the pressures, as you say, RFK Jr., any number of other things going on with administration, and Keytruda, which Carl just mentioned, is off patent in a number of years.
Let me answer something. Sure. PepsiCo yesterday hit 4.4%.
Yeah.
That's a very good company. Isn't there someone going to say, listen, I want a shot at this or something?
Well, we bounced off the support.
I don't know. I think fear
to the
is
penny.
a bigger motivator about these businesses than it is.
They're worried about the color of what?
They're worried about.
You ever take 3 cents?
They're worried. I don't know.
I mean,
you're better listening to.
Oh my gosh!
PepsiCo as to why they wouldn't be attracted by almost a 4.5% dividend yield.
You mentioned RFK risk, right?
Yeah. This is the one with, I think, this is the heaviest RFK risk because you got to put natural colors in. But I think that Raymond LaGuardia is doing a great job, but it doesn't matter. 4.4.
I know. How about 4.5 or 5 on the long bond this morning? I wonder if you think these yields on treasuries are keeping any kind of bounce in check.
I think that these stocks are just the combination of Bobby Kennedy Jr. and the competitor, the 10-year bond. I think people just find these just untouchable, which is amazing because these are some of the great American companies.
Yeah, we got to 5 on the 30, briefly pulled back after.
It'll be a hot, humid day outside.
By the way, Jim, as far as the macro goes, claims 229.
Right.
Retail sales were positive. Dramatic surprise fall in PPI.
I know, but Steve Leisman, our colleague, had some really good analysis of that. But I call attention to the fact
Steve
that the
Leisman.
industrials at John Deere. People immediately said, "Well, that's a bad quarter." Such a wrong read. It doesn't.
More drama on UNH.
Of the range, but Deere had a fantastic quarter. Walmart, I continue to say it had a fantastic. Cisco had a great quarter. CoreWeave had a great quarter.
Really? No, it didn't.
Hey, look.
I'm here.
We had a great awesome quarter.
What I miss?
Talk a lot about that, but I'll let Jim introduce.
Well, all right. So Nvidia backed along with a lot of other good companies. CoreWeave beat top and bottom line earnings estimates, reporting 400% growth. That is not a typo. In its first quarterly report in the IPO, and I've got to tell you,
Jake Paul.
It is great to have New Jersey's own. Not Silicon Valley.
Heard you was laughing at me because I'm late.
Michael Enchainer here, and Michael, I got to tell you, first of all, congratulations. At one point, when you were fighting to get that deal done, you and I got together. I checked out the data center. I said, "This thing is a gem."
Never too late for your kisses, baby.
The demand and how much money you're making, EBITDA. people got in on this deal. They made a lot of money.
EBITDA.
The stock's been performing well, but
I'm so full of
more
crap.
importantly than that, the company had
Mute. We're our red. Tesla's 238. PLTR down 17. Ooh, coin is down 14 bucks. SPY reverse this morning. Let's clean this up from yesterday. SPX is down though. A couple of us got caught in my trade yesterday on the SPX. Their air conditioner shouldn't sound like it being brand new. They just don't make things like they used to. I like the pullbacks. Minute. We just hit resistance. AMD pulled back. Apple bounced. Meta bounced. NVIDIA made a head and shoulders. Yeah, what a day, what a morning. I had shampoo carpet. And every second counted, I told the lady there. I can't flirt with you today. SPY 15, the 587s, and the SPX. We're pulling back to support right now. I think we're going to consolidate until next week and then maybe break new highs. But this market doesn't respect good news. 5900s is what I'm going to be looking at on the SPX. There it is, right there, double bottom. Let's see if we can get it. We'll find out if we're going to go lower. Yeah, we just did. We're at the 200 on the 5-minute EMA. So these are 340. Go away, little girl. We didn't hold support. Give this a shot. $340 is the strike. I mean, the strike's 5,900 at 340. Right now we're at 390. Oh, 390. Idiot. Meta just hit the 200. You know, I never did trade healthcare that much. I never trusted them. When I first started trading, I can't get left a sore taste in my mouth. I think I'll use the wick this time. Well, the wick, same thing as the other one. Big knife on UNH. Well, I think they do need to be investigated. Healthcare's got away with a lot of stuff here since they passed Obamacare. They became filthy rich, for one. Our government, I mean, puts out a lot of money now, more than they ever have. They think they're saving the taxpayer, but they're not. I'd like to know how much they've actually increased since they passed the Obamacare. how much more funds our government gives them. But it's huge. Okie dokie, okilo. You can't hear Jimmy? Can everybody else hear me? She says she can now. Make me some tea here in a second when I get out of this trade. I'm thinking about selling it. It's not wanting to do what I want it to do right now. We're still holding that on the 5 minute. Come on, baby, break it. There's 390. So when you're comfortable, take profit. I'm going to see if we can get back up here and hit the 21. Get a couple more bucks out of it. There's 410 right now. There you are. Take it. 410. Yabba dabba doo. Good way to start the day after yesterday. I was having a conversation with someone yesterday that this has happened to me 100, maybe 200 or more times. You know, we all have bad days. But you got to kind of wake up the next morning and not let that one bad timing or that one bad day let you down. Because, you know, it can really fuck with your head. And usually when I have a bad day or I get stuck in a bad trade, I make it back just like that. Just like that right there. These are at 460 now. So I'm going to get all out of them here. Come on. Give it to me. See, we hit the top of that resistance level, so that should have been my exit. I didn't push it fast enough. So I'm thinking about going ahead and get... This is a bull flag. Yeah, 430 is good enough for me. So this here, we got 1, 2, 1, 2, 3. We could come down and meet halfway and create a head and shoulders. That could happen. So I'm going to set an alert right there. Maybe a little bit above it. So I can be alerted to it when it comes down and creates a head and shoulders. There was one time where I was trading pH. It was a pot stock when the cannabis first came out, and they were running like 1, 2, 3, 5, 10,000% in a single day because they were so cheap. They're like 0.003 cents or 0.008, and they'd run up to 5 or 6 cents, 10 cents. And so I got into one that ran all the way up to about 56 cents. And I was going, damn, I'm up. One of the biggest trades I ever had. And when you're at 0.003, you can buy 100,000 shares of it. And then it jumps up to 50 cents, and you times that times 100,000. And you're going, wow, here they go, all out. Shit. 460, I'd have got my 460. So I came in the next day all excited. I was getting ready to sell them, going to sell them, and that night the news came out that insider traders sold all their shares. And I came in the next day and I lost like $50,000 that I had. And I just went, God, do I want to do this anymore? Because I was just going around bragging and boasting about it. This is back in 2010 when pot stocks became legal. I said, do I want to do this anymore? I said, man, I was up so much. I would have changed, life-changing experience. And then I come in the next day and I'm just down in the dumps because I ended up making a couple grand where I could have made 50,000. Maybe more than that. And then I understood how corrupt that sector was. And I learned a lot. I haven't even looked at this OKLO that you're all talking about. Well, we got 3 black crows with a double bottom higher low, fallen wedge. I think I'm going to go higher. At least get back up here to, well, it's already there. Back to the third soldier. First one, 37.15. Does this have good news? Good morning, Funk. They're $5 now, son of a gun. We're at the 63 on the 1 minute. Dadgummit. 55.80. Can you believe that? Beautiful call like that. right there, $6. I'd have made up. Oh. $2 and well, there it is, $3. 3 times 5, I'd have made $1,500 on it. 7:30. Let's go. We're off to the races. Right now we're at resistance. So again, I want to try to encourage people, just when you get in a bad trade, it's not the end of the world. And don't lose any sleep on it. Come in stronger the next day. That momentum might wear out there, Randy, unless it has real good news. If you think it had reported year-on-year increase, is that what the good news is, earnings? Everybody else in their world's being bearish on the market, and we're not. These fat cats got it all wrong. I want to make that perfectly clear. They're too chicken shit to give guidance. I'm not. Well, you're at 1, 2, 3 right now, Randy. If it's going to bounce, it's going to do it here. Dadgummit. Look at that. That's a beautiful trade. Recognize them flags. That was a bull flag. Now we're at resistance. We've got to wait for the pullback. I hate to say it, but I might have another hamburger again today. Till they're all gone, then I'm going to have to move to something else. Like ribeyes. I had a dream last night that I met the hamburger. I asked him if he could count to 3. He said yes he could, and I said, buddy, you can trade with me. Better go check the phone. I'm getting... What'd I do? Run off critical? Was I a little too critical for him? Are you out there? Good morning, O. Welcome to the room. Oh, how have you been? Good morning, Nikki. Good morning, Angel. Good job. So that news that came out on UNH yesterday, that would have been Putsville to the T. I'm giving this a little bit more time before I jump back in it. I'm not where I want to be on it. Although we are hugging the 9, and if we're bullish the rest of the day, it should bounce here, but I'd rather catch it off this here support level. Somewhere down in here. But up to 530 right there, I could have got that. Okay, here we go. $5,900s. And there it is right there, first support. We could easily drop down here to this next support level. There it is. And I think we're going to hold right here. Bam. Right about now. $340. Let's do it. Back in it. SPX 5,900 at 340. Come close to triggering my support. girl. And there's $4. Right to my support level that I called. This here line. Go away, little girl. You gotta be careful though. Could be baby steps day to day. We've established a resistance. See what the orb is. Hurry up. Yeah, it can come back. It can easily come back down here again and do number 3 if it doesn't hold this pivot point. We have 3 white soldiers right here, so it came back and pulled back, create a head and shoulders. There's $4. Come on. Kind of like a shoulder line right now. Oh, God. I don't like that. They're touching the right shoulder one more time, so that's the second touch. Very important support. Bitcoins are all red. Cisco's up $3 today, 3 1/4. I don't know. We'll give it a few more minutes here. We're still respecting that right shoulder. FL Foot Locker's up $10, 10%, up 82%, and that's getting took over by Dick's Sporting Goods. So we're going to find out if this thing, we're at the point now where it has to break out, really can't pull back anymore because we hit the right shoulder the second time. So we have to break it this time. If we don't, I'll get out, take what profit I got. And we'll go check her message. $3.90. Let's go. This is resistance right now. 410. Break. It has to see this. There we go. Now come on up. Now it's time to get out of the trade if you're in it. 10-4. Tell Grandma I'm coming home. That's my second one. Now they're at 440, and they're both at 6. $450. There's 3 white shoulders. Do you understand what I'm talking about on this head and shoulders? You could almost call this a touch, but I didn't. I called this one here a touch. I went with that. So you got your left shoulder, your right shoulder, comes back the second time, and that's the sweet spot. That's the sweet spot. It has to. You have to tell yourself, it's got to break out here. If it doesn't, I got to get out of the trade. And there's $100 a contract, 120. That's easy. $450. 33%. Actually, a little more than that. Then you got your 3 white soldiers for an exit idea. Ba ba da ba ba. La 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 la. Da 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 da. Da 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 da. Do 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 do. I hear crickets. Does anybody hear them? When do you quad view your video of U-blocks and view the 1 minute time frame? You can see what I mean on your cell phone. When I do what? When you do quad view, on your video of blocks, the view on the 1 minute time frame graph, you can see what I mean on your cell phone. Let me see. I'll look at my cell phone. I'll be right back. Okay. I'm gonna get ready to have another burger. Too bad I don't have any. Potato salad. YouTube. need a potato salad. Oh, my face. Oh, I see what you're saying. So let's do this. Potato salad. Oh, my face. You see how that? Oh, I see what you're saying. So let's do this. Potato salad. Oh, my face. An air conditioner makes a lot of noise, don't it? Okay, we're at $3 again. Okay, we're back down at the right shoulder line. Now this is a major support level. If it's not, we'll end up back down here at the double bottom. So, is that better, Porge? Say yes. $3, $2.85. Are we gonna come back down and hit that 58.70? Let's go back to the 4 minute, the quad frame here. If I can figure it out where it is. There it is. Now this could be it. I think I ought to go ahead and give it a shot. That'll go make my burger. It's 9:30 right now here in Missouri. The room's trading okay. They're all excited about OKLO today. Anybody looking at it on YouTube? Why are you excited about that? May I ask, Randy? Mister's absolutely tanking, says Funky Music. I think we need to be patient. I've got 2 good trades in so far today. And I'm looking at number 3. If we get down here and hit my little support area, and I'm going to raise this up above that trend line. And then I'm going to jump in. Get ready. Are you ready? Now. Triggered. 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 260. Yeah, I'm watching it real close right here.
Yeah, walk him as DR at this 400 support level.
Mister?
Yeah.
Yeah, I'll get on it here.
I got support at 399.83, and RSI is about to hit the support zone, and RSI is where I want it for one of my A+ setups. God, it's getting slaughtered right now.
How good of a run has it had?
I mean, it's been trading between this 400 and 432 zone for the past week. Go back index. Yeah, it's been above the 400 zone since last Wednesday.
I'm gonna look at it here in a second.
It's bounced off of it. This will be the second time it bounces.
Ameritrade's acting awful slow today.
I like this setup.
We're at the 2 minute right now, so I'm gonna go to the hour. 20-day 1 hour here. Oh, that's 20 days. That's yearly. Come on, you bitch.
I'll do the 408s because that's the bottom of the orb. 410.
We got a double bottom here at your 422 area. That's like a pivot point on the 1 hour. Your $400, yep. So it should, if it's going to bounce, it's got to do it here.
Yeah, so we're still $1.50 away from my support zone.
I like it right here. A lot. Watch Mister.
Yep. After I need to
Yep.
let's see if it'll hold. Wait for bottom week. Show you buyers are there.
I'm watching SPX right here. I'm gonna grab contracts. The 5900 strike at 225, 230.
I'm looking at the master 14 calls at 330. Let's see bottom week.
Come on, Jimmy. Look at Lunch Lady.
Right where I want it. It's definitely right where I want it to take calls from. I'm gonna wait till this 5-minute candle closes.
Yeah, my support failed right there.
It's still in mine. It's just like the bottom of mine is 398.04.
You got three white, so three black crows. So if this candle closes and we start to get a green one. Right now I'm in the SPX 5900 at 230, and I'm gonna. Yeah, this is a nice little setup right now on that 5 minute. A lot of traders swear by the 5 minute. I've gotten many fights with people about it. There's 5 candles on the 3 minute. We're at 260 now. I'm up $30 a contract.
I grabbed one of the 4 cans at $3 a minute. Set a time stop on it, but it's where I want it to be.
I'm up 50. What, for this week? Hey baby, is this Joanne? What's going on, hon? Been a long time no see. Is this Joanne? You know what? I advise you not to call me anymore, or I'm gonna kick your ass. Did you like that funk?
Mm-hmm. Yeah, I like it. Hell yes. Look at that 5 minute candle. It did exactly what I wanted it to do. Double bottom on the rollover.
I'm at 295 right now.
I'm up $60 a contract right now.
Very good.
Well, 55.
3 black crows. Tweezer bottom. Now we got to break past 422.
Mm-hmm. I can see it running up and touching the 9 on the 5 minute.
I'm still in my SPXs here. Right now I'm at $70 a contract. I'm at the 63.
Come on, baby, push up. Let's go. I want at least $100 a contract. We talk dead.
Yep.
$60 a contract.
What contracts were you in? 410 or?
I'm in the 410s at $3.
Yep. You got in at 3, huh? That's a good shot.
Yeah, I got it dead when it wicked, in that 5 minute wick below or wick out of my zone, and then I saw it pull back into the zone. I went ahead and bought. There we go. 70 contract.
3 successful scalps on the SPX right now. Misters broke that resistance here. Yabba dabba doo.
Hey, I don't like it that quick.
Let me look at the 1 minute. Right now you're pulling back to support right here. Yeah, I think you're good. Let's see if it holds right here. Well, it should have held that. 399.15. Let's see if it does. 399.15. How much are they? 410s. Those are the ones with the volume right now. That and the 420s. But they're
Even now, I'm still up.
yeah, the 420s are a little bit too far out of the money. I'll grab. Kind of needed to hold this.
RSI's showing oversold again.
Anthony Sarkamucci says once Bitcoin hits 500,000, it will be considered a asset class, just like gold.
RSI's at 27 on
SPX is back at 3. We broke the 63 on the SPX. Now we're at the head and we're at the hard resistance now at 310. And it's got a confirmation that that is a hard resistance with the 1, 2, 3B. Right there. So if this breaks, we're going to go a lot higher. If not, get out of the trade if you're in it. One, two, three.
30 minutes, way oversold.
Next support level on it, to go back to the hour. We've got a gap support right here at 393.97. $393.97. Okay, watch SPX again. Yeah, that's a gap. And then you got the gap fill, which is really solid support at 390.74. That looks more promising actually, but that's, you know, that's a $4 drop.
I'm gonna sit here and babysit this one if it gets down there. I'm adding.
I'm gonna color that in right there, that gap.
It's a big wick on the 5 minute.
I really like that 390.74 a lot, but I don't know if it'll get there. It might just hold the gap. 394.
And we bounce. That was a tweezer bottom. Let's go. Don't get lazy ass and get up there. There you go.
One of them kind of days. Randy's asking if you're still in the 410s.
They hit 350. I'm coming out. But you can take profit at any time. I mean, y'all are at a point of this contract. I want to see if it'll get to the top of my resistance zone. It's definitely weak. I think RSI was way too hot. Somebody's got to buy right here.
I'm going to let you handle it while I go in the kitchen. I think I'm going to have that broccoli again.
There's a big push. Alright, 355. Come out.
On my TTM cloud, we could break the 422. but not much, but at the high level of 402. Now I got that. Oh, never mind. Got that habit of rocking. You never lose it. I'm gonna go make me some tea for one. I haven't had my tea yet. Good job, Robert, on YouTube. Make sure you all hit that likes on YouTube, subscribe, and share.
Hey, if you're still in that trade, you can get out at 350 here. It's 20%.
This might be the break we need. We're at resistance. Double top off the snake. And we also got a head and shoulders developing on Mr. too. So it could easily come back down and hit that 398.15 and retest it.
So the multi-frame is set up for yes. So when I'm trading SPX, I throw it on the multi-frame. But if I want to scalp just some random stock, just go over here and switch it over and look at it. That's how I found Master. I saw the chop that ES was doing today, and I wasn't really interested in watching it. That is junk.
SPX broke resistance. Now we're coming up to the 200 on the EMA on the 1 minute, and we're above on the 2 minute. We're above the 63, and we're below the 63 on the 3 minute. So long would be the 5 minute at 58.83.62. Right now you're a little bullish. If we can hold above the 2 minute on the 63, that was resistance. Now it might become support. These are now at 340 from 230, so you're up $110 a contract. And I think we're going to go up. I like that 2 minute. But if I look at the 3 minute, I kind of get a little leery. I've messaged him many times. Last message I asked him, what's the problem? Why'd you leave? I don't like, someone leaving and not telling me. I have no clue. Hey Jim, I'm going to take off for a while, or I'm going to the mountains. kind of gets under my skin. He lives in New York, so you know he could have got shot. We just now hit resistance on the 1 minute on the SPX.
Yeah, we're in a resistance zone on ES.
This is real solid. There's a couple of them. You got the 3 minute and the 1 minute, but if I look at the 5 minute and the 2 minute, I still got more room to run. I like it. I like these moving averages I got. I really do, man. They're so clean. We're at 370 right now.
If you're long right now, you better be aware of the 5904 on the ES. That's your double top.
Did you take them, Richard? You're about at resistance right now. Scale out. It should. Oh, Mike. Well, I'd like to know, man. If you're going to be gone, let me know. Because I worry about you. I don't like to worry. That'd be true with you too, Richard. I'd be all over your ass. Maybe Funk. I'm kind of getting attached to Funk now.
Don't get attached to me.
I am.
No, I don't do attachments or relationships.
You're my best friend.
That's my wife.
You're my best friend. Tell your wife I said that, and I'm going to take her away from you, from her.
I mean, you got to take her away. I'll put her in a box and send her to you. Give me your address.
I'll treat her right.
I know one thing won't change. You'll still be cooking your own dinners.
Oh, really? Damn. That ain't going to work.
You couldn't find a kitchen with a map, son.
I'll teach her how to use the dash. Make me hamburgers for us. We're at 380, buddy. We're making money. Richard, you should be in this trade. Now you're at resistance.
You got a little bit left. I'm telling you that 5904 on the ES is double top.
Well, very good.
So you're there right now. You're at the double top on the ES.
God darn, man. We're kicking ass here, aren't we?
Do we ever not?
450. Whoop, 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 whoop.
Damn.
520.
Yeah, it's blowing up.
Now we're definitely at resistance. The only one left is the 3 minute. At 58888888888.
Yeah.
Tell me that didn't get under your skin.
Alright, you gotta jump off here.
That's what I thought. Oh, Black Betty, bam, 640, baby. Shy. Bug's got 588816. I got 5888888888. And we hit 5888888888. Hello, my name's James Howard. I'm a retail trader. May I help you, sir, or ma'am, or Is this the President of the United States? May I speak to him, please? Why did you hang up? Okay, well, look at that. It hit my cloud on the mister. It's time for a song, and then I'm going to go to lunch. Are you still calling out your... No, I think you got out, didn't you? Randy, are you still in them? Mister? Good job, Richard. Let's go ahead and get me a song in before I get ready to go to lunch. They're now at 6:10. Can you believe that? Look at that. Look at that run. La 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 la. May a circle be unbroken. 670. $6.70. $6.70. What do you think about that bug? Yabba dabba doo. Randy, talk about no stress. Let's talk about it, baby. Bull flag over bull flag. Ain't that a bunch of bull? Jim, how dare you? I gotta think of a real good song. We haven't had one of these in a long time. one.
I can make it for a day or two without you. And maybe I can make it through the night.
We're now at 8:20.
I can laugh and I can drink. Probably be
I'm up $6 a contract.
But what am I gonna do?
What am I gonna do
with the rest of
for lunch? I'm gonna have a hamburger.
I've got things I can do. I've got places I can
Go in the kitchen. I make one hell of a hamburger.
Yes, I can smoke and I can drink.
I get high, but I'd rather make a hamburger.
But what am I gonna do?
I'm gonna go in the kitchen and cook. I heard you make the best hamburgers out of scratch. Is it true that you use almond flour with a little bit of stash? I'll go in the kitchen. And make me a hamburger. Oh yeah, take profit, baby. You make the damnest best hamburgers. That's fact. Woohoo! He's back. You missed out on a great song. I would think about it for sure, because we've had one heck of a run.
Yes, I can smoke and I can drink and probably be alright till the morning.
You like Merle Haggard?
But what am I gonna do with the rest of
My life.
What am I gonna do with the rest of my life?
Hey, Nikki, your mic's on, baby. Your mic's on, baby. No, I'm out. 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 Did you take that trade? Zero. Dadgummit Sparks, he should have. $9.90, baby. Oh, go ahead.
Almost there. I'm gonna go ahead and grab them at 3. I'm being real straight.
You sure are. Damn, $11.10.
Alright, that's it. That's it. $3.
We're at 12 now. Heck, I just left. Oh, this is disgusting. Oh, man. That's good. Trades like that. Like I said, you know, just I don't want to brag or boast, but I just want to have a lesson learned. And I've been here many times where I've just get depressed because, damn, man, I just lost a couple grand in a trade or $1,000. I don't know if I want to do this anymore. And I got to where I just don't let it bother me. If I, you know, come back the next day and just start fresh. But right there, and I said yesterday, I said, you can come back today and make fourfold of what you lost yesterday. And it happens almost every single frickin' time. Because nobody can time the market perfect. Nobody. Unless you're Jim Cramer. And we know how that is. But it makes me, it encourages me more to want to try harder the next day. Especially if you ever play baseball or sports and you get struck out and then and then there's times where you just bat 1,000. Every time you're up at the plate, you get a base hit, you get a base hit, you get a base hit.
Push down to the 9. I'll get out when you hit the 9. We're up, we're up $55 a contract.
There'll be another chance 0. I'm gonna go in the kitchen, do my thing, and I'll be back.
That's it, I'm out.
He's out.
$55 contract.
Woo! Good job.
285 to 350.
Those were the puts.
Down more, but yeah, it could come down more, but the 2 minute is touching the 9.
Yeah, I see that. Same as with the SPX. And it's got 3 black crows.
I'll take, what is that? I'll take 25% on trade in under 5 minutes all day long.
Listen, you want this one? What?
Uh-oh.
That's Rob. He's actually on voice?
He doesn't know it, probably. Rob, you're on voice.
Better stay on voice.
Robbie, your mic's on.
Robosaurus.
Robus.
Got Adam just in time. It did. Touch that 9 and go back up.
A lot of open mics today. Who else wants to get on here? Michelle? I dare you. If anybody wants to help me with my vacation coming up, feel free to private message me. And I'll give you my address. And I'll be right back. Okay. I'm going to turn on the telly. I do not want to listen to CNBC.
We had the high down
subsequent high. It also lines up with our purple 250 two-day EMA.
AMD, bull flag.
A lot to consider at that level. And this is a chart where the horizontal areas stand out to me. So we had our high point at our pink line. Our low point gave us a short range near 115. This 115 level was resistance 2 more times. We had this rather long downward sloping channel that price was traveling in until we hit those lows. We've broken out of it and broken above our moving averages. Short-term white uptrend in play now, and RSI backing off a little bit. We're out of that overbought area, but still quite high here. And we're still holding on to that 115 level as well, which is a supportive point. So 115 lines up with the volume node. 100 lines up with another volume node and our moving averages. So those are supportive areas. Then to the upside, if we did break 125, volume starts to really pick up again around 140. So that could be the first potential consolidation point to consider.
All right, that's the point to consider. Thanks, Rick. That's our Rick Ducat, lead market technician, and Charles Moon, senior market strategist, equity software trading academy. Thanks to both of you. Coming up next, going to spotlight crypto. Bitcoin and ETH under some pressure today. But keep in mind, Bitcoin climbed nearly 10% in May. We'll be back after a short break. Morning Movers brings traders the biggest headlines to start the day, from volatile overnight swings to the earliest analyst calls. Get your watch list ready. 8 a.m. Eastern, Morning Movers, only on Schwab Network.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Whether you're an experienced investor or just getting started, Charles Schwab offers a website that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Trading the trending names every day. I'm Tom White, host of Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Welcome back to Trade 360. I'm Diane King Hall, live from the floor of the New York Stock Exchange. Time now to spotlight crypto. Joining us for Insight, we've got Samir Krabaj, CIO of Hashtags. Samir, thank you so much for joining us today. All right, let's talk a little bit about the price action that we've seen recently. We'll talk about the leader, Bitcoin in particular. Although it's a little bit lower today, off by 1%, around 102,000 right now. You had started to see this recovery because at the beginning of April, Bitcoin traded more like, and crypto in general traded more like what we saw in equities, this risk-off mode. And then you saw this recovery in Bitcoin before you saw a recovery in equities. Are the two correlated or not?
That's a great question. So historically, they're not correlated. But the thing is, when we see movements like this, like Trump tariffs, that gives a lot of uncertainty in the market overall. That's not good for risk assets overall, and crypto is a risk asset, so they tend to move together when there is uncertainty. So we saw a big correction when there was a big uncertainty around tariffs and how long this will take to figure out. As we saw deals being made and especially this pause with China, that gave some space for the markets to react, and that was very good for crypto assets, for risk assets overall. But what we're seeing now is crypto assets are reacting very positively.
But Bitcoin has been trading less volatile recently.
Yeah.
You know, where you would once upon a time see these big swings. A move today of just 1% is not very volatile. So has Bitcoin decoupled from the view of it being a riskier asset or from trading like a riskier asset?
So Bitcoin's volatility has been reducing over time, right? So 10 years ago it was 200% annualized. Now it's closer to 40% annualized. And this is part of our investment thesis for Bitcoin. We believe that Bitcoin is an emerging digital store of value, right? So is this still an emerging technology? It's like a teenage gold.
But it's not gold, though.
It's not gold. So it's not a mature gold. So what we believe is that over time there is a generational shift happening in our society and a digital transformation happening in our society. So maybe in 10 years or 15 years from now, it will be as good as gold. And that's the big investment opportunity right now and also the big risk.
For the record, I'm agnostic here, but I have to ask this question. How is it a store of value when, like, you compare gold, you can literally get gold, you know? How does Bitcoin, how can that be one of the views around it, that it's a store of value?
Yeah, and that's one of the big questions about it, because it's the first time that we have a digital store of value in our society, a digital way to store value. So this is very new. We're still trying to figure out like how to use it actually, but you can think of Bitcoin as a currency that has a predictable monetary policy. So it has a inflation rate that drops by half every 4 years until like in 100 years from now, it's going to convert to zero. So it's a scarce asset that can be used for payment. And because it is scarce, and right now the inflation rate is even lower than the gold inflation rate, it makes it more scarce than gold.
Okay.
But the thing is, central banks are not using right now as a store of value, and those are the big users of store of value. So that's why we believe that over time, as Bitcoin matures, especially if you're seeing like the US adopting Bitcoin as a store of value, having a strategic Bitcoin reserve, that accelerates the thesis over time.
Let me ask you about Ethereum. It has not moved the same way that Bitcoin has, and there was this expectation starting last year that you would see that. Why is that not the case? I'm interested to know your perspective.
So it's a great point. Ethereum it's in an earlier stage than Bitcoin. It's still like a very new and emerging technology. So it's essentially a risk asset, tends to move like risk assets. So when we see more liquidity and lower interest rates, it tends to react well. But when you look at the fundamentals, there's been some competitions on the smart contract platforms and some discussion around like the roadmap for Ethereum as a technology. And that has been like some sort of headwind for the technology overall. But what we see right now is with this new administration, and especially the perspective of having more regulatory clarity, that can foster the adoption of smart contract platforms, tokenized assets, stable coins. All those applications, they run on top of smart contract platforms like Ethereum. So that's why if you look at the last few days and weeks, like Ethereum has been reacting very positively, especially as we see more regulatory clarity coming from the US. That will be very positive for smart contract platforms.
So it would be a positive for Ethereum as well. Today, Ethereum down a little more than 2%. Earlier, it had been down about 3%. So, you know, you see it trading more like a riskier asset, to your point. Let's talk about overall. So do you expect Ethereum to mature more like Bitcoin?
Yes, I mean, Bitcoin is more advanced in that curve, and it's actually being discussed right now with most like a sovereign wealth, pension funds, even the U.S. government talking about it being a store of value. So it's more advanced in its I would say maturity curve, but still very early. Ethereum is even earlier.
How much exposure do you think investors should have to crypto in their portfolios as a percentage?
So we believe that crypto is a new emerging asset class. So there's great opportunities when investing in crypto, but also a lot of risks. So normally, what we speak with clients normally is that they look for like a very small allocation, like 1 to 5% allocation for the long run. Again, like for 5 or 10 years horizon, and in a diversified way. So it's too early to pick the winners. Right? Crypto is way bigger than just Bitcoin, and we believe that people should approach this in a diversified manner.
In a diversified manner. Any final thoughts you want to leave us with regard to your views on this space, whether it's the regulatory climate or price action year to date?
Yeah, so I mean, on the short term, price action is really hard to to make any assessment about. But when we zoom out and look at the long run, we see like the investment case for crypto is stronger than ever, right? So we're seeing like regulatory clarity in the U.S., adoption by the U.S. government. We see stable coins becoming normalized and finally having clarity. So the landscape for crypto is very positive, and we're very excited about the thesis.
All right, Samir, we'll have to leave our conversation there. Thank you.
Thank you so much, Sarah.
That's Samir Karbaj, CIO of Hashtag. So thanks to Samir. Coming up next, the disruptors. We'll focus in on Cisco Systems after earnings sent shares higher today. Shares still moving higher, helping to stem some of the bleeding with that news. The S&P 500 has turned positive right now. We'll be right back.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you an active trader? Our active trading webcasts are designed to help you develop a deeper understanding of technical analysis, options, futures, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
And things keep going. These fat cats.
Back to Trading 360. I'm Diane King Hall, live from the New York Stock Exchange. Time now for the disruptors. Joining us for Insight, we've got George Sillis, senior markets correspondent, here with today's company. Cisco shares rallying.
George.
6%. We've got the S&P 500 positive now. Cisco helping the gains here.
Cisco helping.
Earnings, double B.
I mentioned that yesterday.
Through some of the things you're paying attention to here, George.
Mister's at the 200 now.
Constructive quarterly earnings report for Cisco.
Right at my resistance.
Revenue growth and earnings growth, and they denoted some strong infrastructure demand for artificial intelligence for the quarter year over year. Hyperscaler growth was in the triple digits, particularly 3 large major hyperscalers. And I think Cisco Systems an integral company when it comes down to not only the high bandwidth memory that, for instance, Micron provides the AI infrastructure. You got to think about high bandwidth networking, and that's essentially what Cisco provides in both networking hardware services, but also security. If you look at their cybersecurity growth over the quarter year over year, it was higher by about 54%. Products were higher 15%, and total revenue came in at around $14.1 billion, higher by 11%, and earnings higher by 9%, beating the estimates at 96 cents versus 91 cents. And ideally speaking, if you look at the AI orders for the quarter, they grew about $600 million. For the year to date, the company's denoted over $1 billion just in the new AI infrastructure demand orders. And they actually hit their full year target already this particular quarter. The other thing is they got new AI partnerships with companies like NVIDIA to develop unified cross-portfolio architecture. And I think if you look at the total gross bookings orders, they grew 20%, but if you strip out the Splunk acquisition, 9% organic growth. So everything seems to be improving for Cisco. Their whole business model really shifted to integrate software
5900s are at
services,
$16.
hardware. And it seems to be manifesting to better earnings per share, and the stock is hitting some new or close to new 52-week highs. And with that said, some of the analysts like Wells Fargo are still constructively bullish. They increased their target to 75 from 72, maintain a buy rating, as well as Citigroup also maintains a buy rating, increasing their price target to $71 on the name.
Yeah, we're seeing a string of analysts boost their price targets on Cisco. So what's your approach for an example trade, George?
Well, I think today's move is very constructive. It's quite bullish. The company itself, from a growth standpoint, is still growing its sales in the high single, low double-digit rate, and this potentially could just continue going forward. I think the markets, Diane, potentially could pull back a little bit from here, so we have to take that into consideration. But I'm going to go up to July with about 64 days to expiration. I'm going to structure a bull call spread. I'm going to buy an in-the-money $65 call and then sell against it the $70 call. So altogether, this is structured for a debit of about $2 a share or $200 a contract. So in essence, it's bullish. We need the stock to continue to move higher. 60-70 is your break even. And then, of course, max profit is $3 if the stock hits 70 or higher by expiration. And you have over 2 months for it to manifest.
Oh yeah, I know. You can certainly see that happening. I mean, with 67 being the break even, and it feels like it has the wind at its back right now with regard to the price action that we're seeing and the strength that they have to come. And even given the way the shares are performing today, it's higher than how they usually perform off of earnings. Thank you, George. That is our George Silla, Senior Markets Correspondent here on Schwab Network with a bullish example trade for Cisco. Coming up next, time for our 360 round. Focus in on Chinese tech stocks following earnings from Alibaba today. We'll be right back.
Heck yeah!
Is now powered by Ameritrade, giving you even more specialized trading support.
Right now, I'm eating the best burger ever. And I won't stop eating them until they kill me. That burger, I'm going to give you the recipe. 2 big heaping spoons of almond flour, 1 egg, half a teaspoon of onion and garlic powder, about a little under a tablespoon of flex seed, grounded up flex seed, a heaping cup, half a cup of sharp cheddar cheese, 2 tablespoons of bread and butter pickle juice on the sweet side, 4 ounces of spit straight from my saliva, each one cooked at a good 3 minutes, each bun in a Dash waffle maker. A quarter of a teaspoon of baking flour. A belch. With a little bit of mustard to cut back on calories. No mayonnaise, no nothing. Just a pure, straight burger with mustard and these 2 beautiful, gentle, mouth-watering, delicious buns. And so you know you'd like them. Look what they're doing to me in here. Can you believe what Michelle did here, YouTube? I don't think she would know what was good if it slapped her in the face. Anything that can give you a belch like that's got to be good.
You started something yesterday.
What's that?
You started something yesterday.
I did? What?
You know, I told you I was going on a hike after.
You going on a hike?
I told you yesterday I was going on a hike.
Yeah. Did you go on?
I did. You know, I listened to the entire drive over, the entire hike, and the entire drive back.
Bob Seger?
Fire Lady.
You did.
On repeat. On repeat.
Oh, wow.
When I was going through the gate at the state park, this older guy that was, because it was like a retirement job or whatever, he just took money at the front gate.
Yep.
He heard it playing in my car, and he goes, "Oh my God," he said, "I haven't heard this in a minute."
Huh.
I was like, yeah.
I have good taste in music, don't I?
You did yesterday.
I'm about down to my last couple bites of my burger. I'm almost tempted to go make another one, but I can't. How did I hold? Let's show you. I got back in and I had one contract left. So take your one-hour time frame. I'm gonna clean this up. You take your 1 hour time frame and you go to that previous high where the body of that candle is right there. You see that body of that candle on the 1 hour time frame? And that's your resistance line. Whoop. Go with the body, not the wick. And that's how you get to it. It went right to it. Right to that wick, that body of that candle. So go to the 1 hour. You want to go back. Always zoom out in that 1 hour time frame, and that's your resistance line. And we hit it yesterday. We hit it today. Now this is called a triple top. and we created a new high today, so that's good. I think next week we're going to be breaking that and going higher. So next week we might hit this here bottom of that candle right, or I think it's right there. It's 60.25. Body of that candle. So that's called a weak resist, 1 week's resistance level. Well, I thought I had that. Right there. 60.39. God darn it. That'll be next week's resistance. Well, I had it on there already. I gotta go. I don't think I unplugged my waffle maker. Now I'm really tripping out. Now I know I had that on there. What the heck? Oh, I know what I did wrong. That's the one right there. 59.38. And that should be easy to break next week. That tweezer bottom. Excuse me. So it's definitely a head and shoulders right here. There's two of them. This one right here for today. Take that to that right there. And then this one here. When that one failed. There's your other inverse head and shoulders. So you had the left shoulder, and right shoulder. See that? Actually, yeah. I could have brought that down a little farther, but you got to go off that one right there. Then that big hammer. I'm going to go unplug my waffle maker. I want you to start studying inverse head and shoulders. And study these patterns. Start studying those patterns. And same thing with you, YouTube. Chart patterns cheat sheet, bullish and bearish patterns. And this one bounced off this thing right here. It's called an inverse head and shoulders. And I've been talking a lot about falling wedges too. So on that inverse head and shoulders, when it comes down the second time, that's when it really likes to take off. That's when you know you're bullish. Whoops. $15.
Triple topper.
Anybody that's new in the voice, go ahead and say hi so we can get to know you in the chat. Hello, Livid Goose. Oh, man, that was a good lunch. Now I'm going to swallow it down with some water. They ain't got the pool ready yet. Oh. Wow. Can't be doing that. Imagine me going to bed at 6:30 at night.
1 minute chart is clean. Oh my god, and all those 200 SMA pitches on the 1 minute.
On the /ES? Yep.
Yes. Oh, it's clean.
Sure is. See, that's an inverse head and shoulders too, with a symmetrical flag. It can happen, especially when you get a run like that. But you know what one it has to fail? The 21. Yeah. If it fails the 21, right now this looks like almost like an ascend. You got me yawning now. I never could understand how that works, but it does. And I got to make me some tea. We got a symmetrical flag right now. This is something that I noticed too. That depends on how steep that bottom trend line is. You know, it's a little steeper than the top one on the 1 minute. I'm gonna go to the 2 minute. See, it respected pretty much the 200 EMA on the 2 minute. And I like the 2 minute better now because that 21 He's a little farther apart from the 9. God, it's so bullish. I wish I was still in these suckers. That'd been an $8,000 trade if I held them all the way through. 5 of them. We just now broke resistance on the 2-minute. The 2-minute has tweezer tops with 3 black crows. You got a doji, spinning top, and a dragonfly. Starting to dabble again. Yep. I understand that. I'm getting ready to take a little vacation here soon. I've been on 2 since I've been trading. Well, yeah. Kinda. 2 tropical vacations. I went to Winfield, Kansas for 15 years in a row to the Walnut Valley Festival. If anybody's from Kansas in here, Winfield, Kansas. Look at that thing break out. We're at 1800 now. I'm going to see what CNBC has to say. Regarding holding the pinpointing the resistance using the hourly, it makes sense, but I am still confused on how you knew it would fail the bearish breakdown. Okay, regarding holding by pinpointing the resistance using hourly, it makes sense, but I am still confused on how you knew it would be a failed bearish breakdown, because I thought the hammer handle. No, the hammer's bullish. And a sell-off would indicate the head and shoulders. Screenshot. So let's walk through that again. You ready? 0. There's something that I've just started doing. I don't know if it made a big difference in that trade. Is I put up these 4 different time frames. And I got to looking at them, and the more I looked at them, the more I realized that we were breaking a resistance level. And the odds that were a lot higher that we'd have a breakout. And I was using my moving averages. Where was that hammer at? Oh yeah. So I scalped it already a couple times, and we just couldn't break that 200. That's a 200 EMA on the 1 minute. So when we came back down again, we came back up and we created what you call a head and shoulders. Now this is a head and shoulders right here. So you got that trend line off this head and shoulders and this head and shoulders. It broke out. These are inverse. Inverse head and shoulders is bullish. So it came back and respected that right shoulder line once, twice, and 3 times, and then broke out again and came back and finally failed. Well, as it started to break out again, it started respecting that shoulder line of this here head and shoulders, like it did here and like it did there. So when this big hammer came in, this is bullish. That's a bullish candlestick. That's with a tweezer bottom. You can see the bodies of them candles lining up together. So I had 3 confirmations. I had the shoulder line, I had a tweezer bottom, and I had a hammer. This is an inverted hammer. So a hammer, go up Google, bullish hammer. I always like to go to the image part of it, and I just start looking at all these here candlesticks. So here you got the pullback with a tweezer bottom off this here hammer. So that's a tweezer bottom when you have 2 bodies lined up together. So I had 3 confirmations, not just these 2 with a tweezer bottom and the hammer. I also had that right shoulder line that held resistance, that held support before it bounced, and then it came back and touched it again. So I had 3 confirmations that trade was going to be good. Does that make sense? With a tweezer bottom, that pulled back, and then you had the shoulder line that respected before and respected before that and respected before that about 4 or 5 different times. But that hammer, that's very bullish. That means the buyers won. The sellers gave out. And then the 1 hour time frame, and I just held 13 because we had so many candles up here. We had wick, 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 wick. All them candles held up. So that was a hard resistance. Anything beyond that is a gift. But you've had so many consecutive, these are hour candlesticks. 1, 2, 3, 4, 5. If you broke that down into 30-minute, 5-day, you just had a lot of consistency of it getting up there that high. Now we're way above it. So now that this here now becomes support. As long as you hold that 590329, you're still good. You know, you could hold it until it even touches down and holds that, but if it starts to go below it, you'd want to get out for sure. And you're welcome. But go back in time, use different time frames. A lot of traders don't use different time frames. They're stuck on just one. Now, I got a bunch of them. I've been accused of just using the 1 minute, but I'm sitting here using all these. And I'm using these a lot more since Funky got here. I've started using I know how important it is now to be looking at the 2 and the 3 and the 5 minute, which usually I just traded off the 1. But today, I used them all, and it kept me bullish. Kept me looking at them and say, hey, we're bullish. Well, that's 63, and I was just watching the 63, and we had 3 of them that saying we were still, had more room to climb, with one saying that we were at resistance, and I would have probably sold it. I did sell it. And I had to climb back in. And I'm bullish anyway. I've been very strong bull for about a month and a week since we came. This is another thing to look at. Watch this. I hate to take your all's time, but we'll get back to trading here in a second. I don't want to use that one. It's this one here. Clean that up too. Yeah, this thing's using slow today. Platform's real slow. So go to your weekly. I'm going to clean this all up. This is something that'll really help you out in the long run. One of these days. Go to your weekly. Damn it. This is really slow. I might shut this down. So we came back. This is where I called it out last time. Off the 200 on the weekly. This is the SPX, the SPY, and the QQQ. And every time we came close to pulling back to the 200 EMA, I was calling this trade out. And that's what I did right here. We had that big sell-off for 2 months, and we were getting close to that 200 EMA, and all these other fat cats were being very, very bearish, talking recession and stagflation and get out of the market. I was saying get into the market because we were coming close to that 200 EMA. And now, look, we've already made it back so much. We'll be up here at a double top before you know it. Or at least head and shoulders. That'll probably be next week or another week. And all these people are telling you, get out of the market. And I was saying, no, now's the best time to be in it. So that's that. And if we pull back, we could pull back to that previous high from yesterday. And that's not much. one support. Actually, I like this one better here. See this resistance right here and this support level right here? Just draw your trend line all the way across, price line. That's probably where we'll end up. At 5901.66. Well, thank you very much. Yeah, I'm thinking about Jamaica again. I like Jamaica. Lucky I didn't get arrested last time I was there. They just legalized cannabis in Jamaica. In 2015, I didn't even get not even 1 foot on the sand, and guy comes up, "You want to buy some cannabis?" "Yeah, man, I own this block of, this is my fence. This is my part of the beach." I finally had to tell him to leave me alone. I wanted to enjoy my vacation. He kept trying to hit me up. I said, "Man, I just bought a quarter from you." He said, "I'm going to take you over here. This guy will sell you some brownies." And then when he'd get ready to leave at night, he'd bury his weed in sand. Come back the next day. He said, "Will you watch this for me, sir?" I said, "Yeah, I'll watch it all right." What'd you say, Mushroom Monk? Okay, we respected the 50 here on the 1 minute. Need to kind of come back down here. 2 minute, we hit the 21 like I said we would. I want to see it come back and hit that other trend line right here and then jump in the trade. 5901.66. Oh, that's Mr. Yeah. 3 contracts. Those are the 59.20s. We're getting ready to squeeze right now. We're between the 21 and the 9. Now, Funky, the guy that sits here and trades with us, he uses the /ES. When he's trading SPX. See, this looks like it can come down and hit this here 63. We respected it there once before. And then the 200 for sure. Maybe at the end of the day. Got a head and shoulders right here. That brings it up to the 63. Actually blow it. There's your head and shoulders. Then your right shoulder breakout. Comes back and respects it, moves up. What's that?
Oh, sorry. What's up over here?
Yeah. You're thinking. You had a good call on Mister. It run up more. Right now, your 63's in my cloud on the 1 minute on the /ES at 59.22. What is that? That's a 63, I think. Yeah. Oh, they do? Let me see if I can go to Costa Rica. I think I can. Oh, this was give to me, this one here. Oh, here we go. We're dropping. It's called a Kettner channel. You want me to give you this? You got Kettner channel, cloud. It's 3 different charts. I haven't used this one in a long time. Oh shit! I'm about erased it. You're at the 63 on the 1 minute.
I see that. I'm just wondering if it's going to hold.
It's at the top of that Kettner channel cloud. Yeah, I still got it on here. I didn't want to lose it.
Are you in a trade right now?
I'm thinking about it.
I really wanted some kind of move out of this consolidation. It's 13, 10, 4, so.
I'm thinking, yeah, I should have. Do you have tossed liver goose?
Goose in the cloud is literally just the space between the EMA and the V1 EMA. It's just called a cloud.
This is shared. This was a script that was given to me. Damn it. What a thing's acting funny. Okay, we're retouching the second time now. Damn. Huh. That goes if we come down and hit this old head and shoulders right here. This trend line around 59.13. I don't know where that brings it up on yours. /ES.
What are you looking for on it?
59.13 area.
No, I mean, what line are you looking for?
This shoulder line off this head and shoulders.
Oh, yeah, so it'll be 59.20.
Yeah, 59.13. $59.20 is the bottom of that Kettner channel cloud. But the 21, the 63's been holding it up. And just that time of day, I mean, it should be a little bit bearish by now. We'll get some more water here. I might run up to the IRS and do some carpet cleaning. We got an inspection tomorrow. And she broke out. Well, missed that.
Kava, people going to the website, going online to place
Kava.
an order versus where the stock has been headed. You know, I did read up on some articles and some interviews, and the CEO was a little bit frazzled with tariffs whenever those were.
I like this here restaurant. Wish we had one around
You know,
here.
sometimes, you know, it's never good as an investor to feel like
I like it a lot.
the company is a little bit frazzled. And that could have impacted a bit of the pullback that we've seen and that sustained pullback. But for us, we see that as an opportunity, especially heading into this earnings event, because at least on the side of things with the consumer, you know, you talked about the protein offerings. The company just added steak, I believe it was last summer. So it does have these healthy for you options and is a nice alternative. You know,
I like
to
it a
China
lot,
Chipotle.
a lot.
And as you said, still very early in its growth phase, but expanding rapidly. And, you know, as consumers, as it builds its loyalty, we think that that will continue to, you know, drive those repeat customers. That hasn't really been a growth driver of late, but that'll be what we're listening for now to see if it can.
If I was to have a
kind of keep
restaurant,
those
it would
consumers
look something
coming
like
back for
this.
more. But from a sentiment perspective, this is a name that can.
Look at them salads.
That has also leads to upsells, which investors should like to.
When you look at this name, and you mentioned it earlier,
God darn
the
it.
Chipotle and a different type.
It beats Chipotle big time, my opinion. The food. And them salads are just look delicious. I mean, if I was to pick one, it would be a toss-up between all these three, but they all look good, all of them. Spicy lamb and avocado, falafel, crunch. Every one of them salads look great. If I was, well, she came up and double topped. That was bad in my idea. I should have jumped in that one. Mr. Pop 2.
NVIDIA is running. Holy crap. It's way above its AMAC.
Oh gosh, yeah. This market's very bullish. This was great news.
Look at that last candle on Oclo. What the?
OKLO.
Yes.
Damn, Funky got a little excited there. Little fat finger. Yep. That's probably Randy.
It is Randy doing all that damn fine.
Yep.
Interesting. Pull back off, I'll tell you. Get back in that call. So we're at the 200 on the 5. Might be a place for one. Oh, this one's no man, there's 63.
Baba had some drama today.
Not bad, UNH is down 14%.
Yep.
Yeah. I think somebody in Discord was asking yesterday if it was a buy.
Yep. I said, wait. It looked like a bargain, but I'd say wait. And then after that news came out,
Yeah, they would have lost it.
Yep. It went below my support. Cobb is very delicious, Mannequin says. You been there? I'd go in there a lot if I had one around me. I mean, just some good-looking salad. Making them kind of salads last year. Then I heard about Kava, and I said, "Them copycats." I was making some killer salads last year. I was showing them off in here.
RKLP is running. Good Lord. SMCI. That's what's popping hard.
We're about to hit a double top on the SPX right here. It's going to be do or die. Get ready. The market's definitely bullish. And I'd be going against the odds if I bought a put, but we just had a new high.
Tesla's, yeah, they're Rob from what I already see. Tesla's freaking money. Just gotta take a breath right now. The RSI is way too hot on it. I think
Yep.
it's gonna go down and retest the top of the orb. Just so I can take a breath.
Man, Tesla's up $10. Jimmy mentioned that this morning, that pullback.
I mean, all I'm waiting on is that pullback.
I'm gonna make me some tea. I haven't had any yet. Uh-oh. Magnificent's putting his little 2 cents in case it does drop. He'll say, I told you so.
Yeah, he's gonna give us an A+.
Yep, I can see it coming.
I'm gonna repeat what we just said. You give us an A+.
No, I didn't trade Tesla. I got into having an orgasm over SPX. He says, oh my God.
He's gonna hoard all the A+. Are you kidding me right now? Why do we talk to this man?
We got to give it to him.
Nothing for you.
Count to 3 and trade with me, but count to 4 to make much more.
Exactly. Okay. Just sit here and look at it. I think I'm going to have some green tea and this market's very bullish.
You think it's getting enough overbought again?
I'll be right back. I'm gonna go get my tea going. man.
Old man is right.
What's that?
That old man is right.
I am. I can feel it.
After that hike yesterday, I promise. I woke up in the middle of the night, calf screaming.
Oh yeah, I did that when I was a hog carrier.
I'm gonna go outside here in a few minutes and run. I haven't ran like a week.
I don't do that. I can barely walk.
Better shove that air horn up his arse.
Okay.
Could someone please get SPX off the roof? He's drunk.
I had a little double top right here. It's Trump speaking right now.
and now they're down to a number that is amazing. We're down 97, 98% from where they were. And everybody, they said, you won't have eggs for Easter. Well, we had everybody had eggs for Easter at a very reasonable price. At the White House, we had a little Easter egg roll, and we had hundreds of thousands of eggs purchased. They said, you have to go out and buy plastic eggs. That didn't work out. So we've done a real job in our energy cost.
Okay.
Oh, somebody wake me up when this thing does something.
Hotel Rio Palace, Tropical Bay, all inclusive. Excellent. I'm going to start waking you up. go get my tea. I'll be right back. Got to turn.
Whether you're a bull or a bear, you'll want to catch the latest market action on Morning Movers with me, Diane King Hall, live from the floor of the New York Stock Exchange, only on Schwab Network.
Broccoli. Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles, including growth, value, income, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest, either live or on demand. Go over to schwab.com/coaching and start learning today.
Well, she broke out again. Damn it. Moving things out.
Happy Thursday. Welcome to Next Gen Investing. Alex Coffey.
Well, they ain't moved. Oh, that's
Studio.
Mr.
KG, what do you make of the market action
Yeah, they have.
so far? A little bit of pressure this morning, but it didn't last long.
Yeah, we are seeing a nice little move to the upside here, getting above that 5,900 level. Hopefully we're able to sustain it. What's actually very interesting about today, when you're looking at the internals, it's really more defensive positioning as well as interest rate sensitive sectors that are actually leading the market here today. You can kind of see it by some of the performance from sectors like staples right now, sitting up around 1.6%, utilities, real estate, industrials. We'll talk about Deere here in a second. So we've seen some pretty good outperformance from, once again, some of those underdeveloped sectors that we did not see performance from yesterday, really trying to take the baton and try to push us higher. Let's see if we're going to be able to hold this.
Yeah, we talked about the tug of war that we saw yesterday. It was really semiconductors and then a handful of the mega cap tech firms were really offsetting weakness everywhere else, seemingly. Today, you lost the mega caps. You have the semiconductors broadly but underperforming, but everything else bouncing back today. But both equations, both tug of wars ended with green days, or at least if we were to close right now, we'd be in green. So still 3 hours to go, but right now, just anything the market recipe cooks up has ended green.
Yeah, and you actually, I mean, I prefer these days. If you're looking at 70% of the stocks and the S&P 500 actually advancing here today, even though you don't have the mega cap tech here, it just shows that we have broader participation. I think also the news that you're hearing from the overseas trip with President Trump and the UAE and Qatar, continue to see deals being made, or as far as funding commitments being made. Mm-hmm. Pretty much daily, and that's going to provide obviously a little bit of a lift for the S&P 500. I still think that 5,900 is still going to be an issue for us to be able to resolve here, but if we have the type of mix here when it comes to the sector basis continue, I think it gives you a little bit more of a firmer foundation in order for us to continue this. Right?
Yeah, a couple headlines just to cover that came out in like the last 15 minutes or so. You're referring to Donald Trump, the president, speaking at the UAE presidential palace in the Middle East. Repeating a $1.4 trillion figure on a UAE investment. So that seems to be the number that's being floated around, and so that's just more and more foreign investment. And looking over, I'm surprised we don't see a little bit of dollar strength, but it has firmed up a little bit from where it was. And then also, it does look like there's reports that those talks between Russia and Ukraine that have sort of been floated out there that might happen in Turkey with U.S. and Turkish delegations as well, floated to start perhaps as early as tomorrow. So perhaps good news on the geopolitical front on that particular conflict as well, if things can happen. But we've got plenty to get through on the stock-specific front. Let's hit some of the movers, some big movers too on this list. We got 2 up, 2 down. Let's start with the not so good in the case of one of the names that is lower. That's Walmart. I would call this middle of the range though for the reaction, KG. It was initially higher. Then it was unchanged, and then it was pretty sizably lower. And it's
Broccoli
sort
was
of
lower cooked,
working its way
but
back
still
towards
ate
the
it.
unchanged line. What were your big takeaways from Walmart's earnings?
Well, I think it was a mixed report when you're looking at the current quarter that was provided. We had the adjusted earnings per share actually exceeding the street's expectations. Revenue maybe came up a little bit light depending on the analyst expectations that you were really focusing on. But there were some bright spots. The e-commerce business, if you're looking at the total business globally, actually did turn a profit for the quarter. That's the first time that that's happened. It's showing the results of Walmart Plus and that product offering, really trying to eat into some of that market share from Amazon here. But the
Flagging out here, squeezing right now.
Q2 adjusted earnings per share guidance as well as operating income. That's a little bit unique, but obviously that's because of the tariff impact. Their CEO also discussed the fact that they're going to have to raise price, most likely have to raise prices by the end of May here because of the tariffs that are going to be implemented, regardless of
They're not going to
reduction in those tariffs.
I'd like to see it come down and test the top of the orb, but I think it's too strong.
I had to shut him off. He started in on tariffs in Walmart. The SPX is 5,900 or 2320, and I am not in them. I just look at it and I go, dadgummit, $15,000 a day. Traded it 3 different times. The 5920s are up 100% when I mentioned them last.
I've literally sat here the last 30 minutes and watched the 5930s go from $1.70 to $4.30.
Yep.
I don't get why it won't pull back. Jesus.
Coin even bounced back up right almost within 20 some cents of hitting my support. Coin, it's up $13 from that bottom when I mentioned it this morning. Oh, my tea. We're at the 21 on the. I'm just afraid to get these puts. The 5,900 puts at $3.30. Uh-oh.
They call them dumps, big massive dumps.
You think that's what we're going to get? Because the 5,900 puts at 330. It would be short-lived, $5. It's bounced off the 63 twice. And the 21.
Get down here to this 63, you hussy. I command it.
Very, 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 very slow volume. I don't like doing nothing. Does it want more? We're double topping again. Mr. went to 525, those 410s. This is where I want to get. We'll be right back. Take a little bit more break. Better make new high. Doom did it. Okay, there's my 63. I think we're going to do it this time. I'm back. The 5900's at 290. They were there. Puts.
Interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
I'm Nicole Petalides, live from the New York Stock Exchange. Catch me on Schwab Network, available anytime, anywhere, any device, for free. Schwab Network.
Welcome back to Extra Investing. Time for an update on Apple. Joining us now, Diane King Hall, the host of Morning Movers. Diane, the latest in, I guess this is sort of still today on tariffs, looking to bring back manufacturing, not only in general, but of a particular product, that product being one of the most important on the planet, the iPhone. I guess Donald Trump and Apple CEO Tim Cook had a little bit of a dialogue recently. What's the news here?
It sounds like that is the case. President Trump sounding off on Apple's crown jewel, the iPhone, and wanting more of that produced away from India, for instance. So he applied the heat on Tim Cook, saying that he said to him, "You're building in India." He's building all over India. Quote, "I don't want you building in India." As we know, Apple has been increasing production over there.
You don't want him building in India.
Honestly, since during COVID, when we had all those supply chain issues, so they had to increase their footprint over there. So about 20% of its smartphones are made over there, and they've been increasingly working on that shift between what occurred during COVID and the difficulties between Washington and Beijing, and an increasing polarization there. So it's been working on doing that and creating more of a footprint over there. At the same time, look, Apple has made a pledge and has made this promise to hire more workers here in the U.S., and it's pledged to spend $500 billion domestically over the next several years. And here's the other issue, and analysts point to that with regard to production here. It would be more expensive to produce an iPhone here. The workforce would be more expensive, and it would take time to build up the factory level to put out the output that we see from, say, China or even India, even for a company that has deep coffers like Apple. Now, the pressure, and and maybe that's also why, in terms of, although we're seeing a little bit of pressure on Apple, it's not really meaningful compared to what the rhetoric is from President Trump.
The market.
With its magnificent seven.
Get it wrong again.
As a peer group, that bucket down small as a bunch. It's somewhat mixed, though. You have a couple that are higher, but Apple's little change. I would basically call this unchanged, down about 0.2%. But Diane, with the latest, appreciate it as always. Apple shares again, little changed on this headline. We want to welcome in our next guest. That's Derek Yen, a senior investment strategist for Crane Shares, to help us look back at what we heard from Chinese e-commerce and cloud services powerhouse Alibaba.
Well, while I was walking away, Coin had a dump.
What did you make of their numbers?
Thank you for having me. I think the number reported Alibaba as one of the top holding our Crane Shares China.
That's unusual.
There's 18% growth on this Ali Cloud.
That's like in 2 minutes, 3 minutes. That's a huge dump.
However, I think investors has much higher.
That'd kind of suck if you were in that trade.
So investor has a near-term overestimated the growth of Alibaba's AI cloud, yet we think they underestimated the 2 to 3 years growth potential for this cloud of Alibaba. So in the near term, we know like Alibaba's like QN's large language model and DeepSeek, they're open source. So that makes a lot of actually startups and second-tier model companies paused on their training for the foundational models. So they started building the AI applications, especially the agentic AI applications. So that transition is making the near-term demand for the ad cloud decline, while inference gonna accelerate in the next 2 to 3 years.
So what happens with Google on the
for the market and investors?
One
7th?
question that I actually have here, is there any issue when it comes to trying to build out the infrastructure for, let's say, an Alibaba or others that are trying to build out these data centers, these large language models? Is there any type of disruption, or are we seeing pretty much the same quality of product from those players like we are seeing here in the United States?
Yeah, I think it's the same trajectory like what happened in the United States. You do have very high demand from both consumer and enterprise side on the AI cloud, but it's a little bit different because in China, the current version of this large language model is really cost efficient. So they don't actually need
Bob is going to have earnings.
NVIDIA chips. They can just rely on the few NVIDIA H20 to really perform the similar performance. If you look at the benchmark for Alibaba's QN in all the AI large language model benchmark, it's actually pretty high, but if you look at the cost and the infrastructure needed to power that computation is actually much smaller compared to the US. So that makes Alibaba's actually doable to really power the growth of China applications around AI across the internet companies.
Derek, when you look at, if we take a step back then and we look at this entire kind of space as a whole, where we talk maybe it's Chinese tech firms or just Chinese stocks as a whole, obviously ongoing negotiations between the U.S. and China has weighed on sort of sentiment of all risk assets back and forth. Are we worried about anything like a yuan devaluation or something that could really provide a shock to an investment in something like Alibaba?
I think we had that after the Liberation Day. All the tariff risk is really creating a disruption from the fundamentals. Those companies, especially the China internet names, we see is really deep value, right? Look at their forward earnings, it's like almost 30 to 50% lower compared to their US peers. And we do see this AI is really boosting the earning growth going forward over the next 2 to 3 years. So all of those fundamentals, I think, is overlooked by investors because of disruption of the trade. But I think from the sound,
I think it's coming.
We do have a de-escalation on the tariff side. That's removed a lot of the worry and a lot of terrorists.
I'm going to put a tight stop on this just in case.
That's really making, I think,
5,900 puts.
Like a now reconsideration for a lot of investors to reallocate the capital outside the U.S. now to more Europe.
At 255.
China is a great candidate for those looking at
245.
companies.
Yeah, definitely getting a little bit cheaper here today with many of these names under pressure. Derek, again, we appreciate your insight and thanks for taking the time and joining us this afternoon with your thoughts, senior investment strategist for Crane Shares. Coming up next, we're going to look at kind of one of the surprises, I would say, of the morning and afternoon, which is that Dick's Sporting Goods is actually acquiring Foot Locker. This is a deal that
big deal.
Very, very quickly. George Tellis will break down and give us his thoughts right after this.
Trading at Schwab is now powered by America.
I could be wrong on this, but this is my guess. This is just a hunch.
With tailored education. Get an expanding library.
So take it at your own risk.
Podcasts, articles, courses, and more. All crafted just
So cyber-attack, I was wondering what the heck happened there.
Stacked with content curated to fit your unique goals. You can spend less and more time driven. Trade brilliantly with Schwab.
Whether you're a bull or a bear, you'll want to catch the latest market action on Morning Movers with me, Diane
I'm in
King, live from the floor
a
of the
couple
New York
puts
Stock
here on
Exchange
SPX.
Schwab Network.
What's up, Coral Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
In the biz.
Uh-oh.
Yeah, Schwab lets you invest in.
We got a triple bottom off the 63. Come on. I'm not sure if I'm right on these. Dang it. I might stop out here if this breaks 50. All of a sudden the buys start coming in. I'm just not sure about it. I was kind of feeling good about it for a second. May 15, not 14. Did I put 14 in there? Everybody knows better than that. That was yesterday. We're at 290. $3.40, yay. $3.45, yay! $100 a contract, $100 a contract. Come on, drop more. Such a pretty world today. Look at Jimbo. Watch him go. Don't stop, please. Such a pretty world today. You can do it. Don't stop. Everybody doesn't want you to stop. Come on, baby. You can do it. yes, 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 yes. Slow going down just as much as it was going up. Carl's way is the best way. Caroline, I haven't even paid any attention to my women today. You almost exposed that freckle on your chest. Told you about that. So I won't tolerate it. She's come real close. She's hiding it. Just about right there, that freckle. $3.90. $4. Woo! Yay! Thank you very much. Can we drop $3 more? That's the question. Everybody's curious. Someone knocking at the door. Someone ringing a bell. Open the door and let Jimmy in. Let's not stop here. If you had any decency upon yourself, you would stop. Don't go up. Everything was looking so grand.
You're pushing your luck, little man.
Yeah, I think so too. I got the perfect song for this right now. Can anybody tell me what soundtrack that goes to? This is not good about Russia deploying troops. Nobody knows that soundtrack, do they? We're there. Damn Russia. Gonna piss us off. We're at 380, 390. Come on, somebody give me the... What soundtrack did that go off? What movie? Okay. That was... You ready? I'll give you a clue. It's got 3 words in it. Good, bad, and ugly. No politics in this channel. No fighting.
They call them dumps, big massive dumps.
The Good, Bad, and Ugly. You got that right. That was a great movie, wasn't it? We have a winner. Sheba. Wow, wow, wow. Caroline, if you wore nothing, you'd still be sexy. No, Funk's not on here right now. Where are you, Funk? Funk reminds me of Ben-Hur. Come on, baby, drop. I'm not out of these yet. There's a major support level right here, right now. It's either I sell them and take $110 worth of profits, or I wait for the massive dump. 200 EMA and 200 SMA. This is a major support. So if I was pulling a Rob right now, I'd be looking at calls to cover my ass. And Caroline's just a centimeter of showing off her freckle. I told her the other night, I said, I want you to cover that up. So the calls, right now, I'd be looking at the 5920s. It is a major support. You got both the 200 SMA and EMA holding up here. But I sold just a couple puts. I still got 3 more left. So I want these things to break down. If this doesn't hold, this is a huge drop. Big, fast drop. Because these are solid. It's like a wall. This is the hardest wall you could break right now. You got this trend line, a 1, 2, 3. And we're below it. And we're just squeezing between the 200 EMA and SMA. I love you. Will you quit your job and run off with me? Not you. Caroline. Not you. Don't you comb your hair before you come on the show? How dare you? What we have here is a failure to communicate. This is a fallen wedge, so that's bullish. And I'm looking at the calls, the 5920s. If we break out of this, I sell the rest of my contracts and I buy the call. Do you understand? And these are going to be the 5920s. Wah, wah, wah. There we go. Yes! We are now at the 200 SMA. The crowd is just going wild here at the sports arena. Let's see. And for the ones that are new to the room, I'll show you my moving averages. It took me years of scientific study to come up with these. 450, baby. 470. For thy, don't mess around. I am Washboardjim. Might be looking at more drama. Might be looking at more drama. Funky? Funky eats raw meat when he wants to. What we want to see now is more drama. Can we get it? Who's in calls? Going against me. You're going in. What's killing you? Look at this. This is beautiful. 475 now.
This looks like the right shoulder, head shoulder.
Oh, I didn't even. Oh, on the yes. It's a little bit higher. On the SPX. 470, baby.
These things are 185.
$6. Yeah. Is there a way you can turn the volume down on that just a little bit when you do that? Magnificent. Is there a volume control? God, these things are nice. I mean, I'm up $3 a contract. I might have to sing a song here soon.
Resistance zone will also be a 63. I just saw that. Should be somewhere around here, probably under 220s.
This is it. I mean, 655. I'm selling them. God, that was beautiful. That was just beautiful. Life goes on, and then I married Caroline. We had 12 kids. Man, the reversal's beautiful. Oh, look at that. She's almost exposed the freckle. She's with it. I mean, she's showing half of it. That's bullshit. I told her not to do that. I saw it exposed. She'll probably cover it up now. Watch when she comes back on. Look at that, right to the penny, 59.0166. I called it. I mean, that kind of, after being in that bad trade yesterday, just perfect day today at Coco K. I needed that little nap. I should have turned on the TV. I forgot about it. I just went back there and laid down. La la la.
I'm at 50-20s. Maybe from 150 to 250.
Very good. Very good. What was that reversal? Mine was on that support level. What was yours on?
Yeah, support zone at 59, 21.
Okay. Mine was at the yin yang. I call this a yin yang. What was resistance now becomes support. So it came down and retested that spot right there. That's something guys got to remember. And it came back and it stopped right there. And that's how confident I was on that pullback. Well, you know, it never can't always be 100% right, but I was confident that we could pull back there and hold it. And that's called retesting. A lot of stuff I say I just make up. Oh, that too? Oh, yeah. I wonder why I did that. Always clean? May I help you?
Hello?
Yeah, what's up?
Good afternoon. My name is Sabrina. The new Trump administration has changed the Medicare policies for your state of Missouri. We have to check the benefits available for you. I believe you already have Medicare Part A and B, correct?
No. What is CitriLink?
Sorry, but you do not seem to qualify for the plans that we have. Have a great day.
Well, that sucks. Damn, look at them things go. They're now at 340. I'm gonna have me a nice day today. Did I ever tell you that? We broke a major resistance, the 50 SMA. So the next one's going to be this low right here. And I'm going to put a price line right there before it's too late. $59, $15.74 has to break. 59. You all right? Did you get mad because you sold it?
No, I never get mad when I take profit. I made a $100 contract. The hell.
That's very good.
I'll be mad. I had a reason to come out of the trade. We were bumping up against the 200. And it looked like the 63 was going to death cross the 200 on the freaking 1 minute.
Yep. And that 63 was also where I had that previous support at on that pink line. Now we got to see if we can break this 59 15.74 or we pull back here. $5, baby. You couldn't hear me because you had that thing up so loud. No, I want everybody to close your eyes if you see this freckle on her tit, on her chest. Now she's hit it, see? I mean, she's within inches of pulling that freckle out. Not inches, but I mean centimeters. She should have never showed me that freckle that day. Okay, you ready for this? That was a nice trick question, wasn't it, matey? Okay. Never found a four-leaf clover, make this love to me. Rabbit shoot, no lucky start, magic wishing tree, but I got lucky when I traded you. Ooh. no horseshoe on my door. I got moves for hold me tight. Who could ask for more? Well, I got lucky. I got lucky when I traded you. Running around, all my fingers crossed. Aggravating what I found. Just might get lost. But you tell me that you love me. Rips and make my day. And I'll look good luck. It's really here to stay. I got lucky. I got lucky when I traded you. Love I found just might get lost. Just tell me that you love me. Rips and make my day. Know that my good luck is really here to stay. She showed her freckle. She showed her freckle. I found you. When I found you, yeah. Thank you very much. You just love it when I do that, don't you? Come on, dude. Michelle. How dare you? Michelle's being funny, everybody. You're my biggest fan. I know you are. Looks like we're moving up. Dow Jones up 237 points. We're watching it.
And if we look at earnings, earnings are holding up better.
This girl would probably be a good
overseas
girl
than
to
in the
trade
US.
with.
We're about 2/3 the way through earnings season in Europe, and 60% of companies are beating estimates, 6% better than normal. And again, those stimulus in Germany and in China is really helping to support their economic growth.
Okay, so in terms
Stimulus.
should we expect that international markets then will continue to outperform U.S.? And you mentioned Germany and China in terms of economic growth or potential economic growth stories, but where could we see particular strengths in terms of stocks?
Yeah, we believe that international is likely to continue to outperform, maybe less dramatic pace than we had in the first quarter of the year, first 5 months. But we're still seeing a really good change in terms of boosting economic growth. There's more potential for upside to growth, and central banks overseas are still cutting rates. We expect that to continue as well. So we in particular like Germany is what I would say.
Okay, all right. Michelle Gibley, Director of International Research at Charles Schwab. Thanks so much.
Oh, she works for Charles Schwab.
Mm-hmm.
Still ahead, we'll bring in our panel to discuss the April retail sales print, which came in slightly above expectations and what it could indicate about the state of the
I
consumer.
wish I was younger. I'd be going to work for him. Okay, we're back at support. And the time is now 1:48, so we got 12 minutes to power hour. Now, this is where you don't want to really... This is where I catch myself making big mistakes, is when I jump in before power hour. Because we could start the correction that we'd been looking for. Now, we had a falling wedge breakout with a inverse head and shoulders. And we're at that shoulder line right now. Exactly right on that shoulder line. See us here? That's a major support. So if this doesn't hold, we could drop down and do a double bottom. Do you understand? Say yes. We're going to call it a triple bottom after the breakout. So I'm going to set my alert a little bit before we get right here on the bottom of this candle right here. Where's that? There. I don't think I want to buy put right now. I'm going to wait. I understand, Jim. You're a goat. Carl's way is the best way. Carl's way is the best way.
for Target. Jeff, want to bring you into the conversation to discuss also.
Bring me into it, baby.
That April retail sales. The expectation was that there was going to be all this pull forward in March. Seems like April, not stellar, but not bad.
Not half bad. Not half bad. Things were all right. It was there was a pull forward in March, but that's kind of a street consensus thing. It was a known quantity, and to some extent there was a pull forward in January and February, probably on the purchasing manager's side as well. And you know, I was putting together charts. That's what I do for a living, is put together a lot of these macro charts. And looking at it in core retail sales on a year-over-year basis, you're plus 4.2. The other day we had CPI in the low 2s, and so
look how clean his place is.
there. This is an economy that's not gangbusters, but not in recession or even threatening recession. If you go over to Polymarket and look at the recession odds, it's 38%. Yikes! I don't think it's that high. I think it's more like a 15 or 20. I mean, the good news is that they were anticipating maybe like a 60% of recession maybe 5-6 weeks ago, but still 38 seems really high. Nothing about this data flow is really surprising me to the up or downside. It's kind of just one of these ho-hum situations.
So Jeff, sticking with that, I mean, I will say to your point, 38% seems low compared to what we heard essentially a month ago from some of these economists. We know that the expectations can change on a dime here, or with the announcement of certain trade delays or temporary reprieves here. But if the economy is steady, how should we be thinking about the consumer then, especially as we start to hear from some of these other retailers, in the next couple weeks?
Well, we'll have to see. I mean, we still have this lag-through effect of essentially all these people locked in their homes, and you have that frozen nature of housing activity. We had this Fed senior loan officer survey came in 4 or 5 days ago, and it was punk. And you don't want to see tightening lending standards here, especially when the concept that's making the rounds is people being late on their credit cards and so forth. But I mean, essentially you've got a situation where the stock market is back up, and maybe there's a wealth effect from that. Maybe it's too much too fast to get the S&P from 4,900 up to 5,900, but there has been this notable sentiment change. And the other thing I would point out with respect to the consumer and their willingness to go out on Saturday night and catch a movie, buy a hamburger, whatever you may do that is a discretionary type situation, is there is
buy a hamburger or something. What the heck are you talking about?
Consumer confidence survey, which is coming out tomorrow, that basically it doesn't even matter how far
you that far out of touch
it doesn't get too much lower from a contrarian perspective. We've found that historically, when you're in the 50s and 60s on that, which is where we will be probably with 99% certainty in tomorrow's survey, you end up seeing the stock market goes up almost every single time in the year after, because you're taking sentiment from such an extreme into maybe a middling ground.
Oh, God.
Okay. All right, yeah, the soft data.
This guy's so full of shit.
Sharon, so that's really the expectation. But as we start to think about other names set to report next week and the weeks after next week, we have Home Depot, Lowe's, TJX, Urban Outfitters, Ross Stores. There's a whole slew of names on tap. I think what worries me is that Walmart did say that they might start to raise prices as soon as this month. So if Walmart starts to raise prices, I can only imagine what some of these other
You're not going to
retailers are
say
doing.
that.
So who's best positioned to kind of weather this tariff storm, but also to
Caroline.
Potentially pass those prices on to their customers?
So Walmart is definitely the best positioned, and this is mainly because of its exposure. It's shielded from a lot of the international imports and tariffs. Still, having said that, when we look at our outside data, it is less bullish than what we just discussed. For the current
It's more bullish.
reporting first quarter earnings, and that is an expectation.
Earnings have been great.
7.5%. However, looking forward to the next quarter, we're expected to see a drop of 0.9%.
Oh, God.
And this will be the first negative showing since the pandemic.
They're wrong.
So analysts polled by Elsa.
These people are so wrong.
Still, when the consumer does decide to spend and splurge a little bit, yes, they're going to the restaurants and they're going to the movies, but in general, when it comes to discretionary, we might see a big drop in the second quarter.
We only have 10 seconds left. Do you think we'll hear that?
Bring her back on.
Will there even be guidance?
In 3 months. Bring her back on. I dare you.
Are already talking about tariffs and have been giving us a significant amount of negative guidance.
Okay. Sharon? Educator. Thank you both so much for your insights, and thank you for joining.
We got all these deals and all these jobs coming, and all they can do is be bearish. I don't understand it, and I don't get it. They want it to be so true. Right here, $70 right there on that candle. 80 bucks. If I got it, I didn't get it because I'm thinking we were going to go down. But that is a wedge.
Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 6 years in a row. With Investor
So I missed that
Checking,
one.
you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide. No overdraft.
So you don't see, you just see a bull flag. Well, you see kind of a wedge.
Also, because your investor checking account
Not
is
really,
linked to
more like a
Schwab
bull
Brokerage
flag.
account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and
Yeah,
start
it's a
investing
wedge.
in stocks, bonds, money market funds, and more. Get more with
Breakout
Schwab Bank Investor Checking,
off that
the
candle.
checking account built for investors.
Now that I see it.
It's time to look forward
Find the next trend.
from every click to every tip.
It is now power hour.
Available anytime, anywhere, on any device for free. Empower your portfolio with the Schwab Network. Peace Alex Coffee. I'm Jenny Horn. Join us for Next Gen Investing.
1 p.m. Eastern.
See, it's a wedge. That's on the 2 minute. Tighter wedge on the 3 minute. That's a bearish flag on the 5 minute. Well, it could be an inverted hammer. Maybe.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim.
Oh. Nikki, you're back on again. Nikki's got some insider information. She said that kind of bluntly. No, I don't. Who, me? I think I was just hearing her on a conference call with Jamie Dimon. Buy this, buy that. Buy Tesla. Well, shoot. There goes the reversal to the upside. Jimmy missed it. That's $100 a contract. That's all right. Jimmy doesn't always get what he wants. But it's not over till the fat lady sings.
Equity market movers today, and that's Kevin Hinks, who's joining me live from the CBOE, the host of Fast Market.
Hey,
Kevin,
there's Mr. Hickey.
On a couple of these names that are the big winners and losers, I guess we could say, of the S&P. Winner-wise, Cisco on your mind post-earnings. What's going on?
Cisco.
Cisco, the news on Cisco, Alex. Hello, Mr. Coffee. Good to see you as always. Cisco up on strong quarterly earnings, beat on earnings per share, beat on revenue, raise guidance. That's always such a significant part. So guidance going forward, I've got Cisco up right on the nose, up 5% on the day. So, this is, here's the quote by the CEO. Cisco once again had strong quarterly results with clear demand for our technologies. So good, strong quarter out of them. Beat on earnings per share, beat on revenue, raise guidance. That's the trifecta of an earnings report, as you know, Alex. So pretty solid day here for, an old guard in the world of semiconductors.
Cisco friend was a friend of mine.
A nice, 20-25% rally off the lows made back in early April. So a nice bounce back for Cisco as it trades near its highs here. Kevin, though, we got to talk briefly because I know you got macro thoughts as well, but I want to get your thoughts on United Healthcare. We talk a lot about, names and catching the falling knife and, hey, at some point stocks are cheap. Well, I feel like we could have said that about United Healthcare like a month ago, and it's still in free fall.
Exactly right, Alex. I mean, this stock down, I've got the numbers here. 1 month down 53%, 3 months down 49. I mean, the numbers are gargantuan. How much is stock? I've got the recent high at $630, Alex. It's now trading below $270. That is nothing short of incredible.
I mean, it was 600, Kevin, in
Unbelievable.
April. 600 in April.
Yes. Yeah, that is an ugly chart, Alex, because it did it quickly. And why? Well, let's see. You lose your CEO. Now today, criminal investigation for possible Medicare fraud. That is, if convicted of that, Alex, that is very close to a death penalty in terms of dealing with Medicare and being eligible to do it. So that is, remember now, they're accused. Criminal investigation doesn't mean anything will come of it. We don't know anything other than if there's a problem there, what you see in stocks, what we've learned over the last 2 months, Alex, stocks will build in the worst case scenario and then work their way from there. Right now, this stock looks like it's building in a worst case scenario, Alex.
Yeah, and Kevin, we're not talking about some up-and-coming biopharmaceutical company with a breakthrough drug. We're not talking about, a company going to the moon or something like, a space company and no revenue. We're talking about one of the biggest healthcare insurance providers on the planet, if not the biggest. And it's just wiped out 5 years worth of activity. It's back to April 2020 levels in what seems like 2 or 3 sessions worth of headlines. It's just absolutely astronomical. But I want to get your thoughts on today's data. Are we almost to the point now, Kevin, when we look at some of this inflation data, where we're almost worrisomely deflationary?
God, what a day.
Big negative number.
I look today's data,
Always clean janitorial. May I help you? This is Wishy-Washy Washboard Jim with a sneaky snake trading strategy.
Jerome Powell came out with a statement. morning talking about higher for longer. How long is he going to be able to do that? That may have been a prepared statement before this number came out, because he's got inflation coming down at now, in my opinion, an accelerating rate, Alex. And eventually he's going to have to address this, because every time inflation comes down, that Fed funds rate that sits at 4.25 to 4.5 gets more restrictive on the overall economy. And if you're, President Trump, the Trump administration was talking about Jerome Powell being late, and that wasn't accurate at the time. But it might be eventually if he doesn't acknowledge what's going on in inflation and lower interest rates like a maintenance cut. Those numbers were going in the other direction. Goldman Sachs had a note saying they see their...
Okay, we're getting there.
They should be moving forward, not backward, Alex.
Yeah, and Kevin, there's a reason who knows what the reason exactly is, but there's a reason the inflation target is 2% with a positive figure in front of that and not, hey, we want zero inflation or deflation. Because, well, the experiments with that haven't gone well. I mean, look at Japan for 30 years. You don't want to be in a deflationary cycle. Look at China over the last maybe 10 years. You don't want to be in that
We've got one more big fat candle coming. We're at the 200 right now.
Not overshooting the mark here.
Shut up. So the 5900s are at $2, the puts. Let's do it. Let's get her on down. $2. May a circle be unbroken, Lord, by and by. La 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 la. Funky? Listen to the white boy speak. Where did Funky go? He left. You think you ran him off? There's 265, folks. Take profit. I think we're going to go down more. I'm staying on. Oh, I should have sold. That one little candle just like, darn. They were just at 250 a second ago. I don't know if I could have got out. I could have, maybe. If I undersold it, I could have. When they were at 260. Now, it's time to be professional. Boom, 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 boom. Drop. What we have here is a failure to communicate. Three black. Oh, well, that don't look good on the 1 minute. And we're at the 63 on the 3 minute. We got more room to fall on the 2 minute, although we are at a solid support. We got that spinning top, that don't look good. And then on the 5 minute, we got a tweezer bottom. So right now we're at a solid support by all four time frames. If it happens, it's going to be a fast, one fat candle. The 9 crossed the 21 on the 1 minute downwards, so that's one bearish sign. And it did it on the 2 minute. And it did it on the 3. So I still have a chance. It's called the crossover. I don't know if people are new to that strategy, but when the 9 EMA crosses down over the 21, there it goes. Buy another put here. 175, 180. What's going on with that? Wow, I've lost my, what's up with that? Huh. That's strange. Don't understand. What's the ready, set, go? Hmm. Well, it's the strangest thing I've ever seen. Oh, shit. I don't know how that happened. Huh. Tell me how the heck that happened. I don't know exactly how that happened, but that is funky. I've never seen anything like it. I screwed up everything. I wasn't even watching my trade. Could have added on a bunch there. I don't know how that happened, but that was funky. I'm back at 205 now. I got the puts is what I'm freaking out on. Right now I'm back up. But I don't know how I lost all them things there. It's, and I'll get the calls if I hit 5903. There's 250. This time I'm going to sell them. Boom. 295. Did not give them to me. Come on. This could be the reverse. There it is. Can I get one more fat candle, please? I'm going to get out of them right here. I don't know. This is... No, I ain't drinking syrup. I was just trying to... Might have been, because I'm sure that them things were gone. Now we're at 270, baby. Come on, Randy. 295. Out. Come on. 320. 360. I'm out. 350. I'm almost to my support, so I'm moving these over to the calls. The 5910s. Did you see that? $2 to $3.50 on the puts.
They call them dumps, big massive dumps.
Now. Damn. Look at that. Shoot. $6. We're at the 200 on the 2 minute. So the 5910s are at $2.20. I'm getting good as Rob on this. They're at 250 right now. So that's booger time, 285, 290. $295, baby. Mama, I'm excited. I'm almost out of breath. You ain't gone to town. You ain't seen nothing yet. Down below. We got Dominic coming up the road. There's 310, baby. 320. Almost out of breath. $4 is good enough for me. What about you? How about $3.90? We take $3.90? There it is. $4. $4.25. $4.85. Oh my darling, oh my darling, oh my darling Clementine. Darling, oh my darling Clementine. Now forever, oh my.
in the canyon, excavating for a mine. Dwelt a miner, 49er, and his daughter Clementine. Yes, I loved her.
Yes, I love her.
Though her shoes were number 9, carrying boxes without topses, sandals were for Clementine. Oh, my darling.
Oh, my darling. Oh, my darling Clementine.
You were lost and gone
Forever.
Dreadful sorrow, Clementine. Drove the horses to the water every morning just at 9. Did her foot against
They're now at 460, 470. We're at the 200. We're at the 200. We're at the 200 EMA.
But alas, I was no swimmer, so I lost my Clementine. Oh, my darling, oh, my darling, oh, my darling Clementine. You are lost and gone forever. You are lost and gone
Forever. Clementine. 470, baby. Will we break it? Will we break it? Will we break the 200 EMA? Hell, I want to do it right now. We're at $5. There it is. So I got the puts going down and I got the calls going up. Today has been a glorious day. Amen to that. Hallelujah. May I have an A+ today, Magnificent, please? The Singing Day Trader. At Washboardjim. The Singing Day Trader. And Clementine.
Exactly. I can invest and trade on my own.
Yes, and I let them manage some investments for me too.
Let's move on, shall we? No can do.
I'll get out here.
Where are you going?
Schwab.
Schwab, a modern approach to wealth management.
Trading at Schwab is now powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals. You can spend less time searching and more time learning. Trade brilliantly with Schwab.
Accelerate your market knowledge
and shift your perspective into full gear. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Hicks. Catch me on Fast Market.
I'm Kevin Hickey.
On the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
My name's Kevin Hickey.
Welcome back to Market on Close. I'm Alex Coffey. It's time for a look overseas. Joining us now is Guy Volley, founding partner of ABS Global Investments. Guy, good afternoon. Thanks for joining me. I want to start with China. Obviously, it's front and center with all that's going on in trade policy, but there's more to the story than just the U.S. and China and this bit of a scuffle. What is the general outlook on China's growth from your perspective?
Alex, yes, and I think this is probably one of the biggest misunderstandings that U.S. investors have about China, is that its trade with the U.S. became less and less relevant. China remains, it's okay, it's not like super healthy, but it's still growing at 4%, which is better than what we see U.S. projected to grow at 2%. So you cannot say it's a totally sick economy, so it's still relatively healthy. And more important, there is still a lot of room for the government to roll out some stimulus, which they haven't been done that because they've been waiting for some resolution on the trade side.
To be fair, though, they have rolled out a lot of stimulus the last few years, and it doesn't seem like it's totally taken hold. That said, perhaps it just takes some time. Do you see opportunities for potential investment in areas of China, or is the uncertainty too great?
No, I think the stimulus that rolled out so far is very minimal, right? I think they use a few bullets. They still have a lot of bazookas to be used. So I think there is much more to come. But the main thing that attracts us to China is valuations, right? Valuations, you still look at the overall market trading at below 12 times PE, right? Which is very attractive. So economy doesn't need to be perfect for you to be able to make money when valuations are that low.
And it looks like now we do have a dialogue taking place, a de-escalation from what was effectively an embargo. I mean, Scott Bessent essentially said that at the levels that they were, I mean, there wasn't going to be trade flowing with 140% tariffs. So we seem to have staved off the worst of that risk. But when you look at the U.S.-China situation, so many of our viewers are going to be in the U.S. and primarily invested in the U.S. and have, of course, a vested interest in this conversation. How do you assess the current status of the U.S. and China when it comes to trade?
Yes, in terms of trade, I think now we see probably the worst is behind us. I think it's in no one's best interest to have the two largest economies of the world in a de facto embargo, trade embargo. But at the same time, China is the antagonist, so it's the rising superpower, right, to face off with the U.S. But I think there is still space for cooperation between the two nations. I don't think that the U.S. winning or China winning is mutually exclusive. So we gotta look for opportunities where these two countries can thrive, and you just gotta find what is the best place to invest. And right now, in terms of valuations at least, China remains much cheaper than the U.S. with a very decent growth prospect in terms of like earnings growth.
Yeah, exactly. And it's certainly been one of the compelling reasons for investment there. It's just been, obviously, with the escalation, that uncertainty picking up, people getting uneasy. But if the worst of that, as you say, perhaps behind us, some of that uneasiness will fade perhaps as well. But let's go to a different part of the world. Let's look at the Middle East for a moment, because a lot of news made out of the Middle East this week with the president overseas announcing foreign investment in several capacities with many of the different nations over there. What did you make of this, and what kind of opportunities perhaps exist in that area of the world?
It's also a very exciting region, and for us as a firm, we're very different because we tend to invest more in the Middle East than we have money from the Middle East. So everybody knows that in the Middle East, they can sign all these big deals, the record deals that the president is announcing, like buying weapons or buying AI. But also there is a story of the expanded middle class. The transformation that's happening in Saudi Arabia is probably without parallel in the modern world, right? So you've been creating a consumer class that didn't exist a few years ago, right? Women is now able to drive. You can go to movies. So there's like a whole new spaces of areas that you couldn't invest before, and now is definitely thriving in the Middle East. So very excited about the region. We've been investing there for over a decade, and we continue to increase our investments in the region.
Any other areas of the world, emerging market-wise, that have your attention in this time where it does seem diversifying away from the U.S.,
Oh, let me go
looking
charge my
for
phone
other
up here real
opportunities as
fast.
far far more popular at the moment, or at least the people are.
I've had a real good day today.
Any other parts of the world you're looking at?
I think that
Days like today, I wish they were every day. 'Cause I ain't lost a trade, and I've been up more than $1 or $2 a contract on almost every one of them. Should have got back in them right there. They were back down to $2. $2.15, $2.20. Now they're at $4.95. Here's you got 3 black crows. And again, you're leading out with that hammer. Three black crows with a hammer with triple bottom there. And here you got a quad bottom with 3 white soldiers. I'd be out of that trade. It just takes like 2 or 3 candles, man. You could read a lot of times if you're going to get a reversal or not. You got a tweezer top. That's bearish, so you get out of the trade. You can get out before other people get out, and then you're you know, they're sitting there holding their hands, sitting on their hands, saying, "Damn, I just lost $1 on my contracts. God, $7." They went from $3.50, $4.50, I don't know, $3.50 to $7, just like that, in a second. Golly, I wasn't even in the trade. I'm done, you know, but wow. If I wasn't tying my shoes, I'd probably be, I don't know. It's too close to the end of the day for me to be doing this. They're $8, $8.70. I love this market. Funky's back. I missed you, honey. Oh man, what a deal. Six more minutes left, and I'm going to get out of here. So I did a lot of teaching today. I hope everybody picked up something new. Hit that like button down below. If any of you YouTubers want to help me with my vacation coming up, let me know. I feel like I deserve that at least for sitting here all year. That's right, matey.
Like you said, maybe running a little bit long in the tooth here.
No, I think it's going to continue to be a choppy kind of market, and even if the uptrend continues, and it probably does have some more legs, I'm not sure there's going to be a persistence in terms of sector leadership. It's one of the reasons why, as you probably know, a month or so ago, I think it was actually in the beginning of April, we neutralized all of our sector ratings. Where normally we would have outperform or underperform or market perform, the latter being neutral, to use generic terms, we neutralized everything. The only other time we've done that was back in the early
neutralized
pandemic, when it was just impossible to try to trade around these really short-term sector
What?
biases. I think that kind of market backdrop is likely to persist, at least in the near term.
No, you're full of crap.
And final question then, I think this echoes obviously the same sentiment the Fed has, which is a sidelines, wait and see, react as it happens, understanding that
We don't do that here.
Mover, but you're more likely to be on the right track. What are you guys waiting for? What do you want to see before you feel a little bit more confident to maybe lean one way or another when it comes to some of these sectors or some of these factors that you guys look at?
We probably need to see some stabilization in the forward-looking outlook. We're at, I think, 20 consecutive weeks now of downward revisions to 2025 numbers, and that's in spite of the fact that first quarter reporting season was incredibly strong, 14%, but that was not extrapolated into the rest of the year. So prices having come down during the correction, bear market in the case of the NASDAQ, did help to improve the valuation backdrop. The problem was that not just the P, the numerator was coming down, but the denominator was moving down too. And I think we'd need to see at least some stability, if not a clearer outlook, to get a sense of what the denominator in the equation is. I'm not sure we're going to get that in the near term, but that would certainly be something to keep an eye on, because then you start to see a more stable valuation backdrop.
Well, we'll look forward to the day that does happen. Liz Ann Saunders, it's always a pleasure, and thanks so much for taking the time, the Chief Investment Strategist for Charles Schwab. Coming up next, we're going to close the market for the day. Closing bell just a couple minutes away.
1 minute.
The closers panel will join us right after this.
Trading at Schwab is now powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals. You can spend less time searching and more time learning. Trade brilliantly with Schwab.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
Actually, I'm seeing something from Schwab.
Uh-oh.
Yeah.
Uh-oh.
Once you invest and trade on your own. And if you want, they can even manage it for you.
Not to mention, Schwab has a team of
Uh-oh.
specialists in taxes, insurance, and estate planning. All is well.
Okay. We're experiencing technical difficulties.
Technical difficulties.
Schwab, a modern approach to wealth management.
Believe me, when it comes to investing, you'll love Carl's way.
Carl's way is the best way. Okay, well, I'm going to head on out of here. I hope everybody had a great day today. It was really a very good day. I mean, patience, in and out. Most of the trades didn't have to swing very long at all. A lot of squeezes. A lot of squeezes. I mean, just perfect. You know, look at the SPX. Squeeze, squeeze, squeeze right off the old resistance line. 3 black crows, squeeze to the upside. Called the puts, called the calls. Each one of them was 100% gainers. There's my phone. Oh. Always clean. So I'm going to get out of here, do some final touches on this job I'm doing. Got the inspectors coming in tomorrow, and they're bitchy about the government employees. The government employees are not happy that they have to go back to work. They had it made. They didn't have to work. They worked very little. They could pill around and do things, and then went on for 5 years. Now they got to go back to work and sit at a desk 8 hours a day, and they just hate it. I mean, they really do. That's probably true with, once you get it, you have it so easy. Then you have to be a commoner. It just kind of, I don't know how I'd feel about it. I probably wouldn't like it either if I was spoiled and made 80 grand a year and got to work from home and didn't have to worry about my quotas. Could play around, go out to lunch for an hour and a half, come back. If I had an errand I had to do, I could go get it done, not have to wait till after I got off work. There's a lot of benefits, but they're mad. I got to keep them real happy. I mean, anything just triggers them. I couldn't have, if I had a business, there's no way I'd let my employees work from home. Maybe one day out of the week. But then, you know, I'd be always worried about if they're getting their job done, or they wouldn't be, you know, they wouldn't have that business. They wouldn't be, you know, in there. I just couldn't do it. And it probably works, I don't know, but I don't see how it could work. Seems like you'd be more productive if you were in a business environment, but so I'm out of here. I just couldn't handle it if I was a boss. And we'll catch you all later. Two thanks all.